Okay. Thank you, Afika. Bismillahirrahmanirrahim. Alhamdulillah Rabbil Alamin. Wa bihi nasta'in. Wassalatu wassalamu ala Rasulillah wa ala alihi wa sahbihi ajma'in. Assalamualaikum warahmatullahi wabarakatuh. Good morning, everyone. I wish you a very good stay here at Nusa Dua. It's a very nice place, beautiful sceneries and nice ambience. So hopefully it will be a conducive place for us to actually go through the 4-day course on Islamic finance and investment. And basically, there will be quite a number of speakers who's going to address the sessions. Some of the speakers would be doing it physical, like myself, but I think some of the sessions will also be done online. Okay, but I think for today, everything will be physical. Yeah. Okay, so basically, the session that I'm going to do this morning for my first session will be more like an introductory. I think many of you are very familiar faces already in Islamic finance and investment, but some of you may be quite new to the topic. So I will start from the very beginning and go through with you, and then as we advance, we will go into more advanced topics. Especially tomorrow, we look at the products, etc. And even on the third day, we have Professor Aznan who's going to go through more on the sukuk and investments, structured product and whatnot. So basically, the ABCs of Islamic finance and investment. So these are, I'm not sure where to point to here. Okay, sorry. Oh, okay. I need to get used to this. Okay, these are my talking points. There will be a brief introduction. Then we look at the fundamental principles, the do's and the don'ts, and also the essential contracts that are being used in Islamic finance. Okay, so basically, as an introduction, what is Islamic finance? This is just a definition. Basically, it's about defining what Islamic finance is. It's actually financial products and services that are compliant to Islamic principles and rules. So that's why the tag Islamic. I think in Indonesia they call it Sharia, Sharia finance or Sharia banking. So it's the same. And in terms of the product range, it's quite wide ranging. Now we have been here in some countries starting in the 70s, in Malaysia in the 80s, and until now, I mean, the product range has developed a lot. So a very wide range of product, basically covering almost all types of financial products and services. So the main feature is it is Sharia compliant. And when we talk about Sharia compliance, we are referring to Sharia, which is the Arabic term for the meaning actually literally means the path, the way or the path. So Sharia technically means the Islamic path, basically, as revealed to the Prophet Sallallahu Alaihi Wasallam. Okay, and when we say revealed to the Prophet, there are two primary sources. The first is the Quran itself. It's revealed both in words and also in message, contents, everything 100% comes from Allah subhanahu wa ta'ala. Whereas the actions and traditions of the Prophet is also a kind of revelation, but more in the sense of wahyun, divine inspiration, but it is reflected in the actions of the Prophet, reflected in the words, sayings of the Prophet, and his approvals of the acts done by other people, right? So when he teach us how to pray, the Quran says we have to do the prayers. The Prophet actually told the people, pray, sallu kama ra'aytumuni usalli, pray as you see me pray. So the way the Prophet prayed is also divinely inspired by Allah subhanahu wa ta'ala. So that's why when we say Sharia, primary source would be Quran and also the tradition or Sunnah, we call it Sunnah of the Prophet sallallahu alaihi wasallam. Okay, and it covers all aspects of human behavior. So Sharia covers, of course, firstly would be about faith, about Aqidah. So it tells us about the faith, about monotheism, about Tawheed. It also tells us about morality, akhlaq. So there's Aqidah, there's akhlaq, morality, good behavior. And the biggest portion, I think, of Sharia is about human behavior, human conduct, how to conduct our life on this earth in accordance with Allah's commandments. So it covers a very wide range. It covers, for example, human conduct, like we talk about Islamic finance, commercial transactions, we call it mu'amalat, maliyah, commercial or financial transactions. It also covers like marriage and divorce, munakahat. I think our lawyer here, Cik Mustama, said he specializes in family law matters. So it covers about munakahat, marriage and divorce. It also covers things like procedural evidence in the court, basically ahkam al-ijra'at, basically procedures to make sure that the processes in the court is followed carefully. There's ahkam about bayinat, about evidence and whatnot. And there are also rules in the Sharia relating to war and peace, treatment of prisoners of war, all those things is also covered. So a lot of things actually covered in the Sharia. All aspects of our life is covered there. Recently, people talk about ESG. I think there are some sessions specifically on ESG, environment, social governance. There are also guidance in the Sharia related to how to live the life in a sustainable manner. So it's actually a very complete set of rules that Allah has given to us as a mercy so that we can guide our life in the best manner. Okay. In terms of why Islamic finance has been introduced, the reason why we need to have Islamic finance, we already have conventional banking, conventional financial system. Why do we need to have Islamic finance? So if you look at the history, the main reason originally was religious in nature, because we want to provide alternative options to the Muslim to have a financial system that is in line with their faith, with their belief, with their religion. Okay, so it's religious in nature as an act of obedience to Allah, and also to make it Sharia compliant. So if you look at conventional finance, what first thing that comes to your mind is actually what is the main flaw or the main thing which is not compliant in conventional finance? Interest, right? The element of riba. Okay, so that's the big prohibition there. So that's why we're talking about banks, finance in general, because their backbone is about time value of money and interest charges, interest payment. So it's non-Sharia compliant. So that's why we need to make it Sharia compliant by removing the element of riba, and we have other alternatives that we'll look at later. Okay, so that is in terms of the religious and original reason why we have finance. We also have other commercial reasons, obviously, because we're talking about finance and commerce. Those who participating wanted to make profit, definitely. They want to make money out of the transactions. So there are commercial and financial goals, basically to make legitimate profit, cari rezeki yang halal. Okay, so basically legitimate and halal profit. At the same time, because there are investors involved, so you want to be able to give competitive return to your investors and also give consumer experience to your customers, and also, of course, good returns to the investors. And apart from these two immediate or short-term goals, religious Sharia compliance, commercial competitiveness and returns, there's also the long-term goal, which maybe a lot of people are talking about maqasid Sharia, objective of the Sharia itself, basically to attain the preservation and protection of wealth, sustainable use of wealth, basically. And if you look at Ashur, he talks about a number of criteria about protection, preservation of wealth. I think we will look at that later in more detail. So that is in general is equitable, just financial system, and that's well-being of human, well-being of other life and creatures to the universe as a whole, so that the earth can be dwelt on in a way that is like baldatun tayyibah, a nice place, wa rabbun ghafur, and Allah subhanahu wa ta'ala is giving us a lot of mercy and blessings in our life. Okay, so that's the ideal that we are looking at. Of course, if we reflect on the current modern world, we don't think that we have achieved that yet. A lot of inequity, a lot of imbalances, and we have issues in terms of ecology as well. There's a lot of imbalance. So that's why we have to realign back to actually try to make it in line and able to achieve the long-term goal. Okay. In terms of the underlying philosophy of Islamic finance, what makes it different from conventional? I think many of you may have heard this before. Firstly, when we talk about wealth, we are different from the capitalist philosophy. Capitalists basically say the owner of capital is the I'm not saying the God, but basically you own capital, then you can dictate. It's your money, you have ownership, so you can do whatever you want with your capital, or your money, or your resources. But in Islam, we understand that wealth is actually a trust, it's an amanah, because in the first place, human beings are actually Khalifah, wise children of Allah on earth. That's element of stewardship, element of fiduciary, element of amanah in how we acquire wealth and also how we use and spend the wealth. So not only on acquisition, but also on spending. So both must be done in a Sharia compliant manner. So the creation of wealth and acquisition of wealth must be Sharia compliant, and spending and utilization of wealth also must be Sharia compliant. Thus, this moral accountability and religious accountability, and to some extent also legal, Islamic legal accountability on the actions that we do. There's a hadith of the Prophet ﷺ on the Day of Judgment. Basically, we will be asked about four main things. And until we are made accountable for these four, we cannot move to the next step in the hisab, in the account. When in the Day of Judgment, we believe that we will be accounted, and we have to be accountable for what we do. So in four areas, one of that is about wealth. Min aina kasabaha wa fima anfaqa. Where we get the wealth and how we spend the wealth, we will be asked about that. Other things include our age, our time. So these are the other things. But wealth is one of the things that we need to be accountable for. Okay? And then the other thing is about promotion of honesty, transparency, justice, and fairness. So there's always an inherent ethical and moral element. So we cannot say that, this is purely commercial and we don't regard morality or ethics. It's always there. So that's why there are a lot of hadith of the Prophet ﷺ, and also in the Quran also, talking about these issues. For example, the Prophet ﷺ once went to the market, and he saw a person selling food item. So he saw that it's nice, dry and fresh on top. So he just dipped his finger, and he can feel that underneath there's actually wetness, and basically the food item is rotten underneath. On top it looks nice, so the seller is trying to cover up the defect in his good. So the Prophet ﷺ said, "Man washana falaysa minna." Those who cheat us is not one of us. So basically, we make it clear that, you shouldn't be doing this. If you are a real Muslim, real believer, you shouldn't be cheating. Okay? So that's one example where you must be honest and transparent. I mean, you shouldn't be covering up if there's some defect. You need to openly disclose to your buyer so that the buyer can decide and then agree. If it's not really fresh, maybe they want to buy it for other purposes with cheaper price, things like that, right? Okay. And then not only there's promotion of the good conduct, there's also prohibition of the bad conduct, prohibition of unfair and oppressive practices. And one of that will be the primary one will be riba. Okay. I will go into more detail why riba is considered as unjust and oppressive. But that's one of the things. The other thing is actually there's a lot of measures to safeguard contracting parties' interests in the contract. So we want to make sure that the parties get what they bargain in the contract. So that's why there are a lot of things that has been put in place. For example, if you buy and sell something, what will be the concern of the buyer? What will be the concern of the buyer if you're buying something? Quality. Yeah, the quality and also that you get the asset at the end of the day and the asset behaves like you expected, right? In terms of quality and whatnot. So the profit, but before that, actually people are not that concerned. They just buy and sell. Their mindset is just we want to maximize our profit, right? So there used to be these practices among the Arabs at the time of the Prophet that they want to go hunting. They already sold, the birds even prior to they go hunting, they already sold the birds without they actually catching the birds yet. And they want to go fishing, they already sold the fish. Okay. And if they want to sell something, they just tell the buyer, okay, you just throw a small pebble, whatever is touched by the pebble is considered sold to you at a certain price. Okay. So these are the practices that are very, very uncertain. You may not even get the things that you are buying, or you don't get really what you wanted or you expected to get. So the Prophet prohibits, said, La tabi' ma laysa indak, do not sell what you do not have, because if you don't have those goods yet, maybe you cannot deliver it at the end of the day, and then you don't sell the fish in the sea or the birds in the sky. Don't practice this throwing of stones. It's almost like gambling. Okay, so he prohibited a number of practices in order to make sure that the interests of the parties are adequately protected. I think at Ojota, you look at investors protection, customer protection at Bank Indonesia and Bank Negara as well. So that's very much things that is taken care of in the Sharia principles. Okay. So basically, based on those philosophy, then we can see that the main features of Islamic finance would be because we don't allow riba, so there's no riba in the transaction. If you have money, money cannot just by itself create money. So you have to put money into some kind of trade or work or real economic activities so that that money can create more money. So if you just put money in the box, will it grow on its own? No, right? But if you have a cow, you leave it and you feed it will grow. So cows or certain assets, they can have this inherent capability of growth. But money, because it's just a medium of exchange and a measure of value, from Islamic perspective, it cannot grow on its own. Just by the lender giving the money to borrower, nobody can guarantee that that money will grow. So it's unfair on the lender to charge the borrower extra amount. Okay? Because even if the lender keep the money on its own and not doing anything with the money, it will not grow. Just like a borrower borrowing the money, have all the time that he have, he doesn't put any work or do any trade with the money, he cannot grow the money. And even if you do that, not necessarily he will make a positive gain. He may lose the money even if you do trade or he work with the money, he may even lose the money. So money plus time can be resulting in positive or negative or just plateau if you don't do anything, right? So it's not fair to impose and increase always on the user of money. Okay, just because you have the time. So this actually is like negating the whole philosophy behind time value of money. Okay, so we recognize that time has value, but not necessarily in the positive sense of just money creating money. Yeah. Yeah. Mm. Yes. Yeah. Mm. Yeah. Yeah. That's a very good question. That's a very good question. So actually doing forward transactions, this was actually also observed by the Prophet Sallallahu when he in Mecca they used to have that kind of riba in the loan when you lend money and then you extend the time, you charge more. But when he goes to he went for hijrah, he migrated to Medina. So when he went to Medina, it's an agricultural society, not like Mecca, it's a trading society. So in Medina, they are very much into agriculture. So the Prophet saw the people doing forward sale of the dates the farm produce. So they call it salam contract or salah contract. So I'll write it down for you. So this is known as Ba'as Salam, or sometimes also known as Ba'as Salah. So this can be used, but this one is the more popular terminology now, Ba'as Salam. Okay. So the Prophet saw these people selling their dates 1 year in advance, 2 years in advance, and the buyer would pay the price. So when the Prophet saw this practice, so he see that, yeah, it's something that like quite uncertain, you don't have the goods yet. But the Prophet also see there's a need or some kind of haja, keperluan to actually have this kind of transaction to allow you to, because you're financing to some extent the producer of the asset. So the Prophet actually refined, actually I'll go into more detail later when we do a product development. So some of the practices he saw, this is good, but there can be some necessary refinement to safeguard the parties' interest. So he refined and told the companions that if you were to practice a salam or salaf, then you have to make sure that the quantity of the asset that you are ordering is known. Basically, wazan ma'lum, kailin ma'lum, and wazan ma'lum, you know actually how much you're actually ordering. And also ajal ma'lum, you have to know the actual time of delivery of the asset. So the maturity period, I mean, the delivery time must be known. So he actually refined the practice. Before it was just a forward with no real safeguards as to the amount, just very general. And it was not really understood whether it's based on the specific trees of the seller or it's based on market. You can just sell whatever produce that you have. If your own farm is not producing enough, you can just go to the market to get the amount that you need in order to deliver to your buyer. So based on this, what the Prophet said is actually not a purchase of unique assets. So the main feature of salam is actually purchase of homogeneous fungible assets, and it's actually very much supported by the market. Like you are buying dates, one of the conditions is that by custom, the date should be available in the market. The more strict use is from the time that you enter the contract until the time of delivery. But another view, which is more lenient, even if not at the time when you enter into the contract, but at least at the time of delivery, by custom, if the produce must be in abundant in the market at that time. So that mitigates the risk of non-delivery because the seller, he knows he has an order of, let's say, 100 tons of dates or 100 kilograms of dates. So even if his own produce is not capable of producing, he can go to the market because it's abundance in the market. So to get the amount in order to deliver to the buyer. So there are some mitigation and safeguards put in place before the Prophet approved Ba'as Salam. So it is a kind of approved transaction. If you remember my earlier explanation that the Prophet said, do not sell what you do not have. So according to majority of scholars, that is the general rule, but there are exceptions, like in salam contract, and later we will look at snap contract, manufacture contract. But according to the Hanbali school, actually, it's not even an exception. Basically, he construes the saying that don't sell what you don't have. It's more like he doesn't use the literal interpretation. Basically, the Hanbali says more of like the golden rule of interpretation. What is the purpose? The purposive rule of interpretation. What's the purpose? The Prophet prohibits selling something that you don't have. The purpose is basically to ensure that there can be delivery. So even if there's no goods yet, but if you can ensure delivery, based on the things that I've mentioned earlier, you know exactly what you want, the quality, the amount, the time of delivery, and you can check that actually there's a lot of those assets in the market. Now we have clearing houses. You do forward transaction. You have clearing houses. They have those goods and assets in the clearing house for you to actually deliver to the buyer. So this all mitigate the uncertainty of non-delivery. So it's one of the recognized contract by As-Salam if you follow all those rules. So for forward, modern forward, that's actually the classical understanding of forward. So under by As-Salam, buyer will pay 100% of the price to the seller and agree on the amount and the description of the asset that they are ordering, and also agree on the time of delivery, maybe 3 months or 6 months, 9 months or 1 year. So that's clear enough, and then you're going to deliver. But then in terms of the modern transaction, they don't have 100% payment of the price yet, right? In modern forward, normally they do margin payment only, just a fraction of the price. So that doesn't comply with the Salam rules. So that's why when we talk about forward contracts or even future contracts, scholars divided. Some scholars said, no, you cannot do the way modern forward is done because it doesn't comply with Salam. If you want to do forward, you have to comply with Salam where 100% of the price will be paid. So if you just pay a margin, it's not in compliance with Salam contract. Some of the scholars say, yeah, you can still do, but you can do by way of urbun, where you pay a fraction of the price. But if you talk about urbun, normally actually the asset must be owned already by the seller. So that is another requirement. So there are detailed discussion on that. Yeah. Okay. Yeah, I hope I've answered your question. Yeah. Okay. So so that relates actually to the next point on free from uncertainty and also contractual uncertainty. The focus is on contractual uncertainty rather than 100%, being certain. So in contract, terms and conditions must be certain. What are my rights if this happens? What are your rights if this happens? What if something else happens? What will be our rights? So all the contractual terms are clear, but it's not eliminating other real uncertainty that is beyond the control of the parties. Like for example, you have done a contract, it's clear what is the goods that you are buying, price is clear, the is clear, description is clear. But then due to force majeure, the goods is destroyed, right? So that is not something which, in the first place, when you enter into the contract is good. But the force majeure is like unforeseen event that will actually come later, and that would actually have affect the contract later. But in terms of the original contract when they enter, because all the terms and conditions are clear, they are actually a valid contract. Yeah. And later we will discuss in more detail on gharar. There are categories, major, minor, and they have different effect on the contract. So we will look at that later. The next point is basically we also do not allow for trading trading or investment in some prohibited items or commodities. So we know in Islam we have prohibition of pork, prohibition of alcoholic beverages or wine. So this would be the things that are being prohibited. So Islamic finance should not be involved in all these things. Of course, the negative list has grown, like cigarettes, tobacco related, or other things that bring harm to the people, society. These are also things that would be prohibited by way of extension. And then in terms of the contractual relationship in Islamic finance, generally is more of buyer-seller, lessor-lessee, or partner, rather than just lender and borrower. It's not like under conventional banking, it's always lending and borrowing. So here it's more like buying, selling, lessor, lessee, partnership. Sometimes there's lender and borrower, but in limited situations. And then the profit actually comes from the trade profit, from the sale contract, from this contract, or from the profit in the partnership or venture, rather than just an interest imposed on a loan. Okay. Any question? Yes. Asana. Yeah. Yeah. Okay. Yeah. 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 That's very good question as well. So actually, when I say fair and just, it's not like a socialist welfare kind of ideology. So in Islam, we recognize private ownership. If you look at, for example, Surah An-Nisa, which is chapter 4, verse 29. Ya ayyuhallazina amanu, maybe Ustaz Fawaz can correct me if I put it wrongly. Ya ayyuhallazina amanu, لا تأكلوا أموالكم بينكم بالباطل إلا أن تكون تجارة عن تراض منكم. This is Surah An-Nisa, verse 29. Or you who believe, do not devour, do not take the wealth of others amongst you, except with wrongful means or through wrongful means, except there be a trade by mutual consent between you. And there's also another hadith. The Prophet said, "Innamal bai'u an taradin," where trade is by way of mutual consent. So that means if you have an asset and it belongs to you, Islam recognizes private ownership. But there's a balance, you know. Even though it's your private own asset, but your enjoyment of your asset should not be to the extent that you are causing injustice to others. Like for example, yeah, you own simple example. You own a knife, yeah, it's all yours. You can use whatever you want with the knife, but you cannot use the knife to kill anyone else or to hurt anyone else. Okay, so that's one. And then even if your own, but you shouldn't be wasting the asset, because although that resources is yours, but you shouldn't be wasting it, because it will affect also the the opportunity of others to also enjoy the asset. So this is like the Prophet ﷺ told the companion when he was actually taking ablution. So the Prophet said, don't waste water when you are performing your ablution. So this companion was like amazed. He said, oh, even in doing ablution, there is a kind of wastage. So the Prophet said, yes, even if you are at a flowing river and you are using the water in the river, you shouldn't be excessive in your use of water more than what you need for your ablution. Yeah. Ah, yeah, yeah, yeah. That jam. You mean what? Yeah, yeah. Yeah. And then the words of Quran, "Innal mubazzirin min ikhwani shayatin." Yeah, basically solution. Yeah. Mm-mm. Okay, yeah, it costs actually loss lah, basically. Yeah. Uh-huh. Mm. Yeah, yeah. I have not come to that yet. So we have what we call the we have the Islamic but we actually the middle way. The Prophet say ummatan wasata. You're always the middle ummah. So we are not capitalists, we are not socialists. So basically we are with the capitalists in the sense that we recognize private ownership, but we have the social finance aspect because we have a zakat system. And so basically, خُذْ مِنْ أَمْوَالِهِمْ صَدَقَةً. The Prophet is asked to take in the wealth of the rich, sadaqah, which is the sadaqah wajibah, which is the zakat. Okay, tutahhiruhum wa tuzakkihim biha. So it's actually cleanse the property and purify them in terms of their heart and whatnot. Okay? And then another another issue, wa fi amwalihim haqqun ma'lumun lis-sa'ili wal mahrum. In our wealth, the wealthy people, there's always a portion that is the haq or the right of the poor. So that's the zakat system, 2.5% lah in general lah, 2.5% of the wealthy punya money actually belongs to the poor. We have to pay the mandatory zakat. Please Pak Sendroy, you're going to be the next speaker. Yeah, please have a seat also. Yeah. So where was I just now? Yeah. So and then there's some other zakat, like for the animals, livestock, for the farm produce. It depends on whether it's naturally fed or watered by rainwater or not. So the rate will be higher, and if you spend your money, the rate will be lower. So that is actually making sure that there is some portion which is redistributed back to the needy and the poor and whatnot. So we have the 8 asnaf, the 8 category of zakat recipient. So it's actually a very balanced system. And on top of that, for other public needs and also requirements and expenditure, there's a lot of encouragement for Muslims to spend their money in helping others, but this is not mandatory. It is actually voluntary, but it's like our account for the hereafter, right? If you do that, we will be rewarded in the hereafter. So that's why the wealthy, they spend a lot on this charitable voluntary charity, because this is their account deposit for them in the hereafter. They will going to get rewards on that. So there's a lot of encouragement. So that's why we see a lot of people do the normal sadaqah, the wakaf. The Prophet ﷺ was reported to have said that when a person, Ibn Adam, dies, all his deeds and whatever will be like in qata'a. How do you translate that? Terputus lah, semua amalannya dah terputus. Illa min thalatha, except from 3. One of that is sadaqah jariyah, and then ilmu yang dimanfaatkan, and also waladun salih lahu, a good child who is praying for their father and mother. So that's actually and we see a lot of charity actually among the Muslim, but in the past, in modern time, people are trying to revive that. It seems that Muslims have forgotten their charitable self. I think the West is doing a lot of that. A lot of people doing charity among in the West, and also the non-Muslim. Muslim tend to forget. Actually, it's their legacy actually being charitable. So that's actually the balance there. So we have 3 sectors. One will be the private sector, public sector, and the third sector will be the philanthropy. Okay? Have I answered you, Sana? Yeah. So it's a balance. It's a middle way between socialist and capitalist. So we have this just a simple in terms of the market, target market for Islamic finance. Actually, it's very huge. We have a lot of untapped market. In Indonesia alone, we have currently about 7% Islamic finance in the total finance in Indonesia. Is that correct? More or less 7%. So we have like 93% still open, untapped. And Indonesia, what's the percentage of Muslim? 90 something? 85. Oh, reduced already. I thought last time you have 90 plus. Oh, now 85. Huh? So 85% Muslim and only 7% Islamic finance. So there's still a lot of potential. And even non-Muslim also can be a potential target, like Malaysia, because we have like 40% now, and in some segments actually non-Muslim are more than Muslim in terms of using Islamic products. So there's a lot of potential actually. So you can see globally about 1.9 even 2 billion Muslim worldwide. So a lot of potential in all the countries. Like you can see leading there, Indonesia, 229 million. Now I think it's already more, right? Your numbers, total population. I think 230 something, right? Yeah. 40, right? I mean, 2021, now 2024. Mm. Okay. So there's a lot of evolution. I don't want to go into this. I think you can look at it. We start very small, with one or two institution. Now I think a lot of growth in the market. Yeah. So in terms of the fundamental principles, okay, now we go into the more technical parts. There's now more like the broad things, the philosophies. The more technical parts in terms of the actual transactional dimension in Islamic finance. So if you look at the transactions, there's always akad, there's a contract. That's the basis of the transaction. So the akad itself must be compliant with the Sharia rules related to that specific akad or contract. And the parameters in terms of avoidance of the prohibitions. So if you have the akad, you need to make sure that the akad avoid the prohibited elements and should not contravene any established principles in Islam or in Sharia. So this is the summary of the principles that need to be observed. So you have the contract, and then the contract must avoid the prohibitions like riba, gharar, maisir means gambling, and then the other things like liquor, pork. And then not only the contract avoid the prohibition, the main requirement of contract, remember in the Surah An-Nisa just now, tijaratan taradin, all the contract and the transaction must be based on mutual consent. So it cannot be forced on another person. It must be by way of mutual consent. Later we will discuss, hopefully we have time. Sometimes some product, because of the bank, enter into the contract with the customer. And sometimes there needs to be some kind of changes to the terms and conditions. So the bank sometimes asks the Sharia committee, right, can we assume or deem that the customer consented? Deem consent, because he said like, if not difficult, sometimes we contact the customer doesn't reply. What? Can we assume or deem that the customer consented? So this is the issue, because under Islam, hot issue, we must make sure they have consent. So is as-sukut alamatul rida, silence, is it deemed to be consent? So this is a very hot issue. But in general, it's not easy to see that you are deeming consent. It's not like, the saying like sukut alamatul rida, deem consent when you are silent. Is more towards a different scenario of marriage, and the person is shy to say that she agrees. So nowadays, nobody is shy. They will say they want to do. So different scenario, especially a commercial transaction. Different, yeah. Express, basically we want express consent rather than doing consent. Okay. So consent is very important. And then, of course, you can consent whatever you want, but you cannot consent to do something which is unlawful, something which is prohibited. So the objective or contractual objective must be lawful. So you cannot consent to pay riba. You cannot consent to do something which is prohibited, right? Okay. Now the details of the do's, what we can do, and the don'ts, what we cannot do. Okay. When is the break? 10:30. Yeah. Okay. So the do's actually is very wide. I can say it's infinite. No finite borders, because there's al-aslu al-ibaha. Original assumption is permissibility. Because Allah has made it easy for us. So whatever we can do, but He put some boundaries. Boundaries is where the prohibitions are. So in general, the things that is allowed is infinite. So the Quran itself encourage work and trade. You can see that in the verses. وَابْتَغِ مَا أَتَاكَ اللَّهُ, search and search and also work hard. Yeah. So basically, we are encouraged to work. The Prophet himself was a trader, and there are lots of encouragement of trade evidence in many instruments of trade available during the Prophet's lifetime and in Islamic history thereafter, right? So if you look at the companions of the Prophet, so most of them are traders. Yeah. Ustaz Pabas, can you confirm out of the 10 al-asharatul mubasharatul bil jannah, the companions, certain companions, yeah, who have been given the glad tidings that they're going to be the dwellers of the Jannah, 10 companions. I think out of these 10, I was told, if I remember correctly, 9 of them are actually traders. Traders, yeah. They're all traders. So majority of the, so 9 of the 10 actually are traders. They are merchants. They are commercial people very much involved in commerce. So that shows, and the Prophet himself was a trader. His wife Khadijah was a trader as well. So this means that it is very much encouraged. Yeah. Basically, they are traders, but they are not being rijalul la tulhihim tijaratun an zikrillah. Okay. So basically, although they are traders, yeah, yeah, yeah. Although they are traders, but their hearts still always remembering Allah Subhanahu Wa Taala. So these are the kind of traders, okay. So what are the main contractual principles? See, yeah, we are all encouraged to be traders, but what are the main contractual principles that we need to observe? Okay, I was mentioning earlier about consent, okay, and then cannot contravene Sharia provisions. So this is the general rule. Al-Muslimuna ala shurutihim. The Prophet said, Al-Muslimuna ala shurutihim. Muslims are bound by their contractual stipulations. إلا شرطا أحل حراما أو حرم أو أحل حراما أو حرم حلالا. Okay, so Muslims are bound by their contractual stipulations except those that prohibit the permissible or permit the prohibited. Okay, so that's clear lah. So generally you can do whatever you want except that you consent and then make sure that you don't do anything which is prohibited. And the same is also in Surah Nisa 29 that I was mentioning earlier, right? Okay. Another important principle is that once you have entered into the contract, basically by mutual consent, no prohibition and whatnot, the effect of the contract is it is binding. So the contract mengikat, basically it's binding. This is clear in Surah Al-Ma'idah, which is chapter 5, verse 1. Ya ayyuhalladzina amanu awfu bil uqud. Or you who believe, perform your contractual obligations. Awfu bil uqud, perform your contractual obligations. This binding. Innal ahda kana mas'ula. Promises is you are being accountable for your promises. Okay, so you must be doing. Basically, janji mesti ditepati, right? One of the indicator of a hypocrite is actually when he made promise, he break the promise. Okay, so that's another thing because sometimes the customer when they do transaction, they want Islamic, but then they breach. They don't want to pay their obligation. This is wrong. This is not Islamic as well. Okay, so this is things that we need to be clear. And then the other thing is in Islamic contract, certainty of performance of the contractual obligations is actually very, very important. Like if you buy, there must be delivery of the goods. If you buy also, you must pay the price. Okay, so this is the performance is given a lot of importance. So because of that, as far as possible, we try to eliminate any avoidable future disputes between the contracting parties. Okay, so let's say we must be like clear the terms. You cannot put like terms that can create a lot of interpretation and then you later dispute about those terms. Let's say you say I'm leasing you this asset and the rental would be like fixed X amount. That's clear. No potential of dispute. But sometimes because of the lease tenure is very long, you may want to have the flexibility of making it like a bit variable, subject to certain conditions, right? So you can say, okay, the rental is X, but every 6 months we want to review, and the review will be based on this formula. So you give a formula, very clear, both parties agree, then that's fine, okay? But if you say you'll be reviewed every 6 months, and that formula, and And this review will be subject to the agreement of both parties. It looks good, but if you look at it, when the 6 months come, both parties cannot agree. Okay, so it's subject to agreement, but we cannot agree. So if you have like that, then it will be like, so what will be the rent then? We cannot determine any rent, right? So then that's not clear. So we would actually consider this kind of condition as making the contract uncertain. Okay, so these are the things that we're going to look at later in more detail. But generally, avoidance of dispute is given a high priority. So make sure everything is clear, parties are well informed. When they make decision, they consent with a very well informed condition and things like that. Okay? So now we look at more detailed technical aspects. When you do a contract, in order to make it valid, then you have to have all the rukun. Just like when you do salat, all the rukun must be there. So the same here, when you do all the contracts, must fulfill all the rukun and also the syarat. Rukun dan syarat. Okay? So the rukun in general, you have three big elements. One would be the parties to the contract, and then the contractual expression, and then the subject matter. Okay, so when you say the parties to the contract, basically offer and offer, like seller, buyer, lessor, lessee, partner, another partner. Okay, so you have the two parties to the contract. And then for the expression of the contract, normally by way of offer and acceptance, ijab and qabul. Ijab and qabul, offer, acceptance. And the subject matter of the contract, for ma'qud alai, the subject matter of mahalul akad. If you're talking about buying and selling, normally it will be the goods and the price. The goods and the consideration, the goods and the price. If you're talking about lease, the lease asset and the rental payment. Okay, if you're talking about a partnership contract, the subject matter normally would be the capital and the work and the profit. Okay, so that would be the subject matter of the contract. What are the conditions or syarat-syarat for the contractual expression? The sirah, the ijab and qabul must be clear, must show that the parties consented. Consensus at either is the Latin word, basically they have meeting of the mind, they agree to the same thing. So the parties, what are the conditions for the parties? They must have ahliyah. They must have the contractual capacity. In Islamic principle, we call it ahliyah al-ada al-kamilah. Complete contractual capacity to enter into the contract. Okay. Normally, it's talking about natural persons when they are adult, sound mind. That's basically it lah, adult and sound mind. For legal persons, because now lots of contract done by legal persons, by companies, entities, they must have the capacity to enter into that kind of contract authorized in their constitution, in their memorandum and articles of association, in the constitution. They are authorized to do such a transaction. Another thing with regards to legal authority, not only that you are adult in sound mind, but you have the authority to enter into the transaction in relation to the subject matter. If you want to sell, you should be the owner. So you cannot sell another person's property. If you want to sell, if you want to lease, you should be the owner as well. Okay, so and then there shouldn't be any claim of other parties. Even if you own but it's encumbered, it's under charge, for example, then you cannot sell it without the consent of the chargee. Okay, so these are some of the things of legal authority. So if you are not the owner or the person having rights over the asset, then at least you must be the wakil, agent, or guardian, wali, wakil or wali of the owner. Okay. So with regards to the goods, the subject matter, so generally the subject matter of the contract should be something of value. So you cannot have a subject matter which is not recognized as something of value in Islam. For example, like liquor or wine. In Islamic principle, these are prohibited. So not something of value. Although You go to the shop, the price maybe 100, 200 ringgit or I don't know, yeah, how much, maybe dollar. So it's very expensive, but from some perspective, it's of no value because you cannot consume it, you cannot use it for that purpose, right? So mal mutakawwa must be something of value, ascertainable. So you can ascertain or is ascertainable. You know, you can describe. If you ascertain already, it's already existing asset. But some asset we describe in order to ascertain, like in istisna. We give all the specification of the asset under construction. Salam, we give the just now the weight, the quantity, the time of delivery. Okay, so mausuf, you already describe it clearly. And legal shouldn't be something which is prohibited. Okay. Any question on this? I hope I'm not being too fast. I'm okay with it. Yeah. Yeah. Yes. Yeah. Of course, there are different schools. Like Hanafi in general, they are very much on material tangible asset. They call it mal madi, very material and tangible. But the majority of other schools, like the Shafi'is, Malikis, and Hanbali, they recognize both tangible as well as intangible. So they, but even then, Hanafi, although technically they say we only recognize tangible, but for the non-tangible, they recognize it under different category. Not like, they don't call it mal, but something of different category that is still having value. So things like rights, hukuk, also manafat, the usufructs or utility. Now we have a lot of new asset classes like license, airtime, franchise, electricity. Johor already, yeah, because they have a lot of, yeah, because it's in terms of value, there's a lot of value. So if you don't recognize it as mal, it doesn't make sense, Yeah, that was during that old time because if not tangible, then how they cannot imagine how to value, how to be, yeah, because it's about protecting the interests of the parties, right? So you cannot just claim out of thin air just something that, I don't know, now people selling, remember during the case and COVID, they sell the clean air in the can. I don't know, people still buy. I don't know. So there are certain things that some scholars say this is just imagine asset, but it's not real. But if you can show it's real, like if you remember the sukuk by Emirates Airlines, where they use the ton to kilometer, (km). Basically, are you familiar with that transaction, sukuk transaction by Emirates Airlines? The underlying asset actually is the (km). So when Emirates Airlines issued that sukuk, they issued a number of sukuk, but that was 2000 berapa, that one is actually Emirates. Emirates sukuk. I think Tan Sri Dr. Bakar, he wrote a book on Emirates sukuk. Actually, he discussed on that particular sukuk because of the interesting asset class. So under this sukuk, Emirates actually used as their asset, underlying asset. Actually, if I remember correctly, they call it TKM, basically ton. How do you spell tons? Berat, T-O-N, N, is it? N-E. 2 kilometers. So they are actually selling the rights to the cargo, their cargo, because they are airlines, so they have asset actually is cargo plane, not the cargo plane itself, but the cargo plane, they are going to actually send cargo, and how they calculate the price for the cargo, actually how many tons, the weight, and then you time the kilometer, how many, the distance that you're going to send the cargo. So the distance, the weight and the distance. So the more the weight and the more the kilometer, the higher the price. So they are selling this future. It's a future right to they're selling the right to the future cargo returns. So they're going to do their cargo services. So they calculate, they have a formula based on ton to kilometer. So what that will be their future income. When they sell their cargo services, they will get this amount of money. So they sell that to the investors. So they sell to investors, but they issue the sukuk. So the sukuk actually represent this asset, the ton to kilometer, the rights to this future receivables from the cargo services based on the formula. So the sukuk holders, when they pay, so the investors, they pay and subscribe to the sukuk, they get the right to this one. So let's say it's for 5 years. So in the first year, the total, services provided, that will be the return to the investors. So Emirates Airlines sell this right for an upfront amount. I can't remember how much they pay. They issued. So let's say they got like say $1 billion dollars, for example, for the rights. So for that next 5 years, the return from that cargo service, the profit will go to the super investors. So this is classified as an asset. It's a new asset class, ton per kilometer. Basically, the right to future payment for the cargo services. And Malaysian government also, they use future payment for the passports, JPJ, for our driving license and passport, we have to pay. So when Malaysian government issue one of our sukuk wakalah, is they actually package the future payment for those services provided by Malaysian government for the JPJ, for passport, whatever lah yang they have to pay to the government, road tax. So they sold it upfront to investors. So when they roll out the services and people pay, they will actually pay it as returns to the sukuk investors. Okay, so new asset classes. Yeah, because they have their calculation, their track record. Then sometimes they back with their contracts. They have already contracted with certain companies who's going to actually use their services for that year. They will always have that kind of things. Like not because when investors they do assessment of the sukuk, they look at they will check, they do the due diligence. They have the financial due diligence, the legal due diligence. So financial due diligence, we look at the projected cash flow. Company will come up with the projected cash flow. Okay, this one we have already contracted with this company, Panasonic, Kappa, Toshiba, Toyota. They will actually use our cargo services, and then the amount. So they will verify the appointed accountant will actually put together with the arranger and whatnot. So they verify. Normally they will actually do some over collateralized. So they check. So the amount should be much higher than the actual that is the claim. So they put it higher actually. Yeah, electricity. I think they use it for electricity. I think one of the dekat Saudi, they use this electricity meters, electric meters. Yeah, it depends on the transaction. Like this one, I think there would be when they do the due diligence, they have to verify. Normally, it will be the party accountant and also the arranger. Also, they will have their people who are knowledgeable in the field and can verify. Because we are talking about investment, there will be a rating agency. Rating agency will also look at the risk in order to see the probability of the amount being met. So based on that, they will do some calculation. Yeah, I think time per kilometer is quite a standard measurement in cargo services. Yeah. This one, I think, Emirates Airline, at that time, I think Emirates have not yet made IOP shall standard binding them. So I think more or less I think it's based on the general ruling on mile, definition of mile. I think they don't follow our Malaysian Securities Commission, but it's more of the global Sharia standard on definition of mal. I think they have their own Sharia advisor advising for that sukuk transaction itself. Yes, one thing is about verification, the other thing is about the party's own comfort level in terms of, maybe you can have somebody to verify the asset is located in somewhere where you may not have that comfort level. Maybe let's say the asset is located somewhere in like one of the ex-Russia country, and then you don't know how reliable will be the person making the verification. So the parties themselves may require to have additional means of verifying. Because different asset may have different way of verifying. Because if you look at intellectual property, they have mechanisms on how to verify and evaluate, give the value of certain of the IP assets. I think the most recent one we have when Bursa Malaysia approved the Bursa Carbon Exchange. They use Vera as the verifier, one of the globally accepted verifier for the carbon exchange or carbon credit. So I think it's like very much customized by way of uruf in that industry. What would be the norm that is acceptable by the market players in that specific industry? Yeah. If you don't have yet kind of industry norm, normally it's based on the both parties acceptance. Sometimes like carbon credit, not very much not too much globalized yet. So, but there are some internationally known verifier that the parties themselves are comfortable with. Okay. Another example of carbon credit, new asset class. Okay. Okay. So these are some of the key Islamic commercial contracts or Islamic contracts. Some of them really commercial, like gratuitous contract, like tabarru'at, a contract of gift or hibah, wakaf, loan. So you can see under Islamic principle, loan is a kind of gratuitous contract because it's meant to help the borrower in terms of giving the time. It's not meant for making profit. So this is very different from conventional banking where they consider loan as a profit-making contract. And Islam, loan is more of a charitable act. Ibra is like the act of waiving part of the debt obligation or the whole debt obligation. And for the trading contract, this one is the more commonly used, like the trading contract. The gratuitous contract, not that much, but we have here and there sometimes. But the main one would be the trading contract and also the investment contract. And to some extent, supporting contract also is being used a lot. So for trading contracts, generally there are two types. One is sale and the other is leasing. So under the sale, we can have like the deferred payment sale, baik di Taman Ajil, we have Murabahah, markup sale, we have Salam, just now, forward sale, we have Istisna, construction or manufacture sale. Construction and manufacture sale is Istisna, Salam is forward sale, Murabahah is markup sale, baik di Taman Ajil is deferred payment sale contract. For leasing, we have the normal operational lease, ijarah taswiliyah. We have also financial lease, ijarah tawiliyah. And we have also forward lease. This is very interesting, forward lease, where we have a list of assets which is yet to be constructed, but the lease is already entered now, but the actual utilization will be upon completion and delivery of the asset. Call it forward lease, ijarah mausufah fi zimmah. Okay. And then we have for investment contract, most common will be mudarabah and musyarakah. The detail I will be explaining later when we do on the product, or when we do on the detail contract. Okay. Supporting contract, mudarabah is more like maybe we call it joint venture. partnership. Musyarakah is like equity partnership. I don't know this is my own translation. Equity partnership. For supporting contract, kafalah means guarantee. Guarantee contract. Rahan is a charge or pledge contract. Hiwalah, also pronounced as hawalah, is a transfer of debt. Transfer of debt contract. Some people say maybe like something like factoring, but not really lah. It's transfer of debt. Wadi'ah is safekeeping, contract of safekeeping. Wakalah is contract of agency. Ju'alah is a contract of payment of commission or reward. And the last one, muqassah, is actually the setting off the debt obligation, or consolidation of debt, where you net off one debt with another debt. Okay. So those are the do's, the things that you can do. I say it's infinite. Later when we do on product development, there are some new structures where they have combination of contract or they have different structures like this. So the don'ts are very finite. Okay, those are very finite. The things which are prohibited generally are very finite, although we can add a few other categories by way of extension as well. So riba. Okay, so riba is prohibited. I think everyone know about the prohibition of riba. So the prohibition can be seen in the Quran as well as in the Sunnah of the Prophet. So what is the meaning of riba? Literally, riba means growth or increase or excess. Okay, so it refers to the growth or increase or excess in return of which no reward or equivalent counter value is paid. So you are just charging one way. You're not giving something in return to the counterparty. In other words, it's also maybe can be said to be a kind of unjust enrichment. Unjust because only one party is winning, because one way only paying, the other part, the paying party is not receiving something in return. It's a win-lose arrangement. Okay. And in contemporary Islamic finance, we can see riba occurring in all interest-based lending activities, fixed return on deposits in conventional banks, and also in forward forex and some of the forex transactions. You can see elements of riba. Yeah. 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 This is that we're going to look at in more detail. Let's look at the meaning of prohibition of riba first. Then we look at the how it's different. I think you will see it clearer tomorrow when we do on the consumer finance product. I will go into detail on asset financing, so how the contract is different. Basically, it's using not a loan contract. In general, you're using buying and selling contract or leasing contract. Some extent you have also hybrid like musyarakah and nakisah. So they use different contracts. So the mechanisms of generating the profit is actually profit in the sale contract, or profit in the lease rental, or profit in the sharing partnership contract. So I hope you can be patient to look at that later. It's different. Because if you look at the verse, which actually prohibits, the verse here? Yeah. The verse which prohibits prohibits riba. Before that, I will just show to you this one first. Riba, which is being prohibited, can be generally divided into two categories. Although if you look at the traditional classical literature, there are many ways of classifying. But this is the one that is more commonly known now. Basically, we have two categories. One is the riba that happens in a loan or debt arrangement, loan contract. The second one that happens in an exchange transaction. So the one here on loan, the main reason why the riba is charged because of the time. the delay, the time that you give to the borrower. Okay, or even if you have done the time is up, then you extend more time, also you charge more. Okay, so it's because of the delay. They call it riba nasi'ah because of the delay. Riba nasa or riba nasi'ah because of the delay. Also known as riba jahiliyah, meaning it's the riba practiced by the people of Arab jahiliyah at that time, and also known as riba al-Quran. The one mentioned in the Quran directly is that of riba. Okay. The second one is more like exchange transaction. This is not that known among the people at the time when the Prophet prohibited. It is more of explanation by the Prophet. So that's why it's known as riba sunnah. Riba which is prohibited by the Prophet through the sunnah tradition of the Prophet. And the reason why riba in exchange happened, one is because of pure excess, pure difference between the two counter values that you are exchanging. And secondly, because of the delay also, because of the time factor. So the one because of pure excess, we call it riba al-fadl. Riba al-fadl, riba because of the excess, the difference. And the one due to delay, we call it still riba al-nasa or riba al-nasa because of the time factor. And there's a gap, a delay in the delivery of the goods for the exchange. Okay. I will explain in more detail after this. So first we look at the one in loan or the riba which is mentioned in the Quran, prohibited in the Quran. So this is, you can see, for example, in Surah Al-Baqarah. There are many verses. One of that is Surah Al-Baqarah, verse 275. وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. Okay. قَالُوا إِنَّمَا الْبَيْعُ مِثْلُ الرِّبَى وَأَحَلَّ اللَّهُ الْبَيْعَ وَحَرَّمَ الرِّبَى. They said trade is like riba. Like you said just now, it's like look like the same. The one charged the riba by the bank. But Allah said, وَأَحَلَّ اللَّهُ الْبَيْعَ. Allah has allowed trade. The buying and selling just now, and leasing whatnot. وَحَرَّمَ riba, and prohibited riba. Okay, so why Allah consider them as different, although both actually are profiting. In the trade you make profit, in the riba transaction also you make your profit from the riba charges. So the scholars have a lot of interpretation on this. So the one that are sort of extracted from those discussions is one is for the riba, there is this element of oppression, unfair distribution of risk and return, unjustified enrichment at the expense of another. So it's a win-lose arrangement, talking about riba. And for trade, why is allowed, the main criteria because you have fair exchange of goods and price and value, and there's also fair distribution of risk and return. Okay. So just to give an example just now on the riba in the loan contract. So let's say just now, call yourself Nabila or no? Nabila. So Nabila, you have $100,000. So you lend that money to Hasanah, right? So $100,000 you lend to Hasanah, and if you have a riba-based transaction, basically Hasanah will have to pay you back 100,000 plus. So you say riba means increase, so it must be plus lah. Maybe plus 1% or 2% or 3%. And why you charge that extra? Because you lend for a period of time, and then from the conventional argument, they say opportunity loss. If I have the money for that 1 year that I lent to you, I have this opportunity to make money. So because I cannot make that money, I'm charging Hasanah who's borrowing money from you. Okay, so from Islamic perspective, this is considered as oppressive because it's a win-lose. Why? Because when you give the money to Hasanah, you receive 100,000. Is it fair for you to pay back 100,000 plus 4%? You only enjoy 100,000. Why do you have to pay more to Nabila? Okay, that's one. Secondly, Nabila argue you have the money, time value of money. But you have 1 year. When you use the money, do you necessarily make profit of the 100,000 that you are using? Not necessarily, right? Because if you just use the money for consumption, like you buy food, you buy whatever for your consumption, you get the value of 100,000. You don't get the value of 100 plus 4%. So it's not fair for you to be asked to pay more. You just enjoy 100,000. If you invest in trade, you do your business, maybe you win, maybe you lose. If you lose, it's not fair. I mean, I should be returning 100,000. If you win, yeah, maybe I can share some of that profit. But if you just win a little bit, all your money, you do all the hard work, and then all the money you give to Nabila, then they just simply give money to you, right? So even if you make money or you don't make money, I mean, it's not fair. Unless if you do under Islamic, we call it kirat or mudarabah, you give money to Hasanah, Hasanah for 1 year. If Hasanah makes profit, you're going to share the profit. If Hasanah loses, you're going to bear the loss as well. Then it's fair. So it's win-win. But this one is win-lose, because let's say 50% of the time Hasanah makes money, and 50% of the time she's not making money. Let's say 50-50. So it's like half of that actually you are just charging her, passing all the money from her. Not only she has to pay the principal, also have to pay addition, although she's not making money. And even when she's making money, it's just she's done the hard work, So those are some of the reasons like why. And then if you keep the money for 1 year on your own, you don't lend, you see opportunity loss. You know that, or can you guarantee that you're going to get the 4%? You cannot guarantee that. You may even lose the money. If you don't do anything, you don't get the money to increase and expand. So the argument of time value of money actually is flawed. It's not really correct. It's just the capitalist, the owner of the capital, saying to the capital user, I'm the king here, you have to pay me. I will dictate the terms. You cannot have any argument. So that's oppressive. So you are taking advantage of the need of the borrower, right? So that's the argument, and therefore it's not permissible. So the other verses that pointed to the same thing. Yeah. So if you're talking about exchange of goods, okay, so just now, let's say this example of you are buying, giving it for business purposes. So let's say Islamic, you do buying and selling. You do buying and selling. Just now for business purposes, the Islamic solution would be mudarabah. So you give the money, 100,000 to Hasanah. So if Hasanah makes money, you're going to share the profit based on a good ratio. If Hasanah loses, then you're going to bear the losses as well, because unless it's because of Hasanah's fault, you're fraudulent or you're not doing, you use the money for other purposes, then you have to make good for the losses. But otherwise, basically, the capital owner will have to bear the losses. But let's say for other things, like you are going to buy a house or a car. So under conventional, you just lend the money. Whatever happens, what I know, you pay me back the money and the extra. Under Islamic, normally the bank will buy the house and sell it to the customer, and the customer is going to pay the price on deferred payment terms. So there's exchange of goods and values. Basically, you buy from the bank the house, and you're going to pay the price of the house, and you get to use the house and enjoy the benefits of the house. So if the house later appreciate in value, there is a potential of you gaining also. But at the end of the day, basically, you're just paying the bank because you're buying a house from the bank. Okay, so it's a different arrangement, which is based on buying and selling, but it's exchange of monetary values. So that's in brief, basically. The difference. And in the exchange, riba that happens in the exchange, this is something which is maybe less known by the people, even at the time of the Prophet ﷺ, when the Prophet prohibits the first category, riba in loan, or they know. They are used to have this practice. That's why it's known as riba jahiliyah. They lend money, you charge interest, right? But when the Prophet started to explain about riba in exchange, so that's something that they don't know the riba actually. Okay, so this is actually based on the hadith saying of the Prophet ﷺ. So there are a number of narrations. Some of the narration mentioned 2 items, 3 items. So I just take here one of the narration which mention all the 6 items is here. So you can see the 6 items which are called ribawi items, or items that can be riba bearing if you don't follow the rules. What are they? The hadith mentioned al-zahab, gold or fidda, basically the silver, zahab bil zahab or fidda bil fidda. And then the hadith mentioned about wheat, al-burru bil burri, wheat, wasya'ir bil sya'ir, bali, tamar with the dates, and also al-mih, salt. 6, gold, silver, wheat, barley, dates, and salt. So what comes to mind is that, oh, why? What's this? Why the six things? The Prophet mentioned. So the Prophet actually says, put down the rule regulating the exchange of these 6. So you're exchanging these 6 items. If they are actually same, like for like gold exchange with gold, or silver with silver, wheat with wheat, barley with barley, dates with dates, and salt with salt, like for like, then it has to be equal for equal, same amount, and hand to hand, spot transaction. So you exchange gold for gold. 1 gram of gold can only be exchanged with 1 gram of gold. 1 gram of barley can only be exchanged with 1 gram of barley. 1 kilo of wheat can only be exchanged with 1 kilo of wheat. The same goes for dates and salt. And not only they must be equal, they must also be delivered hand to hand or spot. I give you my dates and you give you your dates. I give you my gold and you give me your gold. So if you look at it, oh, that doesn't make sense. Who would want to do that? Okay, 1 gram for 1 gram. Why would I want to exchange the same? Unless we can differ. So I give you my gram now. You're going to give you your gram after 6 months. So there may be a difference in price. So maybe I will have some gain or lost some money depending on the movement of the price. But the hadith say no, you have to do spot. So it's now actually saying, because before that people are doing differently. Either they do different amount or they defer the delivery so that they can actually speculate or they can take advantage of the exchange. So the hadith is saying that no, we shouldn't be taking advantage, shouldn't be speculating on these things. Everything, and basically because 1 gram and 1 gram, no difference. Why would you want to charge extra? Okay. But the hadith goes on to say that if if the commodities different, meaning gold exchange with silver or dates exchange with barley, different categories. But then you may sell as you wish. So it doesn't have to be equal. So 1 gram of gold can be sold for 20 gram of silver, or 1 kilogram of barley can be sold for 2 kilogram of wheat, for example. But you still have to be hand to hand. Exchange is hand to hand or spot. They still have to be hand to hand. Okay. So it recognizes that 2 different items can be exchanged at different amount because they are different, but still the exchange has to be spot. Okay. Of course, there are lots of discussion by the scholars why, what's the rationale. So basically, they come out with this argument that actually the reason why, because some of the items are actually used as money or measure of value or to exchange, and some actually are staple food items which can be stored for a long period. But some say actually these are all because they are used as money. Because in the old time, this is another view. In the old time, actually they use either gold or silver or even wheat, barley, and dates and salt as like money. So because all these things people always use. So you want to buy maybe cloth or whatever you want to buy, you also use this essential item like gold and silver and also the food items and the salt and whatnot as your money to buy something. So some say because they are money actually, but some say because they are either money or essential food item. So why? Because these are things that will affect people's life, their basic needs, right? With your money, measure of value is your purchasing power, and staple food is your main food that will actually sustain your life, okay, for your consumption. So it's being regulated in such a manner, basically making it like no point to speculate in this field because you have to do spot. And then if the same category then equal, so people will not speculate lah in this field. So the price will not be that volatile and things like that. This is the whole argument. So based on that, the rule is that if you're exchanging the same money, rupiah exchange with rupiah. So maybe you have 1 juta, 1 million rupiah, and then you have the small 100 million, 100,000 rupiah. You want to exchange the one note and the multiple notes, but the values must still be the same. You cannot exchange like 1 million, one note, and then the other person must pay you more in terms of the small changes. No, it has to still be equivalent to 1 million rupiah. Okay, for example. Yeah. 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 In terms of quality as well, actually not really recognized for this food item. Because there's one incident, even during the time of Prophet SAW, there's a companion who came to the Prophet, brought some dates. And the dates like good quality ones. So the Prophet asked the companion, where do you get these dates? These are very good. So he said that he actually originally have different type of dates. So he exchanged his original dates with this one, which is better. So he exchanged two measurement, two saw, they call it saw, just one measurement of, two measurement of that date, exchanged with this one saw. So 2 to 1. So the Prophet SAW said, oh, this is riba. So that means, although from their perception, like the quality, this one is nicer than that one, and they exchange, but because of the amount is different, the Prophet said that's riba. People may say why. So I think because what's the purpose of dates actually? It's for, basically to satisfy your hunger, give you, basically food, the staple food. So whether it is good quality or low quality, actually it still satisfy your hunger. So who actually determines this is more better value than the other? It's the market. So the Prophet, so the company was asking the Prophet, so how would I be able to then get that dates that I wanted if I'm not exchanging in this manner? So the Prophet said, sell your dates to the market, get a price, use that price to buy the other dates. So that means you are not just estimating based on this person claim my dates is good, yours is not good. But you actually put it to the market, so based on market price. So if you look at market demand can be different. Like now, if you look at ajwa dates, right? It's very small, crinkly and dry, not that much flesh, but it's high demand and it's more pricey compared to maybe ambar, which is bigger, more fleshy. So it doesn't mean that what you see and the market demand is the same, right? So that's why the Prophet said, yeah, because these are just essential food. You don't want to have people manipulating the other just because claiming that there's food. Okay, so you sell to the market, get a price, you use it to. I don't know. There's the time for break. So actually use it to buy. So then you have this use of money, actually to see the actual value. So then they know how to do the proper exchange. So quality per se is not enough. You have to actually subject to, you have to actually have the market information there. Okay. Yeah. So I will allow you time for your coffee break. We have not even finished our first session materials, so it's okay. We can take a break, maybe instead of half an hour, maybe 15 or 17 minutes. We can come back at 11. Yeah. Okay. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Welcome back to the session. I realized that we are a bit late, behind schedule, so hopefully we can cover as much as possible. I think some of the slides actually more for your reference, the data at the back. But at least you get your principles, good grasp of the principles, so that when we go into the products, you can actually understand and appreciate it better. So I think we are clear on the riba, right? Riba in exchange. So most of the time we're talking about forex, foreign exchange. Then we talk about forex, foreign exchange. We do forward forex. There will be riba element because of the delay in the delivery of the currency. But we have some products used for the purpose of hedging to cover for risk against currency pricing. But later, I think we'll do on that. So now more on the principles. So the other prohibition will be on gharar, basically prohibition of uncertainty, ambiguity, and deviousness in contracts. So more or less, when we talk about contracts, it should be certain, parties should be well informed. So there are actually a number of sayings of the Prophet, hadith of the Prophet regarding gharar and its prohibition. For example, there was a narration that the Prophet prohibits by al-gharar, sale involving gharar element. So when we look at gharar, there are actually a categorization of the degree of gharar, whether it is a major uncertainty or minor uncertainty, because the status of the prohibition would depend on the severity of the uncertainty. It's not like riba. Riba, a small amount or a big amount, prohibited. Still riba. Even half percent pun still riba. But for gharar, it depends on the degree of gharar. So if the gharar is very minor or minor, generally is considered as tolerated, because information is always like, you cannot make everything known, because the only party who knows everything is Allah Subhanahu Wa Taala. So human, we have limitations. So the information, generally we look at what we call material information. Information that is important and necessary for you to make a decision whether to enter into the contract or not to enter into the contract, right? So material information is important, but not all information is required. So some information, even you don't know about it, you don't mind. You can still agree whether to enter into the contract or not to enter into the contract, right? So that's the minor, we call it gharar yasir, simple or minor gharar. The one that will affect validity of contract will be the gharar fahish. Gharar fahish or major uncertainty. This is not tolerated because it will affect the party's consent. I consent because I thought it's like this, but actually it's different because of the lack of information, basically lack of information that actually makes it not a good contract. So basically, major or excessive gharar will affect validity, only this one, and it will make the contract either void or voidable, depending on the degree of the uncertainty. And if you look at the contract affected by gharar, generally it will be affecting exchange contract, and to some extent also partnership contract. In general, gharar will not affect the validity of charitable contract, because in charitable contract is an act of charity, so the other party is not expecting something in return. So that's why there's more tolerance towards uncertainty. So this is important later when we understand about takaful contract. In takaful contract, it's based on charity, where you contribute to the takaful fund. Although there are still uncertainty as to when the peril will happen, the amount to be received. So there's still gharar in the takaful arrangement, but it is tolerated because it involves charitable tabaru'at arrangement and not exchange or partnership arrangement. For exchange and partnership, because they have counter values, they have expectations, so there must be certainty in the contract. Examples of gharar being triggered. You have a sale contract, buying and selling contract, but it's not clear. For example, the asset that you are buying and selling, their attributes, the price is not clear, then there is a gharar, major gharar in the transaction. Another example of gharar is if you do buying and selling of debt, but the debt is not yet established, not yet confirmed. You already wanted to sell the debt, so there's also element of uncertainty there. Because what if it is not established, so you cannot deliver the receivables later. Other things that needs to be avoided apart from riba and gharar would be the prohibited things like pork and liquor. You can see the prohibition in Surah Al-Ma'idah, verse 3 and also verse 90. And also transactions involving gambling. This is known as maisir or qimar. This is evidence in Surah Al-Ma'idah verse 90. Okay, so those are the prohibitions. So let's now look at the contracts. What are the essential contracts? What are the applicable rules for these contracts? Okay. The first one is sale. Sale is very important because if we look at the verse on prohibition of riba, it actually mentions sale directly. Halallahu al-bai'a wa harrama riba. So as if sale is mentioned as the alternative to riba. Riba is prohibited. So how do you make profit? Through sale. Okay, the al-bai' here is mentioned very clearly. So basically, if you look at sale, it's bilateral. Two parties, you have seller and you have buyer. You cannot imagine a sale contract with just one party, right? There must be two parties always in a sale contract, seller and buyer. What's the purpose of sale contract? To transfer ownership, right? The buyer wants to get ownership of the asset and the seller wants to get ownership of the price. So there's exchange and transfer of ownership. If you are exchanging the same item or commodity for commodity, this is barter contract. So you can have also barter contract, muqayyabah they call it. Also a kind of sale. So that's also okay. But if they are ribawi, then you have to observe the rules like you do exchange of the ribawi items like forex or essential food items. What will be the effect of the sale? Direct effect will be transfer of ownership. Okay, that's the main one. In practice, we see sometimes there is differentiation between legal ownership and beneficial ownership. So this one we will discuss later. In general, in common law jurisdiction, like Malaysia, we follow the common law jurisdiction. Legal ownership and beneficial ownership are both ownership rights. So even if you have beneficial ownership, it is as good as ownership actually. But if you look at civil law jurisdiction like Indonesia, you don't have the common law tradition, right? So more on civil law. So for you, you only have one type of ownership, which is legal ownership. So in sukuk transaction, most of the time they have this differentiation between beneficial and legal ownership. So that's why in Indonesia, I think you have to introduce a new instrument, right? They call it what? Pemegang amanah or something like that, in order to allow for a similar effect with what is happening in common law jurisdiction with legal ownership. Because normally we want to differentiate between the trustee and the person actually keeping the legal ownership in trust, and then the actual owner who are the beneficial owner. Because the registration of the name in the name of the legal owner, but actually the real owner is the beneficial owner who do not have their name registered, but their rights is protected in trust by the legal owner. So that's what's normally happen. So we have trustee in the sukuk, they are having the legal title, but the real owner actually are the sukuk holders. It can be changing because when they do trading of the sukuk later, they may change in terms of the owner of the sukuk, but they have the beneficial ownership. So in Indonesia, I was told by a friend that they have adopted a different structure, which is allowing for that kind of effect to happen. So you have like pemegang amanah, I don't know what's the term. Wali amanah, wali amanah. And then in order to overcome because you don't, generally civil law jurisdiction, they don't recognize the differentiation between legal and beneficial. Maybe tomorrow Dr. Huria will be able to, if you can ask her, maybe she will be able to explain in more detail the legal position in Indonesia. In Malaysia, this is clear, because we are common law jurisdiction. So we recognize that although the beneficial owner do not have their name registered as the legal owner, but for all purposes, they are actually the owner. For certain convenience and for some reasons, they don't want to get their name registered because if not every time registration can incur cost, right? So every time you transfer the sukuk, you have the new owner and then you need to do the registration again. So that's why they register in just one name. That's the legal owner who's holding it in trust for the sukuk holders. Okay, it also be used for other purposes as well, like to avoid some other restrictions. Most of the sovereign sukuk, they do the transfer legal ownership still retained by the seller because they are restricted by law from transferring legal title to non-Malaysian, for example. So the buyer, although they are actually the owner, they don't get their name registered because there's some restriction in law. So those are some of the purposes why they use beneficial ownership instead of legal ownership. Okay, so generally in terms of requirement, sale has quite stringent requirement because we're talking about clear fulfillment of the requirement because we're talking about ownership transfer. You have recognition of private ownership, so when you want to transfer to another person, there must be fulfillment of certain requirements. So these are the types of sale contracts that are being practiced in the Islamic banking industry. So we have murabaha, we have bait bertaman ajil, ba'al inah, tawaruk, ba'adan, ba'salam, ba'istisna. So this seems to be a lot, but actually the ones which are agreed upon, I think would be murabaha, salam, and istisna. So these three, maybe you can say agreed upon. Bait bertaman ajil here, depending on how you define bait bertaman ajil. If you define it just by way of it's being sale by deferred payment, then I think it's also agreed by all as well. But some people actually use BBA bait bertaman ajil as synonymous with ba'al inah. So then the controversy of ba'al inah is also applicable to BBA. But if you just use BBA in its general form, deferred payment, sale contract, then it's acceptable. I think in Middle East, they call it bait bitaksib. Bait bitaksib meaning sale with installment. So it's the same basically. So it's a sale contract where the price is deferred. Whereas murabaha markup sale, so murabaha can be deferred, can be cash payment also possible. But if you do it deferred payment, you can also call it BDA lah actually. Yeah. So the other two, ba'inah and tawaruk, this is meant for cash financing to get cash. Ba'inah has a much more controversy, only accepted or validated by the Shafi'i school. The rest of the school do not recognize this. Tawaruk, less controversy, but still the classical tawaruk is allowed by majority. But because of the way it's being practiced nowadays with financial intimidation and whatnot, the financial tawaruk is still controversial, allowed by some but not allowed by some. Okay, so we will go into the details later. But then it's again another controversial sale. It's actually a sale contract to sell done, to sell receivables or debt, sale of debt or trading of debt. Again, this is controversial because of the how you perceive debt. Is debt ribawi item or non-ribawi item? Okay, so it's a right to receive money in the future, right to receive payment of the debt. So is this considered as ribawi, same like selling money for money, or is it just selling a right, which is an independent asset in its own? So that actually is where the difference is. We will look at the detail later. So another controversy there. So this one is controversial, and this is also divided. Some say yes and some say no. The rest should be okay. So now we're going to look into more details by al-murabaha. Buy just means sale contract, buying and selling contract, sale contract. Murabaha is derived from the word ribih. Okay, murabaha. Murabaha, okay, murabaha here. You can read Arabic, murabaha. So from the word ribih, ribah. So ribih means profit. So it implies actually murabaha, you are increasing the price. You're making a profit. You're making a markup in the sale contract. So the main feature of murabaha is a very specific category of sale. So the main feature is in the sale contract, the seller discloses the cost, price, and also the markup. So very transparent. So seller says, for example, my cost is $10. I'm selling it to you for $12. So my markup is $2. So that's very simple definition of murabaha. Seller discloses the cost and the markup to the buyer. Okay. And because of that disclosure, it's a kind of representation. It creates a kind of reliance on the representation made by the seller. So because of that, there's element of trust or amanah. So it's part of what we call buyu al-amanah, sale based on trust or trust sale. So buyu amanah, there are actually many categories of buyu amanah or trust sale. One is murabahah just now, where you disclose the cost and the markup. We have also tawliyah. There's also trust sale, but in tawliyah, the seller disclosed the cost and he's saying that he's selling at cost. Selling at cost. He disclosed, I buy at 10, I'm selling to you at 10. No profit made. He's selling at cost. That's tawliyah. The other one is wadiyah. Wadiyah, ba'al wadiyah with dot. Wadiyah. Safe custody just now is with dal. This one is wadiyah. Dot. Wadiyah. The seller discloses the cost and the seller tells the buyer, I'm selling at a loss. I buy at 10, I'm selling to you at 9, below cost. This is wadiyah. Okay? So it's all just disclosure, right? So there's murabahah. Dia dapat profit yang lain lah tu. Actually, when you have, let's say you have bought 20 pieces of cloth, the rest you sell at a profit. And the last piece, you sell discount, clearance, top clearance, so you tell the buyer it's a discount, it's correct, right? But you already made a profit in the previous stocks. So it's common. So that's that representation, so it creates amanah. So the buyer buys on trust or trusting the disclosure or representation made by the seller. So if the effect is, if the seller makes a wrong or inaccurate disclosure, the contract becomes voidable at the option of the buyer. So buyer has the option to avoid the contract if the seller makes a wrong or inaccurate disclosure. So actually his cost is actually 9. He says his cost is 10. And he tells the buyer, I'm selling you at 12. I'm making a profit of 2. But actually he's making a profit of 3. So he actually make a wrong disclosure and then the buyer discovers, then it becomes voidable at the option of the buyer. That's the effect. If you do sale based on trust or buyu amanah, if the disclosure is wrong or inaccurate, there is actually an effect to the contract. The contract becomes voidable at the option of the buyer. Okay? So that is the meaning of murabahah. It's a special form of sale contract and it has this element of trust. So strict liability means if you disclose wrongly, then the contract becomes voidable. So just now, buy bi thaman ajil. Buy means sale. B with thaman price. Ajil deferred. Okay. Sale with a price which is deferred. So it's any sale contract where the price is deferred. Actually, it's buy bi thaman ajil. Okay. Thaman means price. Ajil deferred. B means with. Sale with a price which is deferred. So sale with deferred payment. So it's more of mode of payment. All sale contract that have deferred payment may be described as buy bi thaman ajil. If you look at Surah Al-Baqarah 283, this implies that actually there can be deferment, either the price or the goods. The longest verse in the Quran, Ya ayyuhallazina amanu idza tadayantum bidainin ila ajalin musamman faktubu. The longest verse, the whole page of the Quran is verse 283. So it starts with the verse which says that, or you who believe, إذا تداينتم بدين إلى أجل مسمى, if you enter into a contract which involve future obligations or involve debt obligations, faktubu, you have to put it into writing, and then take witnesses and whatnot. So the word mudayana, tadayantum, contract involving future obligation, there's mufassirin, the interpreters of the Quran says it applies to generally like two contracts. One would be where you defer the goods, salam contract. Remember salam contract? You pay the price already, you're going to receive the goods in the future, forward purchase. So you have to record the transaction. The same also, you buy the goods, you already get the goods, but you're going to pay the payment in the future. So you still have a debt obligation to pay the price. So both actually are impliedly allowed in the verse. The verse say you can do involving future obligation, whether price or goods, and you put it into writing, take witnesses and whatnot. Okay, so it's recognized and allowed. And Majalah Al-Ahkam Al-Adliyah, which is the Ottoman Civil Code, also recognized. If you look at Article 245 of Majalah Al-Ahkam, it says a sale for deferred payment or for payment by installment is good. So it's a valid contract, a good contract. But when the price is deferred, you must know when the time of payment and the price basically. It is necessary to make the time known and fixed in the case of payment of the price being deferred or by installment. Okay, so this is to protect the interest of the parties. You know when is the debt due. Okay, yes. Yes, sure. Yeah. 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 Yeah, I know. Even in Middle East also they just call it murabaha. They don't highlight the BBA thing. In Malaysia, we used to have these two different categories. We call it murabaha and BBA. This is in terms of the product name lah. When we first use the product, actually it's murabaha because the bank buy and then the bank sell at markup. But when initially we used by Bank Islam, is for home financing. And home financing you see long term, long tenure. So that's why they highlight on the BBA. Because it's like deferred payment because long tenure. So it then becomes a market practice lah. If long tenure, long term financing, they call it BBA. But if short term or medium term, they call it murabaha. This is in terms of the market practice in Malaysia last time. But then after some time, BBA has now been sort of made linked with Ba'al-Inah. Because some of the because BBA just like deferred payment, sometimes they use the contract for the deferred payment Ba'al-Inah. Sometimes they use murabaha. Sometimes they use tawaruk, but still the payment is deferred. BBA like general deferred payment. If long term, they call it BBA. If short term, they call murabaha. But something, the underlying contract that create the deferred payment can be Ba'al-Inah, can be tawaruk, can be murabaha. So it becomes like associated with Ba'al-Inah, because at that time, a lot of Malaysian BBA actually underlying is Ba'al-Inah. So because of that, some banks, if you use BBA, people think we are still using Ba'al-Inah. So they just use murabaha, whether long term, short term, or medium term, they still call it murabaha. So I think a lot of banks now, they no longer use BBA sangat lah. You go at legacy, the old transaction yang they have entered before 30 years tenure, you can still find BBA. So they don't use it for short term or medium term, just for long term. And it's a legacy name. Now, I think most of the Islamic bank for new product, they use murabaha only or commodity murabaha. Either murabaha or commodity murabaha, murabaha to the purchase order. So they no longer wanted to use BBA. I think most of the Islamic bank because of the association with Ba'al-Inah. I don't know, Alliance, they use BBA. Murabaha. Okay. Because they are one of the last bank who use BBA. Okay. Are you clear? Pak Sundara, okay? Okay. Yeah. So they use the old practice. Okay. Okay, so what are the general principles? Because as you can see in Murabaha, buying and selling contract, BBA also buying and selling contract with deferred payment. So it's still a sale and purchase contract. So there must be compliance with the requirement of sale purchase, there's exchange of two counter values, goods and price. Whether you do murabaha or you do BBA, there must be exchange of goods and price. You can do the price markup, or you can do the price deferred, and the effect of the transaction will be transfer of ownership between the seller and the buyer. And the transfer actually happens because of the contract. Once you conclude the buying and selling, transfer of ownership happens, and not necessarily dependent on the registration. Remember just now we talked about beneficial and legal. Once you buy, you have ownership. But from the legal perspective, until you register, you have beneficial ownership. Because legal transfer only after registered for certain classes of assets that requires registration. So once you get registration in your name, you get legal ownership. But from Islamic perspective, actually, milki, the ownership already transferred. Once you do the contract of buying and selling, you do ijab kabul, just like when you do marriage, ijab, aku nikahkan kamu dan kamu dan seorang lagi dah accept, the marriage is concluded. Halal, okay, for the marriage and whatnot. You may have not paid the mahar or whatever. You may have not, registered at the Majlis Agama Islam, whatever religious council. But the contract is valid already. The effect happens. The same here. So registration is more of formality, documentation, and evidence. Proof that you are the legal owner. Okay? Are you clear? Because a lot of assets require registration. Malaysia, like shares, securities, land, cars, requires registration. Indonesia, I don't know, do you require registration of the title for land? Because Malaysia, you follow the torrent system. And you have to register. You have land title, the same. Yeah, so requires registration as well. The same like securities also require registration. Have to execute the criminal transfer and whatnot. So the same with us. Uh-huh. Uh-huh. Oh, we have long leasehold. We have leasehold and also freehold. Freehold means essentially forever lah. You can have the ownership. For leasehold, it's like certain tenure, like 99 years. Yeah, we have also certain type of land like that, especially if the land located in certain location where there can be consideration of government acquiring for development or redevelopment. So they do it like leasehold. Maybe in the planning, they have certain land, maybe later want to be developed for other purposes. So they give only for leasehold, certain years. And after the tenure ends, you can actually apply for renewal. They call it TOL, TOL, temporary operationalization. The lawyer would know better. So that it's two categories. They have also Malay reserve land and whatnot. Indonesia or freehold. Freehold, yeah. Companies. Oh, yeah, yeah. 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 Okay. Malaysia, it depends on the type of the land. Even entity can hold freehold land. They can also have leasehold depending on the type of land rather than the type of the owner. Yeah. Okay. But we have also some entity for projects. Sometimes we have like concession rights. You have certain period where you can do development of the land, maybe like on BOT, BOT transfer, BOO arrangement, like on the concession arrangement. Okay. Okay. Now, Ba'alina, Malaysian know what Ba'alina is. Indonesia, I think although you are Shafi'i, but you are following the view which says that Ba'alina is not allowed, right? We don't allow. Maybe you learn from our experience. I mean, although in the Shafi'i school it's allowed, it's considered as valid, but then I think it's meant for exceptional situations. In Malaysia, It's not an exception anymore. It's just like a, very broad range for all types of things. Everything is ba'inah lah at that time. At one stage lah, I think in the 90s, especially 80s, 90s, and also some part of the 2000. I think starting 2010, 9 or 10, Bank Negara came out with a very clear resolution on Ba'alinah. Before that, they have met resolution, but it was construed wrongly by the industry. Because if you look at the view under the Shafi'i school, I just explain. But you know what Ba'alinah is, right? Ba'alinah? Do I have to explain what Ba'alinah is? You're not clear? No. So Ba'alinah actually where you have two sets of contract. First is buying and selling, the second is buying and selling. So there must be two legs, one buying and selling, the other one two legs of the transaction. One leg is cash, the other leg is deferred. Another picture, one is the two leg, one leg is cash, the other leg is deferred. And the parties are the same. Meaning, let's say Rahma, we are selling to Atika, and then Atika sells back to Rahma. Huh? One is cash, one is deferred. So the classical form, let's say Rahma, you are actually the one in need of money, and then you have Atika. You don't have money, you don't have assets. So how do you get money? Atika, nobody wants to lend you money. Nobody, because lending is charitable. Nobody wants to be charitable and lend you money. So one of the way of you to get money is you actually have to find an asset so that you can sell it to get money, right? So you go to Atika, and Atika agrees to sell you an asset. Because you don't have money, it has to be on credit, right? So Atika sells you an asset on credit. So you buy an asset on credit from Atika, maybe at the price of 1,000. But you need cash. So you sell it back to Atika for cash. So you sell it back maybe for 900. So this is cash. So Atika will pay you 900 cash. And you get to pay to Atika on deferred payment terms for the 1,000. Okay, so that is the original Ba'alinah. Okay. So we have this one. So I don't draw well, so I just draw orang lidi. You call it orang lidi. I don't know in Indonesia you call it what? In Malaysia we call it orang lidi, like lidi, you know. Okay. So this one is the person needing money. Okay. So he needs to get an asset, so he buys from this another person. So this is A and this is B. So A sells, let's say, a house to B. B sells the house to A on credit. So this is deferred on credit. So how much B is selling to A? For example, selling for $500,000. Okay. But actually A needs cash. So he gets the house. He has to pay on deferred payments, so he's paying over 20 years. Okay, about 500,000. But he needs cash, so he will sell it for cash. So this leg is deferred. This is from the perspective of A buys on credit, and then A sells to get cash. So B then pays to A, for example, 300,000. Okay, so at the end of the transaction, A gets cash. And then pays to B over 20 years, 500,000. Okay, so this is Ba'alinah. This is the first category. So you can see here, minus upon the one. So you have the customer here needing cash. So goes to the bank. So bank sells the bank's asset, let's say land, 150,000. Method of payment over 10 years, deferred payment. So then customer sells the same land back to the bank for cash, 100,000. Okay. So this is the first one, the original. The second one, actually, when the customer actually has asset. Customer has asset, something like refinancing, actually. The customer has asset, but he needs cash. So he sells his house land to the bank, 100,000 to get cash. But he actually needs to use the land. So he buys the land back or the house back from the bank at 150,000 on deferred payment, let's say over 10 years. So he sells to get cash 100,000 and he buys back on deferred. So he pays over 10 years 150,000 to the bank. So this is the second type of ma'alina, more like refinancing. Okay. So both actually, if you look, the controversy is actually the because the transaction, two parties, the same asset. So the assumption is actually they do buy and selling, not real. It's not genuine because they want to buy and sell. It's actually more like getting the cash and then paying at a higher price on deferred payment terms. Okay, so the scholars, majority do not allow for this because for one, they consider this as two sale in one. So although there are two legs, you then reverse buy and you can sell back. But two parties, same asset. So it's like two sale in one, two in one. And the Prophet prohibit bay'atan fi bay'ah. The Prophet prohibits the two sales in one. So this, according to those who don't allow, they say it is actually a kind of two sale in one, so not allowed. The other reason those majority do not allow, they consider it as hilah ataupun trick to circumvent prohibition of riba. So you cannot lend money 100 and ask the party to pay 150. So instead of lending, you do buying and selling. But effectively, if you take out the buying and selling, the buying and selling, it's like, in the example here, it's like A receiving 300 and paying back 500. So loan 200, pay back 500 with riba of 200,000, right? So to them it is like a legal trade or hilah for the riba. Okay? So that's why majority do not allow. So, but in Malaysia, like I said, we originally it was Bank Islam when they practice this. Their Sharia board allow following the Shafi'i school. But actually, if you study closely, the Shafi'i school is more like an exception. But when it becomes a full product across the board for everyone, it becomes like known already, right? And then not only that, they have this condition. When the Shafi'is allow this, they allow on the basis that the original assumption that parties are genuine. So when A sells to B, it's genuine that they wanted to buy and sell. And then maybe A needs the asset, A wants to buy back, it's genuine. So there shouldn't be any link between the first and the second. Must be standalone contract. But in practice, there is a link. So they describe the product, bank selling to the customer for the purpose of the customer selling it back to the bank. So it's like linking between the first and the second. So Bank Negara actually come up with, when Bank Negara, when Bank Islam practice, and then at that time no Syariah Council of Bank Negara yet. Syariah Council of Bank Negara only established in 1997 kan. 7 to 98. So much later lah, Bank Islam started 1982. So Bank Negara comes, the SAC look at practice and say, okay, we have to make it clear that if you want to make it valid, it has to follow the Shafi'i requirement. So they say finance is allowed as long as it follows, but must follow Shafi'i requirement. That's two separate contract, cannot be any connection and whatnot. But the market seems to be like interpret it like not correctly, and they just continue with what they do, but they don't put the connection in the actual buying and selling contract, but they put it in other places lah, in the letter of offer of facility, they put it in other places, in product disclosure sheet, and consider that as not in the contract as Syafi'i requires. So Bank Negara again, but they still put in the preamble the contract. And then Bank Negara comes up with another resolution, SAC comes with another resolution and say that the two contract must be stand alone. There shouldn't be any intercondition between the first contract and the second contract. Okay. Then after that resolution, still they construe it can still be put somewhere else, as long as not in the actual akad when I buy and sell for the purpose of you to sell it back to me. So all these different constructions. So that's why in 2009, if I remember correctly, as SC said, we have to put a stop to this because that's actually not compliant. So they have another ruling to make it very clear, give all any kind of indication, whether oral or verbal or in writing, indicating that it's intercondition is not allowed. And they even have a town hall session explain clearly to the bank management, the Sharia committee. This is what is meant. You cannot put it as well, even verbally, to indicate that you're going to make the customer bound to buy back or sell back to you. So then that's clear lah. But the Bank Negara allows the bank some grace period of 6 months and then extend it to another few months to ask them to change the way the documentation and whatnot, so that it will not be like two sales in one, or there's interlink between the first contract and the second contract. So when this happens, the banks will be practicing this, said that, if this is the case, we cannot force the customer to buy back from us or to sell back to us. So there is a risk, basically, whether we are stranded with the asset or our asset sold, we cannot get it back. So most of the bank, based on that risk assessment, say that no, we cannot continue. So they come up with another product. Most of them opted tawarruk. So they stop because they say if we cannot meet this condition, it's not doable. We don't want to take the risk. So that's why most of the banks stop, except like a few, like Alliance Bank, choose to still continue, although they don't meet any conditions in between. But now I think they have stopped also because of other risks, especially asset under construction and whatnot. So those are the history. So we see that a lot of practice of ba'inah in Malaysia has been discontinued. Whatever that is still there, maybe legacy for the long-term financing, which has not yet matured. Okay? Are you clear now about BALI now? Okay, so Indonesia, from the beginning, said no. Okay. So the other one that is now opted for is tawarruk. And tawarruk actually is similar like this one juga. Because this party don't have asset, don't have money. Nobody wants to lend them money. So what they do, they still buy on credit. But instead of selling back to the person who sells, in tawarruk, we sell to a third party. So for tawarruk, A here sells to C instead of selling it back to B. So tawarruk is this form. So Zaid buys from Umar on deferred payment and then sells to Amru to get cash. So because of third party there, is it hilah or not hilah? Is it genuine or not genuine? So majority of scholars consider this as like genuine, just like the normal trade, right? The trader will just buy from supplier, maybe he pays on credit also, and then sells to his customer to get cash, and then he use that money to pay the supplier and things like that. So it looks like a normal trade. So that's why majority consider this as a valid contract. It's not a hilah anymore. Okay. But the problem is when they do tawarruk as a financial instrument, with the bank coming in as a financial intermediary, which they call it commodity murabahah, okay, come tawarruk, because this structure actually is a combination of murabahah and tawarruk. So from the financier perspective, the financier is doing murabahah. Because here the financier buys commodity, let's say from crude palm oil trader A for cash and spot for cash basis, spot basis. So let's say the bank buys 10 million ringgit worth of CPO from commodity trader A. And then bank sells the same commodity to the customer on murabahah. Right? So that's normal murabahah. Buy on credit, buy for cash, and then sell on markup and on credit to the customer. So bank is doing murabahah. So the customer is actually doing tawarruk. Customer buy on credit from the bank, 10 million plus markup. Customer needs cash. Customer sell to another party, third party, not the bank. Let's say commodity trader B, to get cash of 10 million. Okay, so customer is doing tawarruk lah. Buy on credit and sell to third party to get cash. Bank doing murabahah, buy at cost, sell at markup. Is it clear? This commodity murabahah come tawarruk, associated tawarruk. Bank perspective is murabahah, customer perspective is tawarruk. Yes. Possibility, yeah. It depends on the platform. For Malaysia, we are using Bursa Suasila, BISAS. So basically, BISAS have the system of random placement of those assets. So when they buy, so they actually match the order of the bank here with the C2O available by the traders registered with Bursa Malaysia. So they match. But when the bank sells to customer then will sell. Here normally they will sell to BMIS, the Bursa itself, because Bursa then will buy whatever is being sold, and then Bursa will open it randomly to any trader who wants to buy. So it's because it's random, it's difficult to see whether it goes back to the original seller or not. And the randomized feature actually convinced the Sharia board of Bursa to say that, well, it fulfills that requirement. It's not like arranged to be going back. Because what is not allowed is like you have like enough but with more chain, you know. A sells to B, B sells to C, C sells to D, D sells to A again. So then a full cycle is like still by Alina. So this one, because it's randomized, so the chain is sort of like no longer there lah. Because sometimes maybe if it goes back to originally not necessarily the same amount, like they buy 10 million, maybe from the 10 million that you sell, 5 goes to this seller, 2 goes to another one, and then maybe that one, the one that goes back to the original, maybe it's about worth 3 million only, because their demand and supply of the supplier can be variant throughout the day, or maybe the next day. Maybe they're not buying today, maybe, they are buying the day after, or something like that. Because it depends also on their need to supply to other clients. Because these are real CPO traders, so they have their own stock. They have stock that is available for sale. They have stock that they need to deliver to their clients. Because
actually the assets that have been held by the customers from the bank is resell to another same party that sell his
original.
asset.
Oh, which market are you using? Platform for commodity?
Yeah, I think that is my understanding so far. But if I take a look at your field here,
must be different. This is the requirement of the Sharia advisor. So and because they do randomize, so it seems like it's sort of
basically based on the system of
yeah. So if you have only one supplier, they will not allow. Basically, there are sometimes some commodity. Actually, the supplier is not that many, maybe 1 or 2. So they cannot really randomize. So they cannot accept this. So they need to have kind of commodity where there are many suppliers, at least 3. So when they randomize, then it's not, I mean, we don't know whether it goes back, but it's not arranged to go back to any particular seller. Yeah. Okay. So, yeah. So this was approved by, and there are quite a number. I think even other foreign banks like KK, Sharaji, Malaysia, they always do the audit. And even Bursa also do audit. They will go to the tanks, to the supplier, to check. So they know every time they know this actually which are the one already sold, and they do the audit. And even the Sharia advisor of the bank who are participating, the Sharia advisor wants to check availability of the crude palm oil and everything. So they go to the site and check. they're satisfied that the requirements are complete, including the randomization. So there are various platforms. We have this one in Malaysia, Bursa. We have also other things like AbleIS. They are using also CPO and CPO byproducts. They have their own Shah advisor. So I don't know really what their system is, but the requirement I think will be the same. How they do the back end to make sure that the asset actually is not directly going back. Yeah, and we have also Sedania. They're using airtime as the asset. To be also. And also global platform, we have IFIS, we have London Method Exchange, a lot of other provider for transactions. In Indonesia, do you have Tawaruk or do you allow Tawaruk or you don't allow? Limited.
But still doesn't impact.
Oh, so how do you do your cash financing then?
Okay, but actually we don't have. We are using Sarah.
For cash financing?
Yeah.
How do you?
Combination between so we understand.
But not asset financing, this is cash financing, just to get cash. We have to look at the actual detail, because normally for but when you sell to the bank, you get the cash. Initially, when you sell to the bank, where do you get the cash? Where do you sell to the bank to get the cash, and then bank become co-owner with you. Maybe But you need to have an asset to begin with. For customer who don't have any asset, so you cannot get. Okay. Yeah. 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 Okay. Yeah, that's correct. So this one is just like simplified in terms of the contracting parties, like the bank buys and sells to customer. But in operationalization of that transaction, because platforms, they require people registered with the platform in order to do the trading on the platform. So most of the time, the customer are not registered with Bursa to do trading on Bursas. So the bank are normally the registered trader as well. So therefore, when the bank buys of the customer and then bank sells to the customer the commodity, this is outside of Bursas. But when the customer wants to sell back to another trader on Bursas, the customer cannot because the customer is not a registered trader. So this is where the customer would normally appoint the bank as the agent. So then the customer goes to the bank, tells the bank, I need this financing 10 million. So the bank will ask the customer to appoint the bank as the agent. Basically, the customer will promise to buy the asset from the bank under Rabiah, and then appoint the bank as the agent to sell to the third party. So this is what happens normally agency. So this one, I think SAC Bank Negara allows, and most of the other Sharia board of the Islamic Bank Malaysia allow. But we know that there are some Islamic Bank Malaysia who do not allow for this agency back to the bank, because they say that if you back to the bank, then the netting off and whatnot. It seems like the bank not really receiving money from the third party to pay to the customer. So they want to see it really separate. Okay. So I think Arajhi, I don't know quick finance, but I know Arajhi says you cannot appoint the bank as agent. You can appoint another agent, but not the same bank who's actually doing the container. So you get maybe another bank who's also eligible to be the agent to sell, because they want to see the flow of money. Oh yeah, at the back when they want to sell back. Yeah. No, because they have to use, kalau BISAS lah, BISAS you have to use the platform. So yeah, normally the bank will sell it back to BISAS, to BINIS, which is Bursa Malaysia Islamic Market. So then BINIS will open it under the randomized system. Yeah, that's how it works. So the yeah, because of the netting off. Because if you look here, when the bank buys from trader A, the bank should have paid 10 million, right? And then the bank sells to customer 10 million and profit over 2 years, for example. So customer sells to trader B should have paid to the customer 10 million. So because normally they do this on the same day, okay? So what Bisa did, actually they do the setting off feature. So what the bank should have paid to trader A is netted off with what trader B will have to pay to the bank from BIMIS. What BIMIS have to pay to the bank. So bank has to actually pay to trader A 10 million. But when bank on behalf of the customer sell to trader B, sell to BIMIS, and then BIMIS randomized to trader B, BIMIS should pay to the customer, to the bank on behalf of the customer 10 million. So instead of the money actually flowing, so the BIMIS say the one that you have to pay to us 10 million, we net off with the one that you have to pay you. So then the bank will then pay that 10 million from the bank's money to the customer. Faham tak? Tak, itulah net off tu tadi. It's on BISAS. Okay. Sekejap, I will just draw it here. Okay, so we have CPO A kan, trader A. So ni bank. Okay, we have bank here. And then we have customer. Okay. So bank buys from CPO, trader A, and then bank should have paid 10 million kan. Within the day lah. But then, because the bank sold to the customer on Rabiah this one. Rabiah. Okay, 11 million. So then the bank on behalf of the customer bank will be wakil kan. The bank on behalf of the customer kan sells to BIMIS. On sale here, because to make it smooth, normally it's BIMIS who's going to buy first, and then BIMIS will randomize lah. Okay. So sells to BIMIS. So by right, BIMIS after selling to here, BIMIS should pay to the bank 10 million, right? And the bank, basically bank on behalf of the customer lah. Now, since the bank should pay here 10 million through BIMIS, so BIMIS said, instead of you pay 10 million and then I pay you 10 million, we net off. So the bank, what the bank should have paid here through CPO, the bank will then pay to the customer. So this one, according to some share scholars, as now like actually they said like it looks very arranged, very they call it organized tabarruk or tabarruk munazam. Like on paper you pay here, pay there, but at the end of the day, it's your money that you pay to the customer. So it's like the bank lend, quote unquote lending to the customer, the customer pay you 11 million. So whatever that happens is just paper trail lah, they say. So they put one, the agent here, when the customer gets the commodity, so you have another bank here. So this bank will pay, and then Pusat pay here. Okay. And then the bank here pays here. So then you give it to the customer. So nampak lah, they are stand alone. Why is it so hard for them to actually use this one? Okay, to ask the banks and our banker also here.
sometimes it's still hard for them like to move away from
Indonesia, they don't have. Mhm.
kalau tadi tawar ada dua orang kalau satu minggu kalau kita dia tawar kalau kan yang dua satu kita tawar apa apa di sini juga ada di sini dulu kita kalau bank jadi negara negara itu kita tahu
Yeah, one of the reasons is because the bank is being licensed as a bank, as a financial institution, so they have the risk framework, they have risk framework and risk management framework and whatnot. So, like Ustaz Rawa said, bank don't want to take the risk if they do other contracts. Actually, there are some products that they can go away with tawaruk. For example, if they do other than cash financing, like asset financing, the bank can always buy the house and then sell. If the house ada construction, they can do istisna and then do the back-to-back istisna ke apa. But then the banks don't want to have like differentiation. Ready house dengan house under construction, they want to use one product only. Yeah, they still use tawaruk. Actually, they can do salam if they want. Actually, yeah. Because bank ni kan, because if you look at conventional, when they compete with conventional, they have only one contract, which is loan. This is one contract loan, and then satu jenis saja je, loan aja all throughout. So documentation very standard, semua principle, they know everything, so they comfortable kat situ. So when Islamic, they want to choose, kalau boleh dia nak one contract lah. Dia tawaruk boleh guna macam-macam. You know, you can use for cash financing, asset financing, apa-apa pun you can use tawaruk. But if you do like ikut different product, nanti for asset yang complete, you do murabaha. Asset and construction, you do istisna. For agriculture, you salam. For apa ni, documentation dan bayar lawyer pun different set of documents, cost lagi kan. And then staff pun you have to train. Nanti staff confused, asset construction, she uses istisna, suddenly they use a document for murabaha. You know, so there are a lot of things yang bank rasa risiko to them. But actually, ada kalau use leasing pula, you can use leasing also for asset financing and whatnot. Bank has to take risk of the asset. Dia ada asset risk plus credit risk compared to yang normal murabaha. So these are the things yang most being banks, they are not familiar with handling multiple punya ni. They just want to be dealing with credit risk, you know, like the normal conventional banks. Their staff will train to handle credit risk other than the other types of risk. So that's why they are complacent until Bank Negara said, no, we just do, you know, we can still do it, we just do. So that's why now I think, as you know, Bank Negara will say that we want to limit tawaruk only when, like you said, treasury, when you cannot have any other alternatives. But if you can, like asset financing, you can use musyarakat makanan kisah, you can use leasing, you can use whatever. So there is a policy move lah. Agent juga. It's not like agency is not allowed, because we are always good at making use of whatever is allowed. Agency is allowed. Murabaha is allowed. So if you can appoint an agent to buy, why must the bank go and buy on their own? They can just ask the customer to be the agent. Yeah, because there is a lot of wakalah. Although wakalah is supporting contract, but it actually very convenient for the bank to make the customer as an agent to do all those things now, to buy asset and what. Sometimes it's the customer appointing the bank, the agent to do everything also. Like for deposit product, it's the customer appointing the bank as agent to do everything. Yeah, easy one. Yeah. That's the mentality lah. It's the easy product. Just like last time, why they use everything is by enough. Because for them, it's easy and then just one contract, one structure. Easy.
How is the reception or how is the roll out of the product lah? Do the industry memang well prepared to actually adapt to things like that lah maksudnya like I'm just curious because you said awal you actually invest in
Because you want to develop your product. Basically, no, you cannot develop your product much. That's why there's still 7%, 7% getting effect.
what is it? And then therefore in the business and then with the cash, the market cap is still below 7% of
Still cannot grow that much lah, basically. Because like you said also, nak explain to customer. But actually it's good lah. Because customer nanti kata, why Islamic and conventional the same? Now you have to explain, they can see, oh, it's different actually. But it's a long route lah, very hard. Kalau Malaysia pun, if they do tawarruk, they can use leverage back office, conventional and Islamic. Same back office. Tapi ada risau sometimes SNC, syarat non-compliant because the back office don't really know the sharia requirements, so sometimes they do mistakes.
this tawar is only pasal social practice in Middle East. I always thought in Middle East this is designed Malaysia for practicing this.
Ba'inah, the practices for Ba'inah.
But tawar example for example in Saudi Arabia, Kuwait, Bahrain.
They're using tawarruk.
This like so I thought they are condemning Malaysia for using that. They will do that lah. Tapi dia pun
They do tawarruk. But of course, Majma' Fiqh says no for the tawarruk munazam, but they it's the munazam issue. That's why they put that condition like Saudi, they say agency must be separate. So they want to make sure that the fact that, so basically they say is we are making it more real, not too fictitious. Yeah, we allow because we can see the training actually happen. But some people are still not comfortable with the noting of this now because it's more like you cannot make a condition that that the customer cannot take delivery. The customer must have the option to be able to take delivery. That's one requirement to make the transaction real. So kalau macam LME, London Metal Exchange, last time they cannot take delivery. So that's why there are some who have some concerns about LME. But I think after that, I don't know, maybe they have adjusted. Idea? The DD cap. Certain commodity. Because I think that one, because they have, because they use metal, some metal, the precious metal, you cannot really view because of security reasons, because the vault, the moment you open the vault, there would be repercussions in terms of the value and whatever insurance and the coverage for protection. So they don't allow for the Sharia audit to view. So they have some issue the other day with idea like that they cannot confirm because of existence of the asset. But they said it's okay, that the assets are there, just that you cannot have permission to view because of these are some precious metals, only for precious metal. Itulah. Because I don't follow clearly, but closely what actually happened. But the issue is that kan. Oh. Human. For security lah actually, for security. So they arrange specifically, I think, because of all this concern by the show on board. So if you get somebody trusted, like Praznan looking at it, then basically you can confirm lah. It's not enough. Boleh pergi tengok. Nak makan tu boleh. The CPO. But this one is crude, you know. If you taste it, you may have stomachache lah. Crude one, not the pure one, not the refined. Operation, yeah. The balance tu yang they are still searching. Industry is still searching because it becomes, one is actually financial intermediation. If you look at the old time, it's done like normal trade, no financial intermediation. It's like direct buyer seller. So it's like very clear lah. You want to buy, you go buy and sell. You want to lease, you go to sell. But this one, you go to the bank to get money, and then the bank yang actually try to fit with your needs too. Whether you can go for leasing ke, you can go for buying selling ke, or pure cash financing ke apa kan. So because of the financial intermediation, dia tak ada masa zaman dulu, dia tak ada financial intermediation. So now we have financial intermediation, and then customer punya exposure pun, customer dah biasa deal with conventional. So they ada customer experience with conventional. You just go once, you get your loan, and then that's it lah. But customer experience kalau pergi SME bank, because they have to understand and you have to explain. So not all the customer are actually Islamic kan. Nampak. Tengok muka Rafiqah je rasa kesal. Tak ada senyum. Okay. So I think it takes two to tango lah. So customer pun kena macam tu. Because we have done this, I mean there are many banks that have done the survey. Kalau kat Malaysia lah, actually those who really want Islamic actually sikit je. What they want actually is value for money, and then bottom line, money lebih menguntungkan actually. So and then they are offering like parallel macam tu kan. So customer tu kalau susah, they don't want to go for conventional kan. So we are not living in an ideal world lah. So yang really nak Islamic tu, they don't mind lah, susah pun tak apa. For them yang penting halal, you know. Then it's okay. But those yang macam I tak kisah Islamic ke apa, because like most of the Islamic banks kat Malaysia, dia dah buat Islamic first policy kan. So first, you offer Islamic. Tapi kalau customer yang tak bother kan, then what they look is actually convenience for them and then value for money. So if it's difficult, although you offer me Islamic first, I don't want it to be difficult, I go for convention. So that's the thing lah, the balance between, because we are not having an ideal consumer base. Consumer kita memang really faham, dia really non-Islamic, I don't think we have that kind of a problem. But based on survey, actually, it's not like that. IFIS pun we know lah, syariah fund, berapa persen je syariah fund. Although we have many Muslim contributors to our employee saving fund, but those who opted for syariah fund is very minimal. Sebab tapi malas, but then the return on Islamic pun still lower slightly lah. But this year is good lah. 4 by conversion 5.5. But 66% of the tu tak halal tau for the conventional actually. 66% is non-halal. So that's not avoiding obligations. So I think we are 12:30. So let me see, what can I do? I think we are done with this one. I think salam also we have basically covered already based on the question. Thank you, Ms. Now. It is not actually asset under construction. It's like salam also. Can we just take like a few more minutes here just to finish this? So the assets still under construction, but the main thing that make it in terms of the uncertainty to mitigate it is actually the specification. Because you have to construct based on specification. So customer would know that it should be constructed based on the specification. If not compliant, then the customer has the right to reject. If there is actually delay in delivery, also customer has a right to get compensated for the delay. Things like that. Okay, so what is important in salam is in istisna is actually quite specification, and then time of delivery, mode of delivery need to be specified clearly. So this is suitable for asset under construction. I think this one I need to explain because there will be a lot of discussion on dying. So ba'ad dying actually is sale of debt or receivable. And in terms of legitimacy, actually we have to look at, I'll just show to you directly the slide. Who are we selling the debt to? Whether you're selling the debt to the debtor itself or creditor is selling the debt to a third party. That would determine the discussion whether it's allowed or not. And secondly, how you're selling the debt. Whether you're selling the debt at par value of the debt or you're selling the debt at a different price, whether premium or discount. Normally discount. Okay. So if you look at the view of the scholars, basically, if you are selling the debt to the debtor himself, creditor selling debt to debtor, basically the debtor is redeeming the debt from the creditor. Majority of the scholars would say it's okay lah. It's more like redemption of the debt or payment or settlement of the debt. Okay. But if you are selling the debt to third party, the one underneath, debt being sold to third party, this is where the controversy is lah. Okay. Majority says it's not permissible to sell the debt to third party. Why? The main reason why they consider sale of debt to third party is not permissible is because they consider this as a kind of gharar. Because receivables, the seller has not yet received the money from the debtor. Creditor not received the money from the debtor yet, but sold already to the third party. So what if the debtor did not pay? If you remember the subprime mortgage crisis, the debtor do not pay on their mortgages. So then the buyer of the securitized debt, which is actually the sale of debt, essentially, could not get their money back. Basically, they could not get the money. Basically, they lost the money. So that's why majority says sale of debt is not permissible because of gharar element. Because if debt is not paid, then there is a risk on the buyer of the debt. Okay. But there are some who allow, but with condition. The condition actually is to mitigate the uncertainty with regards to delivery or recovery of the receivables. So Shafi'is, some Shafi'is like Subki and Nawawi, they put three conditions. And then some others say we are only allowed for confirmed debt, meaning that it's a debt which is confirmed, you have a right of claim. So even if the original creditor cannot get payment yet, the buyer of the debt can still enforce and claim the debt from the debtor. So this right of claim to the debt is strong enough to allow remedy to the buyer of the debt. Okay, the Maliki also allowed with 8 conditions. Ibn Qayyim also allowed with conditions. Fiqh Academy, these are all classical view. The modern contemporary view will be given by, is the one given by Fiqh Academy, Majma' Fiqh. They allow debtor or third party to buy, but must observe the rules on riba and gharar. So gharar means that you have to follow like just now established debt, no claim by third parties, other parties to the debt, the same debt. So you have to actually have all these conditions to avoid gharar, and then also riba. Why the condition by the Majma' Fiqh also mention riba? Because they consider that as ribawi. They consider right to the receivable as equivalent to money. So you sell the debt, you're selling money for money. So you cannot have any discount or any premium. If the debt value is 1 trillion rupiah, you can only sell for 1 trillion rupiah. You do discount or whatever, it is actually like riba al-fard already. Difference in the exchange of two ribawi item of same category. But if you look at the Malaysian Sharia opinion, they consider, yeah, you can have to avoid gharar, but in terms of riba, they don't consider sale of the debt itself as ribawi. It's a right to receive money in the future, but as of now, it's a right. It's hak mali, and it is asset on its own. Just like you mentioned about the time to kilometer, it's a right to receive the payment for the use of the service in the future, right? But it's not yet money. It's actually just a right to something of value. So they consider it's a right to receive the receivable as a right of value. You can sell it whatever price that you want. Uh, isu dia sebenarnya dia lebih pada Maliki tau yang benarkan dai ni. Syafi'i tu yang mengenalkan sikit ni, yang majoriti tak benarkan. Ba'adan bisilak tu adalah yang requirement dalam mazhab ni lebih kepada untuk mengelakkan gharar. Yang ba'adan bisilak tu untuk mengelakkan riba isu. Ada, memang ada bincang, especially lately, sebenarnya isu ba'adan ni lebih dibincangkan oleh SSC di SC, British Commission, sebab dia lebih pada securitization of debt. Di bank negara, kita ada bincang sikit lah, tapi tak banyak. Tapi baru ni bila dia nak buat, they wanted to do the alternative for the credit card, they was suggested a structure using ba'adan. So that triggered a more detailed review of ba'adan principle at bank negara level, because SC we have their own ni. So if we're looking back, but the main issue here, I think the one on gharar, we understand. Okay. I mean, dia kena tengok where is the line lah. So actually, to avoid the controversy, actually, we are looking at ba'adan bisilak. So we are looking back at the view that allow and see the limits there. I think more on the Maliki school lah. Yeah, no longer Syafi'i, Maliki, and also the text that on the ba'adan issue. You can check. Actually, I think to be on the safe side, it's better to go for ba'adan bisilak because we avoid the issue. But they don't do it by the third lah. It's always prospective, not retrospective effect. That but enough, so we don't have retrospective. It's prospective ke depan. Yeah. Okay. So basically, if you look at the debt discounting, if you go to say that done is actually ribawi, like money for money, you cannot do the debt discounting. But in Malaysia, we allow for debt discounting because we consider the dime as not money yet. It's just a right to receive money in the future. So it is have something of value on its own, and you can buy and sell at willing buyer, willing seller. And on the debt discounting, they support it with some hadith, basically. And if you look at the views of the scholars, majority says that you can give discounting if the debt has matured, but if not yet matured, it's not permissible. But the view of Ibn Abbas, specifically, he mentioned that it is permissible because it actually allows for lessening the debt, the burden on the debt. So these are the hadiths that I'm referring to, the hadith on with regards to Bani Nadir, where the Prophet advised the people to give discount in order to ask for early payment. Because in the case of Bani Nadir, they have that obligation between the Jews of Bani Nadir and the Muslim. And as you know, they have committed treason. They have all the Jews have signed treaty with the Prophet SAW. But one by one, the tribes actually commit treason. They breach the treaty. And Bani Nadir is one of that. And because of that, they are asked to leave Medina. They have to leave Medina because they have breached the treaty and they become a security threat to the Muslims. So when they were leaving, the Muslims tell the Prophet that they are that obligation between them and the Jews. So the Prophet said, yeah, we need to settle. Because they're leaving, we need to settle earlier than original time. So the Prophet asked for discounting, discount the debt. But if you look at the specific case, it's a discount between the creditor to the debtor, not the third party. The second hadith is when Ka'ab here and Ibn Abi Hadrat, there's a debt between them, already matured, the party is not paying. So the Prophet asked the creditor to give discount. So the person said he already gave discount. So the Prophet asked the debtor to pay. So this is giving discount when the debt is matured is clear-cut allowed because this hadith is authentic. For this one, prior to maturity, because the authenticity of the hadith is being disputed. So it's not strong, so they don't rely on that. They allow for debt discounting for third party. And again, they say it's between creditor and debtor, even if it's authentic between creditor and debtor, not extended to creditor giving discount to third party. So the argument for those who do not allow for discounting is quite strong actually. So that's why in Malaysia, there's actually a move towards selling the debt with the sila, with the commodity to avoid selling money for money. We are selling the debt and the payment is in the form of commodity. So it's no longer selling money for money, selling money for commodity. So you can sell willing buyer, willing seller. You can sell as you wish, but still has to be hand to hand spot transaction. Okay. So I think we'll end there for Ma'adan. So we are just finished with sale. We don't have time to go for leasing and also for for the Musyarakah and Mudarabah. We're continuing on the Islamic banking products. We're going to start the banking next session. The break. We're going to look at the corporate. So the talking points. Products, financing, and so basically, consumer banking is also known as retail banking, more for the retail customers of, and we also call it to businesses. That's the difference between consumer banking and targeting people like you and me. Our basically, it facilitates individual consumers to manage their money, access to credit, to deposit their money. And the services offered include our current account known as our keeping, and also have to get home, personal loans, credit cards, well as certificates, which certificates of deposits. Speaker problem, right? So now for personal banking, consumer banking, they also broaden the product offering, where they also allow consumers to do. So they have wealth management, brokerage accounts, private banking. Uh, this is just a brief comparison between retail or consumer as opposed to corporate banking. For retail, it provides to individual consumers, general public, including high net worth individuals. Scope of product and services is actually more retail and also customer oriented. Whereas for corporate banking, it provides financial services to institutions, corporations, small or large companies, more for scope of product and services is like more like business rates and for operations. So these are actually the main consumer or retail banking products, and we're going to cover some of that. Hopefully, able to finish most, if not all. So we have for deposit and investment, we have current account, saving account for people with money that they can actually keep for the periods. You can go for fixed deposits. We can have investment account. For Islamic, we can match investment account with individual user of the funds. Malaysia, we have the investment account platform. Then we have certificates of deposit, which allow for deposits to be kept. At the same time, it has some liquidity feature where the depositor can actually sell off the certificates to get immediate cash before maturity of that certificate. Then for financing product, generally we set financing like motor car and also cash financing, normal credit card and personal financing. So for Sharia solutions and also concerns with regards to national solutions for retail banking, most of the time because of the element of riba, like if you look at the deposits taken by conventional bank, they take the money based on loan. From Islamic perspective, we call it qard, and then they pay interest, so there's a riba element. Same for loan given, it's a loan contract given by the bank to the customer. Bank charges riba or interest. Even conventional credit card is about when you use the credit card, it's the bank lending to you, and then they also charge interest charges. Then if you have late payment, there will be compounded interest. And then if you look at conventional forwards or forex, forward there's riba also in the exchange because there is delay in the delivery. And basically riba nasi'ah lah. Either riba riba in loan and also riba nasi'ah. So that's basically the main problem. So what are the Sharia compliance solutions for retail banking? So we have Islamic deposit and Islamic investment accounts. We have Islamic asset financing and Islamic cash financing. So we start with deposit and investment. So basically, if you look at deposit products, we have actually different categories for the consumer. We have for the trade and also for the bank. The bank where bank deposit with each other. Okay, so basically we look at this difference or comparative comparison table. So if you look at the counterparty, who are the parties for retail deposit? It could be individuals like you and me. We put our deposit at the. If you look at corporates, the counterparty would be the corporations, company opening bank accounts. So the bank. If you look at interbank deposit, it's the financial institution. So Maybank put money in Bank Islam. Bank Muamalat put money in Bank Mandiri, for example. It's interbank. Of the amount, normally for retail, smaller amount. For corporates, will be larger, and for interbank also large amounts between the banks. They place money with each other. In terms of profit rates for retail, normally it's like a package. It's non-negotiable. What the bank offered, you take it. Okay, you don't like, you go to another bank, see what the bank's rates are. Okay? But if you look at corporate, can be negotiable. So you can negotiate with the bank how long you're going to keep, how much rate the bank can give as a best offer to you. And the same for interbank. It's basically the rate between them. In terms of for the visits, you can put like 1 month, or for the 3 months, or went up to 5 years. For corporate deposits, actually, it can be like very short tenure, like overnight, 1 year. The same goes for interbank. You can do overnight 1 year. And the market segment for retail would be retail, consumer, or sometimes SME as well, where to do sole entrepreneurs. For corporate, more like wholesale, interbank also wholesale. One-off transaction for retail normally at branches. Now we have a lot of online transactions. For corporate, normally by treasury and branches, and for interbank will be done by the treasury. Regulatory treatment for retail is considered as stable deposit. For corporate and interbank, considered as non-stable deposit. Those are basically the comparison. Now, I don't know about Indonesia, but in Malaysia, we have differentiation between deposit and investment. So the definition is different, and this actually happens after our Islamic Financial Services Act 2013. Before that, deposit and investment not really demarcated, they're treated like similar, although you call it investment, but it's deemed to be specified, included under the meaning of deposit, meaning that capital is guaranteed. But after IFSA, Islamic Financial Services Act 2013, they actually make a definition that distinguishes between deposit and investment. And because of investment, normally they use mudarabah contract, and mudarabah contract, no guarantee on the principal, no guarantee on the capital. That would be different from, let's say, a current account, saving account, where you use wadi'ah, dhamanah, or court contract. Capital and also the capital or principal is it. There's no, cannot promise any profit. Okay, so they have two different behaviors. So that's why the regulator feels that we need to properly define, distinguish between the two. So under IFSA, the definition says that Islamic deposit is principal, whereas Islamic investment is principal non-guaranteed. It's a clear-cut differentiation. So because of that, if you have mudarabah contract or wakalah contract for the account, then it does not qualify as deposit account, more of investment account, because and mudarabah, there's no principal fee. And because of that, you look at in Malaysia, we have the deposit insurance corporation, Perbadanan Insurance Deposit Malaysia, PIDM. So this is only applicable for deposit. Like you look at the name, it's guaranteed for deposit only. So for the deposits where the principal is guaranteed, then you get coverage under the deposit institution. But if you look at the investment account, because it's non-principal guaranteed, not be covered by PIDM. I think in Indonesia you have equivalent of actually PIDM provides deposit insurance for Islamic. They call it under kafalah principle. So they also provide for conventional insurance as well, using normal insurance principles. Okay. Basically, if you look at the Islamic retail deposit and investment product, there are actually a variety of alternatives. And in terms of Sharia opinion on the acceptability of these alternatives types of deposits and investment product, some are agreed upon by the scholars, but some perhaps because they're using, like some principles which may be controversy, like now or Ba'adain. So this would be more perhaps maybe allowed maybe in Malaysia but not in other. Okay. So for deposit, we have qard or wadi'ah dhamanah. In some places, they just say it's based on qard. In Malaysia, we used to have like wadi'ah dhamanah as well. But in effect, actually, wadi'ah dhamanah work very much like qard. Because in wadi'ah dhamanah, you safekeep, but the custodian, the bank as the custodian, give a guarantee. safekeeping, because normally if you do wadiah, it's yet amanah, meaning there's trust only, so you don't guarantee. But if you do ya dhamana, guaranteed safe custody, there's a guarantee given by the custodian, which is the bank. So when you do wadiah ya dhamana, where you guarantee, then the custodian, because of he give guarantee, so as a to commensurate that, the custodian can use the money. So you can use the money, but you guarantee. So it's just like a loan. You can use the money, but you have to pay back the principal. So if you do use wadiah ya dhamana, of course, the actual is similar. Okay? Because if you do yat amanah by trust, as a trustee, you cannot use the money. Safe keep it. Okay. So that's the difference. Generally, the bank wants to use the money, so that's why they use and they give guarantee. So it's effectively similar like court, and the Sharia principle applicable will be similar like court. Basically, just guarantee the capital and principal. You cannot promise any additional return. As under court, kullu qardin jara naf'an fahuwa riba. Every court which generate additional return is riba. So the same wadiah ya dhamana, because you guarantee the capital, no risk taken by the depositor. So you cannot guarantee or you cannot promise any return to the depositor. So it's like no return. Just for deposit, but there's no return given. However, in practice, some Islamic banks do like hibah based on the bank's discretion to their depositor without promising anything. If they want, they can give some kind of hibah to the depositor. So sometimes when you look at your account, they put the some amount, okay, but they don't promise. There's no obligation to pay. Purely the goodwill of the bank if they want to pay. Then we have reverse commodity murabaha, negotiable Islamic debt certificates or NIDC. So this the reverse commodity murabaha, yeah, for those who allow for tawarruk, that will be permissible for them. But for NIDC, some NIDC used to use ba'al-inah, okay, so that would not be country who do not allow for ba'inah. But now we also have NIDC using tawarruk as well. Okay. For investment, I think generally this would be okay, like mudarabah account, wakalah placement. This would be generally acceptable because it's no guarantee on principal, no guarantee on profit. For Islamic repo, it depends on the structure. Some structure may be out by all, but some structure may should. Explain later, is actually meant for overnight deposit or even longer term deposits, where it involves a basket of securities being sold between the parties. Okay. Then we have also Islamic structured product, which is structured as a deposit product. I know that the Prof Haznan will be also talking about structured product, but Islamic structured product, some are structured as deposit. So it will be under Malaysia under regulatory purview of Bank Negara lah. We structure the Islamic structured product as an investment product that will fall under the Securities Commission jurisdiction and regulatory purview. So there's two categories lah of the structured product. Some are classified as deposit, some are classified investment or capital market product. So these are actually the Islamic deposit and investment products that are available. So we can have for current and saving account using normally for CASA because it's very simple. Withdrawal at any time, okay? Free withdrawal at any time. So that would normally be called wadiah ya dhamana for CASA products, for current account, saving account. For investment account, normally they use mudarabah or wakalah. Basically wakalah bil istismar. And we have an IDC. In the past, in Malaysia, we normally use ba'al-inah. And the negotiability, when you trade with the certificates of deposit, that is ba'al-inah. Because the ba'al-inah creates the debt between the depositor and the bank. And then when the depositor trade with the certificates, they're trading the debt under the ba'al-inah transaction. But later, I think now they have also an IDC using tawarruk. So you create the indebtedness through the tawarruk transaction, the murabahah leg, and then you securitize it in the form of the certificates of deposit. So when you trade with the certificates of deposit, there will still be ba'adain. Then we have commodity murabahah, deposit using murabahah and tabarruk. So it's called reverse because now it's not the bank giving the financing. In reverse commodity murabahah, it's the customer giving financing to the bank via the deposit instrument. Islamic repo, they use SBBA, sale and buyback arrangement, and some parties also use CCM, collateralized commodity murabahah. And then for Islamic structured product, there are multiple contract combination depending on the arrangement. It's quite customized. Okay, now I will show to you the first type of Islamic deposit product using wadi'ah, yad damanah or qard. So basically, it's quite simple. The customer goes to the bank, opens a saving account or current account. So it's normally called wadi'ah account or a saving account, Islamic saving account. So if it's wadi'ah yad damanah, meaning the bank would guarantee, you can see here, the bank guarantees the deposited amount. So by giving the guarantee, the bank has the benefit of using the deposit for the bank's purposes, maybe financing and whatever investment that the bank do. But basically what the bank actually tells the customer, whenever you need the money is there, I will replace the money for you after using it, right? So it's effectively like car as well. And then if the profit is the utilization of the money by the bank is profitable, then you can see that the bank can actually take the whole profit because it's owned by the bank, because it's like court, it's like what they give guarantee, they can use, they can keep the profit. But if the bank wants, the bank may at the bank's sole discretion give some kind of hibah to the customer. So it's dotted line because it depends on the bank whether they want to give any hibah to the customer or not. Okay? So that's simply what they are. Yad damanah account works, and in a way it's also a core. Okay? Question? Promotion. I mean, for even wadi'ah yad damanah, the bank cannot make promotion like open account, you get a free umbrella, or open account, you get a free mug. That's not allowed. It's considered as like additional benefit on as a court in the case of at wadi'ah yad damanah, you actually have no risk at al-kharaj bid-daman, so the customer do not take any risk because of the guarantee given, so the customer cannot get any from the arrangement. Okay. Tabung haji, I think before they do not really have proper contract at the old time, okay, and then after some time they consider it as wadi'ah lah because tabung kan, so when people put money in tabung haji, it's considered as a wadi'ah that the tabung haji we keep. But then the way the money is being managed, and then tabung haji pay zakat on behalf of the depositor and everything, so they revise back, and I think they say it is wakalah. Wakalah bil istismar, basically agency. The same like EPF as well. But EPF from the very beginning they say it's wakalah. So they change to wakalah because that is more suitable based on the operational practice of what they have dividend being declared. Because you do what the ayat the mana, you cannot really promise or declare and promote dividends. And that's why they changed to wakalah. Because as you know, tabung haji initially they don't have any syariah governance proper lah. But of course they're supposed to be syariah compliant, but they don't have proper syariah advisor. Not under BNM. Yeah. I think and then they realized later that realign the contract, so they did change to wakalah. Which year? Sahabat, do you remember? Ya lah. Belum COVID kot. I think 20. I don't follow yet lah, Tabu Haji. Okay, but basically they changed because to reflect the proper contract because declaring dividend and things like that, right? So it should be like wakalah lah. Lah compared to what it was quite because masa tu I think they were just starting up 1963 kan, so very early stage, so people just thinking about just putting money, not really thinking about the contract. So that's bakal combination lah, mix punya asset, you do zakat on that. No longer guaranteed, but they enjoy the dividends. And I think there's a government guarantee, third party by the government. Guarantee because dia ada akta tabung haji kan. Tak adalah, dulu ada PIDM, now no more. Betul lah. Tak boleh dah sekarang. Not the bank lah, it's the depositor lah. That's their, whether you can say it's a weak point or it can be a strong point. Because when you take more risk, you actually can get, I mean, potentially the return would be a bit higher lah, supposedly. They can use it to their strength lah, so dia macam like mid product lah. Whether you don't have return or you have return fixed under the tawaruk, or you want to go a higher, a slightly, not really high risk lah, actually, because it's a slightly higher risk, and but then your rate will be better. Itu kalau bank Islam, I think they do a lot of things kan, yang dia wah tu kan, alpha kan, yeah. Do that lah. They do other incentive. The bank, they are commercial entity. They know how to attract the customer. I mean, they never lose their money lah. So NIDC, like I said, last time they used Ba'al-Ina. So as you can see, Ba'al-Ina, there's two legs of the purchase, sale and purchase, right? So the first leg, the bank actually sell asset worth of 1 million on cash basis. The customer sells asset worth 1 million bank. Then bank repurchases the asset from the customer on example 1.06 million. So Ba'alina with a profit to the bank at 0.06 million. And after that, the step 2, so step 1 is purely Ba'alina lah. Step 2 is where they do the securitization. So they actually negotiable Islamic debt certificates to the customer. So customer have the bank owing them 1.06 million. So that's actually evidenced by the certificates of deposit. So this certificate of deposit, which the customer hold, customer can keep to maturity. Maybe in this case, it's 1 year, right? 365 days maturity. So if the customer wants to exit, the customer can sell the certificates to any other buyer, secondary market. So that is ba'adan there when you do selling of the debt certificate. Are you clear? To the bank. Sorry. The bank. The bank sells asset. The bank sells asset to the customer 1 million. So the customer pay cash. It's the customer paying deposit to the bank, right? So when the bank sells asset to the customer, customers pays 1 million to the bank. Then after the bank sells, the bank repurchase, buy back the asset from the customer at the murabahah 1.06 million, which is deferred for 1 year. In our example, it's a 1 year's maturity NIDC. The bank will pay to the customer, whoever after the customer 1.06 million. But then when the bank issue the certificates, NIDC under step 2, the negotiable debt certificate, issue to the company to the depositor, it evidence the 1.06 million worth of debt. Okay? Under the NIDC says that the bank will pay the bearer, the person who holds the certificate, 1.06 million at the end of 65 days. So the holder initially is the customer who initially deposit. So the customer can hold to maturity, or if the customer wants, let's say after 3 months, the customer needs cash, the customer can just sell to other buyer on the second price, normally based on market price lah. So the end holder, the last person who hold the certificate, will get the payment of 1.06. Normally it will be less because you are getting earlier, but the customer still make some profit lah. The bank 1 million, so maybe they're able to sell 1.0. Maybe after 2-3 months, maybe manage to sell 1.02. But then the secondary buyer actually may be able to counter or premium basically, as long as it's below the 1.06. Maybe then 1 month, maybe he sells at 1.0, for example. So he profit, or even if he's needing money, maybe as 1.02. Okay, the next buyer, it depends on the market price at that time. But normally it will not be more, because it doesn't make commercial sense to the buyer to buy higher than that, because at the end of the day, they're going to get some 1.06 from the bank on the 300. Okay? Yeah. Yeah. Both legs lah. Ba'al inah, controversial. When you do secondary trading, also using ba'adain. Malaysian banks. Because normally this one, depending on the amount lah, can be high net worth individual. They want to keep the money, or even businesses, SMEs. They want to keep money for a certain period of time. They want to lock their profit lah. And then they have the flexibility. If they need money, they 1 year. But if off, and still get some kind of profit, they can structure it using tawarruk. You do the step 1, instead of using ba'alina, you can do tawarruk, the reverse commodity murabahah with the bank, right? To create the murabahah debt, okay? And then the negotiability, tradability, still using ba'adain. Some structured product also use this, where they buy the NIDC. Maybe they don't actually, maybe they buy on secondary market. They can also do it initially for the deposit. Later when we do structured product, they want to get the fixed return. So the structured product, the fixed return side, they normally use NIDC or other FD. NIDC is easier because they can exit when they want, when upon the maturity of the structured product. So it gives fixed return. So it's the one that normally is used for protection of capital under the structure. There are parties who want to participate in this. Normally institution and high net worth individuals. So this is the one using commodity murabahah, deposit products. They call it MNCD, murabahah, negotiable certificate of deposits. So when you create the debt, it's using commodity murabahah. But when you do secondary trading, it is still based on ba'adain. Both NIDC and MNCD, they are fixed rate instrument because the price is already locked when you do the murabahah. Okay? Look at the transaction here. The customer now have the money. In our example just now, the customer have, let's say, 9,500,000, for example. So the customer give the money to the bank, because remember the bank is the one who can do trading on the platform, the commodity platform. So give money, let's say 9,500,000 to the bank, their agent, to buy commodity. So then the bank will buy commodity worth 500,000 from broker A. Then the customer owns the commodity, because it's the customer money given to the bank. Bank as agent bought the commodity, so customer owns the commodity. Now the customer sells the commodity to the bank at the price of 9,500,000 plus a profit of, let's say, 5,000 or 50,000 to be paid on maturity, depending on the rate lah. So let's say 5,000 to be paid on maturity. And you can see here, by this transaction, there's already a debt created, because the bank now is owing the customer 100,000, right? 95 plus 5. Okay. And the bank issue the NCD, the deposit certificate to the customer to evidence the deferred price, to evidence the 100,000 debt, which the bank owes the customer. So why is you need to have the deposit? So need to have the certificate, because the certificate is negotiable. Okay, so the depositor, the customer, can actually sell off the certificate to other buyer on the secondary market to get cash prior to the maturity of the certificate. Conversion, they call it the certificates of deposit. Certificates of deposit, negotiable certificates of deposit, NCD. C lain dia for trade transaction. We do that in corporate. Yeah, to facilitate trade, exporter, importer, seller, purchaser, yeah. Certificates, negotiable certificates of deposit, NCD. Negotiable certificate of deposit. Oh, yeah, Islamic we call it NICD, negotiable Islamic, the I Islamic. Kalau yang murabahah ni, to reflect murabahah, dia guna murabahah, M. This one that said normally is for depositor lah. They have excess money, so they want to keep the money for a certain period of time. That one is for payment, settlement. That one for trade. That one we will be discussing after the break. For corporate financing. This one for deposit. Like even businesses, they roll their money kan. So they need to purchase, so they have got their money, but the payment for the purchase will be, like, say, after 2 weeks. So instead of not putting their money or just putting normal current account, no return, very minimal return, so they can enter into this thing. Yeah. Yeah. Yeah, because they want to do with other counterparty kan. This one they just directly go to the bank lah. They have extra money, I want to place money, so they will. High net worth, because even like overnight they have like the SBBA, but this one like longer lah, like even longer, maybe you want to use it earlier, so that's why you have negotiability. So you target like within 6 months you need the money. You had like 5 million, so you park here, but then suddenly because of business cycle, after 2 months you need to have the money, so you can it lah. Then they deposit. Meaning it's the customer nak place money with the bank. Ini deposit. We starting with deposit product. We don't go for financing yet. Why I said just now, financial this is deposit. It's the customer having money, where they're going to place their money, where they can get return from their money. Deposit and investment, yeah. Fixed deposit, dia punya basic is the same, but fixed deposit, you don't withdraw. You cannot, you cannot sell it to third party, not negotiable. Yang ni dia ada benefit of negotiability. If you do fixed deposit, 3 months lah. If you do withdraw before 3 months, you don't get your profit. You may not get your profit lah. Sampai baik dia bagi. Sometimes they have this ability to say, yeah, you withdraw. Right, you did direct with the bank lah. Can. No, negotiable means the certificate is negotiable. It can be traded. No, negotiable instrument means an instrument which you can buy and sell prior to maturity. The liquid instrument. Certificate itulah. NCD itself is a negotiable instrument. Yeah, is the name actually when say negotiable certificate means the certificate can be sold, can be bought and sold before maturity from the original holder to any interested third party who's willing to invest. So you go, let's say, for 6 months, and then after 2 months you need the money now. So you cannot wait until maturity. So you can go secondary market, jual lah. You can sell that certificate. So ada buyer, they have money to place, so they will buy. FD dengan bank, dia tak boleh jual. Dia tak ada negotiability feature. So negotiable ni means is like tradability lah. Can actually, maksudnya you can exit, you can enter and exit anytime you want by finding a buyer to buy your NCD tu lah. Okay? Yeah. Normally because the amount is quite bigger lah, because you're going to do buying like this commodity, yeah. Sikit je, I mean it's not worth lah kan, yeah. Yeah, it depends on the platform. If you go for London Metal Exchange, it will be metal. If you go to Bursa Malaysia, normally it will be CPO, but they also have aluminium now. If you go to ABLIS, it will be like CPO byproduct like plastic, PALI, and things like that, things that you use for making soap. If you go to Sedania, for example, they use airtime. It depends on the platform provider for the commodity. It can be corporates, it can be banks also buy, and then it can be normally high net worth individuals. So sophisticated people lah, maybe they know this kind of things, yeah. Of course, I think for those involved in zakat, because zakat also sometimes you need to withdraw if you to do the distribution, but in the meantime you can actually participate. But as I know, most of the zakat enactment, our Islamic law enactment, they're very conservative in the kind of instruments that the Majlis Hakim Islam can participate. So it's either current account, saving account, fixed deposit. So kalau dah lari sikit kan, then you need to get clearance from the legal advisor. Is this allowable or not under the... Tidak dia negotiable kan, senang lah kan, because you have a lot of money. 505 for wilayah persekutuan. 3, but for the state will be different. Dia pergi MOF. Sebab dia bawah akta. But enactment different lah. Different. You have to ask the state legal advisor as well, whether yeah, because you see who's going to invest. I think zakat will be a good zakat institution will be a good investor because it's actually fixed return. You don't take risk on the zakat money, and then dia ada flexibility lah, negotiability. Kalau you take 1 year kan, maybe 1 year better rate. Tapi kalau you need to withdraw, let's say because you have budgeted lah berapa for that year, but you can withdraw earlier lah by selling off the certificate and the zakat. You'll get some return lah during that period. Yelah, even nak invest the zakat money, you need to get clearance from mufti juga. Sebab generally zakat money terus distribute. But I think as a matter of risk management, then zakat institution, they have like the 6-month reserve. 6-month reserve. Kalau ada contingency, dia ada lah money to pay to any potential asnaf, like we have like flood ke apa kan. So they have this 6-month reserve. Dia ni lah kalau nak boleh. I mean depends on the Majlis Agama Islam. Majlis Agama Islam Wilayah, they used to have 6 months. Recently they reduced to 5 months because they want to distribute more. So yang sikit ni lah, but even sikit pun is still in the millions kan. So they can still get some return. Tak ada dah. So okay. Where were we just now? Murabahah, you clear? Itu pun sama principle dia. Murabahah, negotiable debt certificates. And then we have ada dah. Okay. This one, the fixed deposit. Tadi negotiable kan, dia boleh negotiable. So fixed deposit is the same, but you don't have the issuance of the certificate that you can sell off, yang negotiable feature tu. So they just have customer going to the bank. Customer ni ada duit, let's say 1 million. So appoints the bank as agent to purchase, to perform the transaction. Basically the bank will buy the commodity on behalf of the customer from broker A, and then the bank buys the commodity from the customer on murabahah basis with a markup to the customer, and then and then the bank will sell the commodity to broker, the next broker, for the bank to get the 1 million that the bank use as the deposit lah kan. So the bank gets 1 million. Customer keeps it, let's say 3 months FD. So after 3 months, the bank will pay the customer the murabahah price, which is the 1 million plus. For example. Ini tak negotiable lah. So they just have to keep the maturity. Kalau dia withdraw awal, maybe dia tak dapat lah profit dia. Sebab dia dah, biasanya dia ada ibrok. So kalau dia withdraw awal, kena ibrok lah dia punya profit. Sikit je lah dapat profit ya. Depends on the time. Depend on the longer the yang 12 bulan, 18 months ke, if take 3 months, not much. Okay, now we have investment account. Just now deposit. For deposit, they principal guaranteed because they use murabahah, they use baina, so the price already agreed, selling price. So it's like guaranteed lah. I mean the buyer has to pay the price. Okay. This one investment, because there's no guaranteed, profit also not guaranteed. This is like using mudarabah and also wakalah. So for retail, normally they have mudarabah, general investment account. Area, unrestricted investment, unrestricted or unrestricted. Di Afrika. Oh, Bank Islam mengelabur dekat Afrika. Not sure. Tapi yang tu, I think they don't use, any retail customer, you just open mudarabah account kat Bank Islam tu macam apa tu. I think the one that you said is more like financing lah kot. Bank Islam provide mudarabah financing counterparty in Africa kot. Ada lah ingat-ingat tapi tak tahu detail. Study. When was that? 2000 something. I think that's mudarabah financing. This one is customer goes to the bank to put their money under mudarabah investment account. So yang general investment account, GIA ataupun they call it URIA, unrestricted investment account. So It's like package lah. So the bank tells you, okay, you put your money here, our profit sharing ratio would be 60-40, 60% to you, 40% to us, for example lah. Kan? Mudarabah. Mudarabah. I use wakala also, but this one is really mudarabah. Yes, that's the way it's called deposit. Inilah kata ada 1 million, give 1 million, ada 10 million, give 10 million. Ada murabahah. Then the bank buys the commodity from the customer. So maybe a bank customer bought 10 million kan, sells to the bank dan murabahah 10 million plus 3% profit. It will be kept for 3 months. So for example, they call it one bullet payment at the maturity. Meaning you keep 3 months and then one payment lah on the 3rd month. Kalau 3 months lah, kalau 6 months on the 6th month. Depend on the period that you have opted. When you do for FD, semi FD, you can opt for 3 months or 6 months or 18. Okay, good question. So you can see here, there's some more art here. Bank promised to buy commodity from customer, right? So when the customer goes to the bank, bring let's say 10 million, customer tells the bank, I want to have this FD. The bank say, okay, if you give to us and make us our wakil, we're going to buy the commodity and we promise to buy from you the commodity at 10 million plus a profit margin of 3%. So bank already made one art. So this one art, I think according to Nation View and those who use this product is a binding lah. Right? So then the bank as wakil will buy commodity and then we buy commodity on behalf of the customer and then the bank will buy the commodity from the customer at the price they have made one at here. At 10 plus 4%, for example, just now. And the one is fulfilled by the bank purchasing the commodity from the customer. So far, no, like, because bank is regulated and they have their governance, governance, Sharia governance. So their Sharia review, Sharia audit, internal audit, everything, we make sure that the bank actually purchase the asset from broker and sell to the customer on murabahah. That broker actually document already provided by the platform. Now it's very simple. It's just like Bursa, they have straight through processing, STP. Before that, you go to Bursa. You just tell Bursa we are buying. It's automated in the system. And then Bursa asks you, after buying, the bank tells the Bursa, we are selling to this customer. It's also in the Bursa punya system lah. And then after bank bought from customer, the bank sell to Bursa. That is also in the system. But it's like manual lah. Every time you buy and then you get instruction to sell to your customer and then you do instruction to sell to the broker. But now, this one spot between the bank and the customer, it depends. Sometimes there's some gap in time. Normally they would do one after the other lah. Okay. And the bank have to give option to the customer after buying. Whether okay, that's okay. So when the bank gets the commodity, the bank has the option whether to keep or to sell. So normally the bank will sell because the bank wants the money kan to sell to broker. Now they have STP, straight through processing. You just tell Bursa whether you want to buy first on behalf of the customer. Yes. Bank say yes, and then Bursa said you want to sell to the customer. Yes. And then you want to sell, you want to buy from the customer. Yes. And then you want to sell to the next party. Yes. So it's Y. So they will just key in the straight through processing system. So one click of the button, then bank will buy on behalf of the customer. Maybe at 1 p.m. And then the next nanosecond, the bank buys from the customer. The next nanosecond, the bank sells to broker B. It's nanosecond lah, but it's evidence in the transcript of the transaction. Automated under straight through processing. Nanti Bursa Malaysia have that. IGA also use STP processing. This is to avoid human error lah. Sometimes human error, you key in wrong price. A lot of things may happen. Yeah. The transaction is short period, but the payment of the murabahah price, when the bank buys from the customer, this depends on the fixed deposit tenure that you are opting. So how long the bank takes to pay to the customer. If 3 months, the bank will pay after 3 months. If it's 6 months, the bank will pay after 6 months. Keep deposit with the bank how long? So normally the longer the tenure, the bank will give better profit lah to the customer. So the transaction is short, but the period, the tenure of the deposit may be longer lah. Of course, you can do the same for overnight, but you can normally overnight they choose another. But this one like more like 3 months, 6 months. This is they call it fixed deposit product. Islamic fixed deposit. So normally 3 months, 6 months, 9 months, 12 months, 18 months. Okay? Short to medium term lah. Okay? Are you clear? So you have to put your mindset, this is deposit product. This is not financing. This is the bank taking money from the customer. It's the customer wanting to get return on their placement of the money with the bank. As retail, we always think about financing, bank financing. No, this is the customer giving deposit to the bank or investing, give investment amount to the bank. Okay? Habis ke ni ya? Okay. Baru deposit tak masuk financing ni. Okay. Okay, investment using mudarabah. For retail, normally we use this one lah. General investment. Of course, this one, special investment, this is normally for high net worth, corporate client, instrument of deposit, normally interbank, mudarabah interbank also you have. Okay. So, then structure. So basically the bank becomes the mudarib. Customer would be Rabbul Mal, giving money to the bank under the now. So this customer have 100,000 give to the bank as mudarabah capital. The bank will use the capital in their business. So if there is profit, the profit will be shared between the bank and the customer according to a contractually agreed ratio. So for retail, normally for the GIA, general investment account, the rate is not, the ratio is not negotiated. Customer like it's like a package lah. So customer wants, customer take it. If they don't want, they go to another bank, try to find the rate that they like lah. The profit sharing ratio. Then profit cannot be a fixed amount, cannot be a fixed percentage of the capital contribution, because that we amounting to capital profit guarantee. Losses will be borne by the depositor, by the investor, by the customer only, because they are providing capital. The bank do not put capital unless if you can show that the loss is due to the bank's negligence, fraud or breach of term under the model. Wakalah, do you have a question? Wakalah placement. So wakalah placement is also similar with mudarabah, where all the capital come from the customer. However, in the wakalah, there's no profit sharing. The whole money, the bank is the agent of the customer to do the investment. But the bank as the as the wakil or agent will get a remuneration in the form of fee. fee. Okay. Fee, all the risk will be on the customer lah. So the customer goes to the bank, provide the fund. They have money. They have like say 1 million. Give to the bank. Bank become wakil, agent to do the investment. So the bank do the investment. So the profit will be transferred back to the customer after minusing the fee to the bank. So sometimes they have what they call it capping. So the bank says, okay, we are going to invest the money. We expect the profit to be like 5%. Okay. So, but if the profit is more than 5%, the customer agree that the bank will take additional fee. The extra over 5% will be given to the bank as incentive. That is also possible as you have a capping on the profit. Otherwise, all 100% profit will go to the customer after minusing the original fee. Okay, are you clear? Now we go to repo. So just now, wakalah and mudarabah, they are flexible. You can make it short term, you want to make it medium term, you can have longer term for the investment account, right? If you, like in Malaysia, for mudarabah investment account, we have one platform. So they will match lah. When the customer give the money, the bank will match with another entrepreneur, whatever the money, and they match, they look at the risk, what the customer investment appetite and what the user of the fund appetite, and then they match, and then they will have this intermediary. Okay, they have also like that. This one for repo, normally is like this one like short term, like overnight, can be like 14 days, it can be 30 days. And for repo, normally is more for quite high net worth people lah, sophisticated. So what they do is actually the investor will buy some securities from the investee at an agreed price. So there's a sale contract. This is conventional repo, sale contract. And then investee will agree to buy back. So there will be a buyback, a repurchase agreement to buy the security by the investee from the investor at another agreed price. And then from conventional repo, they have transfer of title of the security from the investor to from the investee to the investor. But the benefit of the security obtained by the original owner, which is the investee. So if the security declare dividend during the period of the repo, conventionally, that return will go to the original owner, not the new buyer. So that's conventional repo lah. And then the profit to the investor, purchase. Sell and then you repurchase. So kalau conventional tu dia apa tu? The profit to the investor will be the difference between the price lah. Masa dia beli, maybe they bought the security at 10 million. When the investee buy back from them, maybe 1 million. Jadi dia itu profit to the investor ni conventional repo. For Islamic, they don't allow that because once you sell, you don't retain dividend tu tak boleh lah kan. So they have Islamic repo alternative structures. So far, like in Malaysia, we do sale and buyback arrangement, and we also have collateralized murabaha. Middle East, they normally use the CCM lah, collateralized commodity murabaha, like I think they use that. So this is for the SPBA, normally short term, like overnight, 1 day to 30 days. And it's a deposit service facility with some returns to the investor or depositor. It involves a sale of identified basket. Islamic, kena guna Islamic securities lah. Islamic securities that you are selling. And then the investee sell those securities to the investor for cash payment. So by selling, then the investee get cash payment lah. So the investor yang ada 10 million tadi dah bayar the investee. Now, after that, the investee will buy back the same basket of Islamic securities from the investor on maturity, also on cash basis lah. So after 30 days, I promise to buy back from you at 10 million point one, for example. The buyback price will incorporate a yield as the return of profit to the investor. The difference from this and conventional is there's a true sale. So if there's any profit declared on the securities, it will belong to the buyer, the new buyer, not retained by the original seller. Ini dia punya illustration. So we have the investor here have X amount of money and buy the securities, Islamic securities from the investee bank, pay X ringgit, and then execute the wa'ad lah. Investee bank promised to buy back the securities from the investor at the maturity at the end of 30 days, for example, at the price of X plus Y. So on maturity, there will be a resale of the security and investee bank will pay the X plus the yield to the investor. So both legs are cash. So that's why it's not considered as Ba'al Inah. Ba'al Inah, first leg is cash or deferred and the other leg is the opposite, right? This one, both legs are cash. When investor buy from the investee, is cash payment. On maturity, when investee buy back from the investor, also cash payment. So maybe there's a default, so investee bank doesn't buy back, there's possibility. Or investor actually want to sell to other parties because the price is so these are some of the things that may make it different lah from Ba'al Inah. Immediate, there's a gap in time between the first leg of the transaction and the leg. Ba'al Inah is immediate. After the first one, you do the second one. One is deferred, the other is cash. This one is both are cash and there's a gap of time between the first transaction and the second transaction. Collateralized commodity murabahah. Pasal aircon tak panas? Panas juga. Okay, collateralized commodity murabahah ni dia nampak complicated lah. But actually, if you understand it, they just do the commodity murabahah, and then to secure the debt under the murabahah, they give the securities, Islamic securities, as a collateral for the murabahah debt. Dia punya essence dia. Okay, so you can see the step tu macam complicated. I will just show to you the diagram. So let's say Bank A is the investor. Okay, Bank A is the investor. Bank A is the investor and Bank B is the investee. Okay, so who is the party needing money? Bank A or Bank B? Bank B. Yang ada duit adalah Bank A. Okay, so Bank A will buy commodity lah sebab dia ada duit kan. So Bank A will buy commodity from broker 1. Let's say the money that they have maybe $100,000. Okay, so buy commodity worth $100,000. And then Bank A will sell the commodity to Bank B, $100,000 plus profit margin. B, because Bank B is the one needing money kan, so the murabahah price will be deferred. How long the deferment? Depending on maturity of the placement lah. Let's say the investor or Bank A wanted to put for 30 days. Okay, so the Bank B is going to pay the murabahah price after 30 days. Okay, or on the 30th day. Then the collateral. So Bank A asks Bank B, give me some collateral. So Bank B will give their securities lah, Islamic securities sukuk that they have to their value, like say 100,000 just now. Give collateral in favor of Bank A. creating a rahan or a charge over the securities, the obligation of Bank B to pay the deferred purchase price under the Murabahah leg. Lepas tu, Bank B tadi dia dah ada commodity kan, so the Bank B will sell to broker 2 to get the cash. So now at the end that step 4, Bank B gets 100,000 cash. At maturity, Bank B pays the 100,000 plus profit to Bank A. So Bank A will release the Islamic securities to back to Bank A. So if this Islamic generate any dividend or return during that or coupon during that period, it belongs to whom? Bank A or Bank B? Kalau ada dividend or on, it belongs to Bank B because who owns the securities? Bank B. Dia cuma Bank A cuma chargi, cuma jadi murtahin, chargi kan. Jadi behavior dia exactly like conventional kan, because conventional you sell the securities but you still retain the dividend. So here you don't sell, you just give as collateral. So that's why you are still entitled to the dividend. Replicates. They foreclose, forfeit the securities lah. So they replicate conventional behavior lah. Okay, contract use. Are you clear? Commercial behavior, but in terms of contractual relationship, different. Conventional repo, there's an outright sell the securities and then they promise to buy back. Dia macam SBBA tapi dia tak bagi the commercial benefit of the securities to the buyer. So it doesn't seem like a true sale. So it's construed as like you giving money and I'm taking this as collateral and I'm charging interest. Structure is like that. So that's why it's not syarah. Yes. I think one is like kalau SBBA tu it does not replicate conventional. So the benefit of the securities doesn't not retained by the seller. That's why they do collateral. But collateralized, you can see is complicated. If they're not familiar, then you what is this can? And then there's brokerage also. We do community murabahah, you have to pay brokerage fee sikit lah. You have to pay to the platform for doing to buy and sell the commodity. And that's more like awareness lah. Tak boleh. Yeah, that's why for yang ada subsidiary, they leverage on their parent lah. Parent buat je. Parent yang buat. They leverage their office juga. Islamic Bank just do the rest lah. Dia tak buat lah that side. Itu done by a conventional side. Kalau pure Islamic memang dia kena buat lah. Sebab tu yang ada tu. Yang sebab tu dia ada juga kan. Because dia ada parties doing it lah. So this is the behavior. You can see here, one of the things you see here that sometimes the collateralized tu dia ada over collateralization sikit lah. The value of the Islamic securities just to give comfort to the investor. Let's say the debt is like 100, the murabahah, but you take the securities value at 110. So there's some kind of And then you can do margin top up. Kalau kurang, you can ask for the katalah value of the security to turun lower than your debt obligation. Then you can ask the investee to top up the collateral. Top up possible. So in a way, CCM quite flexible lah sebenarnya. Kalau terlebih pun you can call back. The collateral dah lebih pada 110, then you can call back the collateral so the ST bank can take back lah some of the security they have back. Dan pun dapat pada owner still own the securities. So dia dah buat by some banks. I think CIMB they use CCM, Saving Islamic, but they want to actually have some kind of security kan. So they wanted to have legal title of the collateral transferred to the investor and recorded in the custodian account. Basically to facilitate right of investor to liquidate in the event of default. So this was brought to the attention of the SAC in Malaysia. So they allow this lah basically. So you can have transfer of collateral registration to the pledgee, but it's not like ownership transfer. It's more of like encumbrance lah, encumbrance. But there's a right, there's obligation on the pledgee to return back the collateral to the pledgor after the pledgor settle the debt lah, upon settlement of debt. And although they have the securities under their name, the pledgee cannot transfer to other party. They cannot sell it without the consent of the pledgor because it's still actually technically owned by the pledgor. So registration only to facilitate the professional aspects only, based on special proposal made by bank lah, because they if they don't have their name registered, because convention they sell, so they get their name registered. So here they have this concern. So it's still collateral but registered in the product. We're getting more technical and more technical lah. Structured product, yeah. Boleh lah. Dia separate. Kalau tidak dia takut jadi macam interlink pula kan. So structured product ni actually structured product ni dia another can be structured as deposit juga. And it actually what we call it like instruments yang investment instrument which is embedded with some kind of derivative features. Embedded investment instruments, and the derivative portion actually is to protect and also to give potential of further additional upside to the investment, additional profit to the investment, depending on the performance of the underlying reference asset. So in such a product, normally you will have a reference. Okay. So what are the underlying reference asset? Conventionally, they can do anything lah. But Islamic have to choose only Sharia compliant assets to be the underlying reference. So this is the basic model for Islamic structured product. So if you do it as a deposit product, you can also structure it as investment product. But let's say, because we're talking about deposit, so let's say structure as deposit product. So you have the structured product structural, the person normally like a bank, or investment bank, or the bank, normal bank, let's say my bank. So they are the manager or the structurer of the structured product. So they will actually ask or invite any interested customer who wanted to participate in the structured product. Normally the customer or client would be high net worth. High net worth. Because normally minimum amount like maybe 100,000 like that. Under this. So the manager would normally have two main portion from the money given. Let's say you give 100,000. So the manager would do one portion. Actually, the bigger portion is for the capital protected portfolio. So they use this, let's say 80% or 90% of the money given to participate in fixed income instruments, Islamic fixed income instrument like the NIDC or MNDC, the deposit negotiable Islamic deposit certificate. So they boleh participate there lah, because you have fixed and anytime they want to withdraw, they can sell off, So normally they will participate in this kind of instruments that give a fixed return. So if you put 80% of your money in, and then the return for the negotiable Islamic debt certificate or murabahah negotiable certificate of deposit tu, let's say ada 5%. So 80% and then 5% per year. So you will need how much to make it into 100% again. So if after 5 years, so 5 times 5, 25%. So you after 5 years, you keep your 80% of investment of the money given, you recover back to 100%, right? Plus another 5% kan? Because 25 plus 80, that will be 105. So there's already a safe buffer there. So your 80% investment, the capital protected, means after, if you keep it for 5 years, you get back your 100% again from 80 to 105% actually. And then for the profit maximization portfolio, this is where you have the derivative. So you can participate in some underlying reference asset. If the underlying reference asset perform, then you may get more profit here. Portfolio. I will show to you an example of the building blocks, and then we look at the actual transaction. So the building blocks, of course, you need to avoid any negative list in the assets. You cannot use underlying assets which are non-syarah compliant. So when the fund level, when the client give money to the bank or to the manager of the such product, the contract used normally is wakalah or mudarabah. So client give money to the manager as their agent, wakil to do investment, wakalah bi istismar, or they give money to the manager as their mudarib. Okay. Then at the activity level, where you put the money, so if you participate in the mudarabah negotiable certificate of deposit, then you are doing tawaruk or peras kementerian murabahah. And then you can also purchase for the profit maximization. You can actually participate by way of a basket of share but using Islamic option like using urbun or wa'ad. That okay. So the capital protection is achieved through portfolio management and balancing. Like I was mentioning just now, you participate in certain instrument that give the return of like 5% or 6%. Maybe not just fixed rate. Maybe you buy this murabahah certificate, this one 5%, another batch of MNCD 6%. So you mix the baskets of fixed income instruments. And then you can also achieve capital protection through third-party guarantee, also possible. So you must have noticed is capital protection, not capital guarantee. The protection, you protect the capital, but you don't guarantee. So this is the example of action of structured product by HSBC Amanah in Malaysia, HSBC Amanah, where they have the underlying reference here is equity shares. So they call it Islamic Equity Linked Structured Investment I. So basically, you see here the manager, see lah, doing the structured product manager lah, HSBC Amanah. So they have their customer, high net worth HSBC clients. So the HSBC give money to HSBC client give money under wakalah bi istismar agency. So HSBC Amanah becomes their their wakil to do the investment. So from the money given, the big portion, let's say 90%, is used to buy Islamic fixed income instruments, securities, NSCD. Dia boleh buy sukuk as well. Ada securities which give fixed return. So they calculate within 3 years they will recover from 90% capital. It will become 100% or 105 or 110% lah. So this is for capital protection. Okay, so principal repayment from fixed income securities at 100% or more. Okay, so the remaining 10%, for example, will be used to buy equity options. Okay, and the equity would be shares that is owned by HSBC Hong Kong or Paris. So they use here Urbun because for Urbun, meaning you buy and pay some down payment for the price of the shares, but the shares must already be owned by the seller lah. So HSBC Hong Kong and Paris already own those shares. So they have this Urbun and they use the 10% to pay for the down payment for the shares. But the nature of Urbun is you have option to exit. So if you pay 10% and the underlying reference here would be the shares and equity owned by HSBC Hong Kong or Paris, and if the price actually is good performing, then you will continue with the purchase. Then you pay basically you continue the purchase and then you sell it to get the capital gain. Okay? So they will actively manage this. So whenever they have that 10%, they can actually use it to buy some of the underlying frame that they feel will be going up. So the moment they buy, and then they sell. So they net off the price, so they get the capital gain. So that's how they make money. So if the underlying reference asset, basically the Islamic securities or shares or equity owned by HSBC in Hong Kong or Paris is performing, the price is appreciating, then there'll be more profit lah. Top of the capital protection. And normally, because you can see here, the capital will only be repaid at 100% or more after for 3 years. So the customer withdraw before 3 years, there's no capital protection. If you want to have capital protection, you have to keep to maturity. Dia macam dia equities and then you need to do syariah compliance. Dia macam tak adalah single, because basically you are investing in shares. It's an investment. This one is investment product. You look at the other one by my bank. This is deposit. The one by HSBC, I think this one approved by SC. The one by Bank Negara, by Maybank, they call it Maybank Structured Islamic Deposit, Strike I. This one, the underlying reference would be commodity. In this case, they have chosen copper and wheat as their commodity underlying reference asset. Compared to HSBC, they use shares, Sharia compliant shares. Link. This one is commodity link. So depending on the structurer, what are the assets that they want to use as underlying reference, they have studied, they have analyzed the performance of those assets and whatnot. So they will go for assets that they are in the position that the asset will be performing, and therefore they can get profit the derivative part. So for Maybank, they use mudarabah contract. Instead of wakalah bil istismar, they use mudarabah. So when the client give money to Maybank, it's under mudarabah principle. So they have a profit sharing ratio. So basically, the most of the capital and by the customer is used to pay for the participating in Islamic fixed income instruments. So in the case of Maybank at that time, that was quite some time ago, they used an IDC, the one using BALI. But now I think more are using murabaha, right? So this one we give the capital protection. So let's say they put 90%. So after certain maybe 3 years, they get back the 100% and slightly more than that. And then for the smaller portion, they use it as wa'ad. For wa'ad to purchase copper and wheat. So why they use mu'at? They cannot use urbun because the seller do not own yet the copper and wheat. So the only thing that they mu'at, a promise to purchase the copper and wheat if the price achieves certain they have a formula when the mu'at will be traded. Okay? So pay the 10% as Hamish Jidiyah as a kind of for the undertaking, for the purchase undertaking. Al-Wa'du just now. The reference asset in this case was actually copper on London Metal Exchange and wheat on the Chicago Board of Trade. Underlying assets that they used for this transaction. Wa'ad, normally use wa'ad if the seller don't have the ownership of the asset yet, so you cannot sell. So you just make a promise to buy or promise to sell the asset. Wa'ad is binding but not a contract yet. So when they put a condition lah, I promise to buy the if the price of wheat is this, and at the time you buy, you actually buy at the price of X, but you will exercise that purchase if the price the call it the strike price. So Y is normally more than X lah. So if the price reaches Y, then you will buy at X, and then immediately you will sell. So you get a profit in terms of the difference between X and Y. And they use wa'ad because when they do the wa'ad, the seller do not have ownership yet. For the HSBC transaction, they can use urbun because urbun is buy, it's a sale. So HSBC, Hong Kong or Paris already own those securities. So they are selling at X price. And then they say if the price is more than X, between X and Y, they will continue with the purchase with a profit. But if the price is below X, they will not continue with the urbun. So the urbun is waived lah. They will lose that 10%, but their loss is capped at that 10%, right? Of course, when they do this transaction, some they lose, some they win. So maybe overall, maybe they get a profit of maybe 2-3% over the 10% that they put in, maybe, yeah. So, and that is on top of the capital price. It depends on I cannot really say how much the profit is, depends on the behavior of, because they're taking position, basically they are taking the risk on the behavior of the equity price that they have chosen. In the case of here, on the wheat and copper, in this situation, when they come in, they are taking the position at that the price will go up. Okay? Are you clear? They lose their ni lah, dia Jidiyah tu, Hamish Jidiyah, the yeah, I think for the conventional they call it premium lah, premium for Hamish Jidiyah, you may not lose all depending lah how much the loss incurred. Have a formula to calculate the loss incurred by the would-be seller because they're relying on their promise. The loss is lesser, then you get some refund lah of the Hamish. Yeah, if they keep it for 3 years, because this the capital protection part is actually where they buy the fixed income. It's protected, it's not guaranteed lah. See, even for the fixed income instruments, suddenly there's a default, which is very unlikely. Because it's still a debt, right? Somebody not paying the debt over there, also you some of that lah. But for the 3 years, normally they should be receiving more than 100 already. Ada buffer kat situ. Or portion that is then punya. Islamic, if I'm not mistaken. SBC Amanah. Because the conventional side may have done also the types. This one for Islamic, they do under Maybank Islamic. Dah pukul 10:30 sekejap. Okay, so we are done with deposit and investment. So we have not gone into financing. I think we can do a bit on that before we go to the corporate. Or you want to do corporate directly? Commodity murabahah. Under commodity murabahah, it's not the asset that the customer wants to buy that the bank is buying and sell murabahah, but rather they will use commodity first. So the bank here, let's say customer goes to the bank, make the bank as agent transactions on their behalf. So then the bank will buy commodity from broker A. So bank buy commodity is this for the bank itself. So the bank buy commodity and the bank sells the commodity to the customer on murabahah basis. Then bank as agent of the customer sell the commodity to broker B to get cash. So at the end of the transaction, the customer gets cash and the customer use the cash to buy the asset that the customer wants. And the customer then will pay to the bank the murabahah price on deferred payment terms. Okay? For parallel back-to-back istisna is if the asset that the customer wants to acquire from the through the financing with the bank is asset under construction. So you have two main structures. The first one here is back-to-back istisna. So the first one, the customer who wants to have the asset will first go to the bank and enter into the first istisna with the bank, where the bank is the seller and the customer is the buyer. So the customer buys the asset under construction from the bank. Okay? The bank is the one, customer buy the asset under construction from the bank, and the price is the price which is consisting of the cost of the actual cost of the asset plus profit to the bank. Okay? And then the bank obviously will not do the construction on its own. So the bank appoint the customer as the agent of the bank to find a subcontractor who's going to do the construction. Okay? So the customer find the subcontractor. So the bank enter into second istisna agreement with the subcontractor through the customer as the agent. Subcontractor will be selling the asset with the same specification to the bank. Okay? So the bank will then decide the price of the construction to the subcontractor based on the progress of the construction. Okay? So the contractor will construct progressively until completion, and then the bank will pay progressively until all the price of the property is paid to the subcontractor. The bank then will deliver the completed asset to the customer, and the customer will pay the deferred payment of the istisna price. So when to start paying the deferred payment, they can agree with the bank lah, whether they want to pay during construction, some payment, and after construction continue, or they have zero payment during construction also can. So it depends on the agreement between the bank and the customer. Okay. The important thing is the yellow box. Although you have two istisna with same specification of asset, but they must be independent and stand-alone contracts. So there must not be any intercondition between the istisna between the bank and the customer and the istisna between the bank and the subcontractor. Okay. Go for asset under construction, but you can see here the bank take the risk of the subcontractor lah, buy from the subcontractor. Kalau subcontractor default ke whatever kan, the bank will take that risk. This is another financing for asset, but this one is using leasing. Just now we used sale contract, now we use leasing contract. So leasing normally for asset financing because the customer is aiming to get ownership of the asset, right? So that's why they do financial lease, which is a lease contract, which ends with the transfer of ownership to the lessee, to the customer. So the term used is ijarah mutahyah bitamlik or ijarah summal bai'. So al-ijarah summal bai' is the term which is more popular in Malaysia last time, which means leasing, then sale. Ijarah, summa means then, al-bai' sale. Mula-mula jual, mula-mula sewa, ataupun in Indonesia call it pajak, I'm not sure. First you sewa or lease it, and then only after that you do the sale. Okay. The Middle East, other places, they are more using the term ijarah muntahiyah bitamlik. Lease ending with transfer of ownership. Ending with transfer of ownership, because not necessarily they use sale. Maybe at the end they use a hibah, just make a gift from the lessor to the lessee. So this is used a lot, especially for motor vehicle financing. So the customer goes to the bank, tells the bank, I want to get financing for me to buy this Toyota car. So the worth maybe $100,000. So the customer tells the bank, this is the vendor, this is the car. And the customer actually has already viewed the car, has test drive, paid already deposit to the vendor, for example, 10% of the price of the then they have to pay the remaining, so they go to the bank. So when they go to the bank, request financing from the bank, so the bank basically says that, okay, we approve your application. So your 10% that you have paid to the vendor is considered as a kind of commitment that you give to me, because now the customer also make a promise that they're going to take the car from the bank as a on lease rental basis. So there's one art there. So the 10% deposit is considered as like a kind of commitment fee for the wa'ad to rent from the bank. So the bank then would buy the vehicle from Toyota, and then the bank have ownership of the vehicle. So the bank then will lease it to the customer, and the customer would pay the monthly. So for example, to the bank at the agreed rental rate. And at the end of the tenure of the leasing, maybe after 7 years or after 9 years, end of the leasing period, the bank can sell the asset or the car to the customer at an agreed price, or the bank can make a hibah of the asset of the car to the customer. Jarah. They're not regulated by bank negara pun. They are giving it based on ijarah. I think they appoint a consultant. I think we were involved also for doing some of the documentation together with Dr. Daud at that time. So yeah, because at that time pun bank buat macam tu juga. It's just that they want to do direct with the customer under ijarah. Maybe, yeah, maybe. Tak ada additional hassle lah dengan bank kan. Maybe their rate will be different, I think. They used to have already conventional. So then Toyota, yeah, but then they decided, well, we want to do, which is good. Toyota dia buat loan dah lama dah, but then for yang Islamic tu, tapi tu pun dah lama juga. I think like more than 10 years. Mana? Dah, masih apa? Masa dia nak start buat tu. 10 years back dah lama. Okay, another one is istisna ijarah. Okay. Yang ni is like the back to back, cuma dia reverse. Instead of customer buy from the bank first, and then the bank buy from subcontractor, here is reverse. It's the customer buying from the contractor, and the customer sells to the bank. Why they use this structure? Because now, who takes the risk of the contractor? The customer. Okay, so that's why some bank wants this structure lah. They don't want to deal with the contractor. They want to deal with the customer je. So what happens is that the customer enters into the normal istisna construction contract with the contractor to construct a property with a progress payment. So maybe the customer pay lah like 10% first to the contractor. Then the customer goes to the bank to get financing to pay the remaining price. So the customer then will enter into the istisna contract, selling the asset under construction with similar specification with the bank. And the bank is going to pay the price under the istisna contract with the customer, which match the progress payment that the customer will pay to the contractor. So let's say customer pay to get 10% and then plus 20% plus, So the payment by the bank to the customer will match with this payment. So once progress is proved here, customer show to the bank, also proven, then the bank will pay. So that whenever there's a claim by the contractor here, customer will have the money to pay because customer will similarly on the bank side. But even it's matching, but still they must be independent and stand alone in order to be sure. So this will go on when the customer so at the end of the transaction, after contractor deliver to the customer and customer to the bank lah. Actually, bank own the property, so there will be ijarah lah. So after completion, the bank will list the list the property to the customer. Okay, and the list will continue until maturity, and then at the end of the list, there will be a transfer of ownership to the customer, either via a sale contract or via hibah contract. Okay, it's slightly long-winded lah, because there will be two istisna, and then there will be same. But this is opted for if the bank does not want to take the risk of the contractor. They can arrange either to the customer or by right to the customer, but then the customer authorize the bank to directly to the contractor. Basically how they manage the risk. Contractor lah. Kalau contractor cannot complete the construction, the bank punya the liability of the customer to the bank still remains lah. Bank buys from contractor. This is musyarakah mutanakisah. This is where a hybrid also. Just now hybrid between istisna and ijarah. This one is between Syirkatul Milk, the partnership contract, and the leasing contract. This is for asset financing. So let's say the customer wants to buy this house, goes to the bank for financing. So customer already paid 10% of the price of the house to the owner. The bank paid remaining 10%. So they become co-owner of the house. And then the bank lists the bank's portion of ownership customer, and the customer pays the lease rental. But the installment actually paid by the customer consists of lease rental plus gradual purchase price of the asset, because throughout the tenure of the syaraka, customer undertakes to purchase bank's portion gradually until finally the customer from ownership to 100% ownership. Yeah, you co-own, but then your ownership will be gradually increasing. Initially, you are minority owner, and then as you pay, you become majority, and then finally 100% owner of the house. Okay? I think they look at their risk and risk weightage as, because if you look at the murabaha, it's a 50% risk weightage, because what remains between the customer and the bank is just the murabaha price, credit risk. So normally it's like 50% risk weightage. But if you go for ijarah, the bank still own the asset during the tenure, so they have cost the credit risk on the payment of the rental, but they also have risk on the asset ownership risk. So it can be like 100% plus 50%, 150, or maybe 100% percentage. So normally the pricing, the higher the risk, the slightly higher the price lah. But then, even then, Murabaha has its own feature lah, macam dia fixed rate kan. Kalau Jara, you can do it variable rate. Jara can, so give and take lah. So I'm not sure lah actually at the end of the day, and it depends on the market demand also. Don't have any banker here to some insights lah, but like that lah. Kalau rakam tanah kisah, the bank also have co-ownership of the house, so, and also the credit risk lah, in terms of rent payment, in terms of purchasing the asset back, right? So siapa? Ownership risk, because this shared. So if at that point of time the bank still have 80% of the ownership, customer have 20%, so bank have 80% ownership risk. How much? Tak ada taruh. Shares lah, they buy gradually the bank shares. Cash financing, we have like credit card. Past they used to have BALI for credit card, and then some use tawaruk, some use ujrah. Personal financing, last time use BALI, now they use tawaruk. Financing ni memang tak banyak choice lah. Kalau tak guna BALI, then tawaruk. Lepas tu ujrah. Ujrah tu technically court lah, tapi you pay fee for the services. Yang tu ada issue. So simple one, credit card based on tawaruk. The customer goes to the bank and tells that they need a credit card facility. So the bank says, okay, we have to do commodity murabaha. So the customer appoint the bank as a wakil or agent to do the transactions for the customer. So what the bank do, the bank will buy commodity, sell to the customer on murabaha basis, and then as agent of the customer, sell it to third broker, another broker, the third party, get cash. So the cash is actually credited into the account of the customer as their credit limit under the credit card. Customer use their credit card, actually the customer is using their money that is generated from tawaruk in the account, and then they pay back to the account. It's something like that lah. Okay. Credit card based on ujrah. Actually this one is actually court. Basically the bank open the credit card facility to the customer with the credit limit. So when the customer use the card, actually there is card or advancement of money given by the bank to the customer. But for the card facility, not for the card, but the card, by using the card, the customer has some facilities that they can enjoy certain benefits. At some cards they have some benefits, so they pay ujrah. But the issue here, some banks, the ujrah that is payable, they actually make it sort of linked with the utilization of the customer on the court side. So that creates an issue lah, that you are charging not really because of the services, the general services under the usage of the credit of the card, but rather because of the court given in the other side. So that's why now I think there's some issue there, and in Malaysia, banks are currently asked by Bank Negara, IFI are currently asked by Bank Negara to do their operation of credit card based on. You have until when? Start Fawah, do you remember the deadline? This month kan? Ujrah, credit card. Alliance use what for your credit card? Oh, you don't have credit card? Oh, I see. So for those banks, they have until like by right actually February, but the Bank Negara give extension until March. Ya. Benar lah, tak payah fikir kepala. For Bank Indonesia, you don't know what for Islamic credit card? Do you have any product for Islamic credit card? Not sure which contract. don't have Pak Husra today to give us some insights. And kalau tak untung, they don't do that, don't do it lah kan. Okay, we are done with this. Can I just go to the next slide for corporate banking? Dah ada dah. Okay, so let's go to corporate banking. Nanti tak sempat agak pula kan corporate banking. Okay, so corporate banking actually, I think you know what corporate banking is. Different financial services offered to large clients, like wholesale clients and companies, normally large corporations, but also include institutions like pension funds, our EPF here, governments, other semi-public entities. Very profitable division of bank, far more profitable than retail banking, because retail ni household, so dia punya size tu kecil-kecil kan, walaupun banyak, tapi size of the financing ke apa. Corporate, although it's not banyak, not that many, but the size is big, big tickets, so that's why it's more profitable. So in terms of the conventional process, it ranges from relatively simple business of issuing loans to more complex matters such as facility of trade finance, working capital, capital restructuring, raising capital, managing exposure of foreign currency, etc. Sometimes there's overlap between corporate banking and the capital market lah, because when they issue bonds, so there would be some overlapping there. Main products normally include cash management, credit facility, term finance, trade finance, working capital requirement, and participation financing. So this basically for corporate banking framework, you have liquidity management, limits, collateral, trade finance, securitization, and commercial lending. For corporate banking, you have bilateral financing, syndication, and capital market. This may include government and GLCs, huge financing amount, good financing standing, cross-border, more trade solutions requirements. Can be no collateral financing, but can also be secured as well. Less intervention from financier, and it can be involving project financing. So for purpose of our discussion today, we cannot cover all aspects of corporate banking. So I have chosen two aspects or two products for corporate banking, basically project financing and also trade financing, because these are two more common financing used for Islamic corporate bank. So first we look at Islamic project finance. Basically we need to understand what is project finance, and what are the instruments and contract, the transaction structures with some case studies. Basically, when we talk about project finance, it focuses on financing projects, and then financier, when they finance the project, they are looking at the cash flow of the project to be the source of repayment for the. That's the main feature. So it's used mainly to finance broad range of economic units. Units tu maksudnya the project tu lah. For example, power generation project. I think for Indonesia we have a lot of coal, right? Batu bara projects, and then oil and gas, highway, infrastructure, manufacturing, hospitals. Because you nak tengok cash flow tu. You don't have any commitment from the government, because cash flow. For project finance, repayment for the project, for the financing will come from the cash flow of the project. Cash flow of project. Dia tak tengok corporate tu sendiri. Sebab kadang-kadang corporate yang tak ada banyak salary, tapi sebab cash flow project tu tinggi, dia dapat lah. Bank bagilah, tapi bank akan expect payment daripada cash flow. Ada cash flow strong or not? Dia ada project company. Kena ada project company because dia tak access yang company yang buat kerja tu. So I will go into that. Okay. So basic definition, financing of economic unit in which lenders look initially to cash flow or other asset comprising the economic unit as collateral for the loan. Ni yang conventional lah. So key highlights ya kalau kita tengok kan. Key highlights of project finance is actually the raising of finance on a limited recourse basis. Why limited recourse? Because you are going to have recourse only to the project company and also cash flow of the project. For the purpose of developing a large capital intensive infrastructure project. So dia require a lot of capital, and then normally for infrastructure project where the borrower is a special purpose vehicle. So we have to set up a special purpose vehicle as the project company. We be dependent on the internally generated cash flow of the project. So we get payment of the financing from the internally generated cash flow of the project. Dia ada special purpose vehicle. In summary, a scheme of financing where customer will be able to pay financing amount progressively in tandem with the progress of the project, and then cash flow is the sole source of repayment, usually secured by project-related assets. Okay, meant for manufacturing, construction of other capital-intensive infrastructure project. So that's what we're talking about just now: highways, power plant, hospitals. It can involve one layer financing or multi-layered financing. It can also have capital market product like Sukuk or debt securities. Many project finance involve infrastructure with the government as a party, macam concession for highways, and then the project company will be vested with the right to carry out development by the government. May use BOT structure and the like lah, build, operate, transfer. Operate. So dia ada banyak this kind of structures possible to be used. Capital intensive means there's a lot of capital needed. So it may require syndication or consortium. So there'll be more than one financier coming together. This is where the limit lah kan. So you cannot have just one financier to give all the millions of capital. Tu pelik juga Bank Islam sampai 800 million. Patutnya the limit. They cannot have like just one financier big amount for just one project. There must be like syndication. Orang ambil sikit-sikit je. So the loss will be absorbed by many parties lah kan. So that's the thing that we need to look at. So modern project finance nowadays utilize to finance large infrastructure project, the consortium. So characteristics, first is capital intensive, highly leveraged. Basically all the cost of the project will be funded by the financing lah. Macam company yang buat asal tu they don't put much capital in. It's highly leveraged on the financing. Long-term tenure, independent entity with finite life, remember the SPV just now, and then non-recourse or limited recourse. Contoh lekas. For those from Malaysia, they would know lah, lekas highway, a highway in Malaysia. Sorry, I don't have examples of Indonesia. So this is lekas highway, which is a highway from Kajang, Seremban, so that area lah. Okay. So the project was approved actually a long time ago, 1997. But then construction actually only began in 2002. Normal lah, you get the project, you know, a lot of things you don't get it started until 2002. And even then, there was financial problem faced by the original concessionaire, which was Kajang Seremban Highway or Kasih. So further delay on the construction work. So later it was revitalized in November 2006 after a takeover by a new concessionaire, which was Lekas. So Lekas took over. They have 50% stake. Then the rest still owned by the original concessionaire, which was Kasih lah. So finally 2006 lah baru betul-betul they actually do the project, and they completed it by March 2010. Okay. So in this case, dia punya yang dapat concession, and then they will set up the SPV, the SPV yang buat project tu, which is the one tu lah, the new concessionaire tu is the SPV, the project company. Okay. And they actually issue sukuk jugalah to finance, lekas sukuk. Lekas sukuk. But then they did, the cash flow projection was not that accurate. They overestimate user of the highway. Sebab tu the suku actually defaulted. They have to do either restructuring or something, and then finally baru dapat. So, EPF tak masuk not good Yeah, they are competing with Plus. APF they are very thorough lah. Some investors come in. I don't know whether tabung haji come in or not. There was a default because they estimate a lot of user, but then suddenly not even how many percent only of the estimate. So there was some problem lah. But finally, now I think better lah in terms of the traffic, much better lah in terms of use of the highway now. I think now it's profitable already. So basically definition of Islamic project finance. There's a scheme, it's the same like basically like the normal conventional, but then the mode purpose must be Sharia compliant. That differentiate Islamic project finance. Conventional, it must be Sharia compliant in terms of the mode. So we cannot have project finance to do something with non-Sharia compliant. Let's say you want to have a project to do casino ke tak boleh lah kan. So it must be Sharia compliant project. It can use various structure, debt-based, equity-based, can use one or more underlying contract. You can have mudarabah or musyarakah or murabaha or istisna or ijara, or a combination. You can have musyarakah followed by istisna or istisna followed by ijara. So you can very much highly customized based on the nature of the project, the preference of the customer. What is important is the project must be Sharia compliant, the contract must follow Sharia compliant principles. So common arrangement, you can have bridging, syndication, revolving. I don't want to go into the details of this. I will just go to you to show to you some of the detailed transaction structure for Islamic project financing. This is simple. Let's say the customer want to kickstart the project, so they need some raw materials, some building, some equipments. So they can have like a kind of bridging lah to first kickstart. Bridging ni macam dia initial financing and then you go to the main project. So ni lah macam bridge lah. So you have to do this first. Dapat main project, you pay off yang bridging punya financing amount tu. Okay. So here they want to buy raw materials, equipment to do the construction. So they can have a simple murabahah financing. So they will tell the bank, we need this raw materials, this steel or whatever. Estimated to be let's say 100 million. So the apply for murabahah financing. So the bank say okay. They will then buy. The bank will then buy the materials from the supplier and then sell it to the customer on murabahah basis. Okay. Then you can also use tawarruk. You can use tawarruk for anything. So you can actually do commodity murabahah to get your 10 million that you need, for example, to buy the raw materials. So you buy commodity from the bank on murabahah and then you sell it to get cash. So you get your 10 million and you can use it for the purpose of the project. Istisna, this is actually a very suitable contract for project financing because this allow for financing of asset under construction. You can have parallel back-to-back istisna like we have seen before. You can also have reverse istisna ijara. So this is the example of the simple project financing with parallel istisna. So the company enter into the first istisna with the bank where the company is buying the asset under construction from the bank, and then the bank buys the asset under construction under another istisna from the contractor. Maybe the bank will appoint the company as their agent to enter the contract with the contractor. So both istisna may have similar specification, but they must be independent and stand alone. Okay, reverse istisna, like we have seen earlier, we have the bank first the customer first purchasing the asset under construction from the contractor, progressive payment, and then the company sell the asset under construction to the bank. Progress payment also matching with the one customer have with their again they must be standalone. With list the asset under ijara. Okay. Is the also another transaction done in Pakistan, Hub River project, power project. Total fund was 1.8 billion dollars, and they have a portion of that being funded via Islamic project finance. So they have 92 million dollars out of the 1.8. So just a small portion being funded. They have actually, I think hydro, because they purchase turbines for the hydro. I think it's hydro, and they use istisna contract for the purchase of the turbine to be constructed by the third party, and then they sell it on murabahah basis to the project company. So it was funded. The financier was RRG, an investment RRG, and also another investment company of Riyadh. So that's the one using apa tu istisna and also murabahah before that, and community murabahah. So now we look at the project financing using lease contract, lease-based project financing. This is also a preferred structure now for medium to long-term financing, and especially for equipment. It's easier because it is more preferred because of the ability or flexibility to do floating rate, because project finance can be long-term. So if you do murabaha, the price is fixed. Ijara, you can have a formula to review the rental rate throughout the tenure of the ijara. You can also structure a sukuk to reflect a lease-based project financing. Okay, so you look at this example, very simple illustration of lease-based project finance. So for lease-based, the company must have an asset that they can sell. So there will be a sale and lease back. So you see the company here, they sell an asset to get cash. So let's say the company sell an asset that they have. Maybe they have an existing power plant, so they sell it to the bank or the financiers, and they get cash. And then the bank will lease the power plant back to the company on a rental payment over a period of time, where this rental will constitute the bank's principal and profit. So the cash that the company gets from the sale of their asset will be used to finance the project cost. So they can use it, let's say, to construct another power plant. So just to illustrate a lease-based project finance, there was a project in Kuwait. They call it Equate Petrochemical Plant. The total funding required was $2 billion US dollar, but they only actually integrate about 200 million only for Islamic tranche. So they have an Islamic tranche to finance, to part finance the project. So altogether, there were 3 tranches. They wanted to build 3 petrochemical plants in the Shuaibah industry area in Kuwait. Each plant has its own engineering, procurement, and construction contractor. So they did a tranche for Islamic, 200 million, and the rest, 1.8 billion was actually the conventional financing. They use ijara, where the financier purchase assets owned by the project company and then lease it back to project company for a certain period of time. And it's structured as a variable rate instruments because it's ijara, they can do floating rate. And the sponsor had been Union Carbide Corporation, Petrochemical Industry Company, and the project company, the SPV, which they formed, the name was Equate Petrochemical Company. That's the project company. But the original concessionaire who actually sold the asset was Union Carbide Corporation, Petrochemical Industry Company. That's the sponsor, like they call it.
case study using list for project finance is the Nakhil project, very ambitious project in UAE, in Dubai. So if you have been in Dubai, you will notice the palm, they call it the palm, pokok kurma, the palm. Arabic term is Nakhil. So Nakhil basically means the palm. It's for the construction of the waterfront development in Dubai, which they term as Nakhil, because it's shaped in the form of a palm tree. So they do the apa nama dia? Actually dia tambak laut tu kan to build the artificial island in the form of the palm tree. What dia panggil apa? Sea in English? Tambahkan ditambak, dia tambak tanah. Laut tu dia tambak berbentuk tambak, you know, right? Indonesia in the shape of the palm tree, and they have another ambitious project in the shape of the world. So they want to build the world, but that one I don't know, not finished lah. This one pun because they started in 2006 and then suddenly 2007 there was the credit crisis kan, subprime credit crisis. So market flops, they almost default on their sukuk. But the project was built out by Abu Dhabi government. The issue lah. Masa tu at that time I think the Dubai government was asking for moratorium from the sukuk investors, and the sukuk investors were all panicked. They say, oh, how come? Because this is supposed to be a 3 years tenure only. They are expecting to get investment in and they have a quick profit within the 3 years. Suddenly the government, did moratorium. So they were exploring what happens if there's default. So the lawyers start to give all their legal opinions. So technically, if you look at Ijara, because under the, I will show to you, the sensitive sikit aku takut banyak-banyak. This is just to show before I show to you the structure. You can see ownership of Nakhil ni. This is the project company ni kan, Nakhil company. Actually, 100% owned by government of Dubai. By government owned Dubai World, owned Nakhil World, and then there were the holdings, and then the Nakhil company. Wholly owned by Dubai government, but Dubai government when asking for moratorium say no, it's a separate entity, we are not going to be responsible for that kan. So the investors said, you look at the structure kan. So Nakhil sell land because it's leased, so they sell a land, long leasehold of the land to the development as the issue of the sukuk. And then investors subscribe to the sukuk, so the sukuk represent the land parcels, and they then would lease the land to the Nakhil Holding, who's going to do the construction. There's purchase undertaking given by Nakhil that they're going to purchase the completed property from upon maturity. There's also guarantee co-obligor by Dubai World, by all the holding companies, plus also pledge of shares, etc. And when they structure this sukuk, they structure it as convertible sukuk, meaning that if the Nakhil Holding shares manage to go for public offer, and they have they call it QPO, qualifying public offer, then the shares, the sukuk will be mandatorily converted into the shares of the QPO shares. That means there will be more profit to the sukuk holders they get from the capital gain in the QPO shares, qualifying public offer shares. But of course that did not happen because of the cash flow problem. So they wanted to have moratorium, and sukuk holders thought that would be default. So the lawyer said, well, technically you have bought the land, so you can actually foreclose on the land from the legal perspective, and from Sharia perspective also they bought the land which they lease out, so they have rights over the land. But in terms of enforcement of that right, the lawyers are saying that it would be difficult to enforce because the land is located in Dubai and technically the land originally owned by the king lah, because it's like Dubai government and then Dubai the king decree kan. So there was a like kind of joke which is like the right joke also by the lawyers. They say, who's going to tell the king that we are going to foreclose his land? Okay, so that's the whole issue lah. From legal and Sharia, yeah, you own the land, you can foreclose, you can sell and whatnot, cover some of your money. But in reality, it's not as easy as that, especially in jurisdictions where you have kings and all those things and their power and whatnot, right? So not easy. But fortunately, in the 11th hour, the Abu Dhabi government bailed out and pay, and they did not default, that default. But they then went for restructuring, refinancing and restructuring, and I think quite they don't get their money in 3 years. I think they get much later lah. But it's finally settled lah with sukuk holders. I don't know whether they have the whole amount or they have some haircuts. They don't get. I don't think they get the full amount that they expect. Shell sukuk where they do restructuring, maybe there's some haircuts. They cut some of the profits out lah. At least they get the principal back, I think. Okay? So project finance lah. So it can be like ambitious projects like this. It can also be like basic infrastructure projects. Okay, this one is also interesting. Zamzam Tower project. I think those of you who have been to Mecca recently, you will notice there's the clock tower and then you have the Zamzam Tower. So this is part of the development of Waqaf land in the Holy Land in Mecca, in Medina. So they do redevelopment. So they have a lot of so siap 2010 kan? Exact dates. Dah lama juga kan? Baru siap, 2010 baru siap. Masuk dah, ya. Okay. So basically, the Waqaf Administrator, Ministry of Awqaf, actually provide or give concessionaire award to multiple parties to do the construction of the various towers kat tanah wakaf tu, on the wakaf land by the Holy Mosque, Masjidil Haram. So for Zamzam Tower, Munshaat company, Munshaat got the concession to build Zamzam Tower. It's under BOT, Build, Operate, Transfer. So they build, they operate the tower, and at the end of the tenure of the concession, they will transfer it back to the Waqaf, to the Ministry of Awqaf. So basically, Munshaat, as you know, one of the biggest construction company in and also in the GCC region is the Bin Laden Group. In the Bin Laden Group, but they were implicated. Remember the tower, the crane that fall and hurt and killed some of the pilgrims tahun bila crane tu. One of the punya group juga sebenarnya yang buat that work. So this is what they need to do lah. They want to get financing for their construction. So they do the sukuk. So I will show to you the transaction structure. It's called sukuk intifaq. So basically, Munshaat was the developer. So they got the land right. They call it leasehold, long leasehold of 20. Initially it was 24 years. They extend to 25 years lah. 25 years lease of the land to Munshaat, and then Munshaat during that lease will build, operate the tower lah. So they expect to finance that, they issue the sukuk. They issue the sukuk. So what actually they do is they do actually a lease contract to finance, but because asset under construction, so they have to do forward lease, meaning forward leasing of an asset which is yet to be constructed. Normal forward lease, you actually ask your lessee to pay in advance. It's like salam contract, you pay the price of the goods in advance. So in forward lease, you pay the lease rental in advance so that the lessor can have the money to do the construction. Okay? But because of some restrictions on non-Saudi to have like leasehold. So they have to structure differently. So they have time sharing. Then even non-Saudi can buy the timeshare. So they structure the enjoyment of the rooms, future enjoyment of the room as a timeshare. So let's say, for example, 1 week stay. I think each of the sukuk represent 1 week. And you have to choose which time of the year. So the price would be different. If I choose the time peak season, the Ramadan. So first week of Ramadan expensive, second week more expensive, third week and final week of Ramadan will be very expensive. And during Hajj season also the price will be expensive. Non-peak season, 1 week stay will be less expensive. Okay, so they will also choose the other attributes of the room that they are wanting to use during that time share. Maybe is it suite, junior suite or whatever they choose, deluxe. And then the view, whether you have haram view or Kaabah view or city view, different price. So then they will, after they have chosen, they pay lah. So they buy the sukuk, describe, they call it ijarah mausufa fizimah, lease with like salam, but for ijarah, for leasing. So they describe lah all the features of the user fraud that you're going to enjoy. Intifaq means enjoyment. So enjoy the time and the features. Dah describe and you pay for the price of that sukuk. Yeah. They can utilize if they want. If they don't use during that time slot, the property manager will list to sublease to any other pilgrims. So bila pilgrims guna their property that time slot, it will credited into the account of that sukuk holder. Yeah. That's the construction is like 2 years and then it's extended to 3 years. So the lease rental 24 years extended to 25. So that means the ijarah musafah is for 22 years. So the sukuk holders starting from like say 2010 tadi kan Ustaz Fawaz cakap. So 2010 until another 22 years lah. 2010 campur 22 jadi 2032 lah. 2032 dah expire lah dia punya sukuk punya period. So by 2032 the property manager will have to transfer lah. I mean the musyaat kena transfer the building semua ke wakaf balik lah. So all the return from the future leasing of the asset after the sukuk expire coming into the wakaf punya wakaf asset lah. Macam dengar duitnya ada ke tidak je lah. Okay. Yeah, I mean they have a lot of things. They demolish the building. Patutnya naik macam-macam lagi building. But sometimes it takes time. After you demolish, you don't have enough capital. Like musyaat, they have to pay a lot of, I don't know musyaat lah in some other parties. I heard that there was a slowdown kind of construction because they have to pay compensation for those who died because of the crane tu. So there can be other things like that. Masa COVID pun, they have loss of a lot of income juga kan during COVID. So that's why they're looking at alternative punya source of income, not only relying on haram mine for generation. Not sure. I was told by a Saudi students last time. They said those who buy this type of sukuk, they are very high net worth people. They said macam tak tahu dia nak tak mana lah kan. So basically they just want to know that they have a place and time that they prefer to stay at the venue near the mosque. If they don't stay, they get their family to stay, or their family don't stay there, they can get all the any pilgrim. They will be credited. They're not really looking at getting return lah on their more interest return in kind. Like they know they have somewhere to stay that they want. It will be the subtenants lah. subtenants, not the one. Normally, when you do forward lease, your rental would be actually cheaper lah because you pay forward kan. It covers the cost of construction. You can see here. The payment tu kan covers the cost of construction and also the rental yang developer have to pay to the wakaf. So, masa dia dapat leasehold tu dia bayar rental sikit, but the main one is to lah. So yang payment yang dapat kemudian ni, I mean the enjoyment of the rights to use tu lah yang dia plus whatever rental kan. Kalau if the people having the sukuk holders don't use, yang tu dia akan bagi pada siapa-siapa lah yang agency ke apa dia wanted to sublease lah kepada this. It's like fully negotiable as well. I mean you can sell the sukuk if you want later. Sekarang ni boleh sell anytime you can. If maturity dia 2032 lah, kalau betul-betul 2010 tu dia tak duduk. So now we 20 that is sukuk intifa. So I think istisna ijara. I'll skip this one. I just show to you the transaction that use istisna ijara for project finance. This is for also in UAE. They have this project Tabrid. Tabrid literally means like cooler, something that makes something cool. So it's actually air conditioning company. Tabrid is a company providing centralized air conditioning region in the Gulf region. So they wanted to do project finance to finance the construction of 3 additional cooling plant, not power plant but cooling plant. The plant for cooling the water, and the water will be distributed via underground pipes to the various buildings for centralized air conditioning. So this was 2000 the issue SPV at Tabrid 06 Financing Corporation. Basically the actual the Tabrid, this was 200 million US dollar. Was issued in 2006 and matured already 2011. So if you look at the transaction structure, they have actually during construction is istisna stage, and then after construction will be ijarah stage. So during the istisna stage, we have the special purpose company issuing the sukuk to the sukuk holders. So sukuk holders pay 200 million dollars, the amount of the money to be raised. So the SPV then, as agent of the sukuk holders, enters into istisna. So when investors put money as wakil and the SPV enter into istisna to purchase the cooling plant, there are 3 cooling plant A, B, and C from Tabrid. This is istisna. Tabrid provide completion cash guarantee. Ini macam security that they will do the completion. If until they complete, they will have to pay completion cash guarantee to the buyer lah, to the SPV. Then after that, we have the ijarah. So if you look at the previous slide just now, it's not stage 2. SPV buy the cooling plant from Tabrid. So who owns the cooling plant after completion? SPV lah. SPV would be basically agent of the sukuk holders. So sukuk holders own the cooling plant. So upon completion, the cooling plant will be leased out to the Tabrid, because Tabrid is the party is going to use the cooling plant to produce the to cool water for the air conditioning. So they will lease the asset. Payment will be paid to the SPV, and that would be the coupon payment to the sukuk holder. At the end, there will be a purchase basically purchase undertaking by Tabrid that they're going to buy the cooling plants from the sukuk holders upon maturity of the sukuk, and that was in 2011. Purchase undertaking actually works in two scenarios. First, if upon maturity of the lease tenure, which is in 2011. What if there is a default by Tabrid? So they have purchase undertaking as well. So if the default happens during construction, then Tabrid undertakes to purchase whatever that is completed as is where is and the proportionate. If it is during ijarah stage, then they will undertake to buy the asset, and the price would be equivalent to aggregate outstanding principal value of the sukuk. If there is the default, so there is also purchase undertaking. There will be purchase undertaking exercise at the of the sukuk on the 5th year lah kan, 2011. Base financing, you can do mudarabah or musyarakah. Skip this one. I will just show to you the we have the Aldar. This one use mudarabah for project financing, and the project actually is real estate development by the company in UAE, Aldar Property. So they did the SPV by the name of Ada Funding Limited to raise the sukuk. So the Aldar issued the sukuk. The amount was 2.53 billion US dollar. And they have expected profit and whatnot based on the sale and lease of the constructed asset. So you look at the project. So Aldar Funding, this is the SPV, issue the sukuk. Sukuk holders give the money to the SPV as their agent, and then SPV enter into mudarabah with the company, Adawiah. You can see mudarabah, 100% capital from the investors through their agent. So you have mudarabah. So Aldar Property in UAE will do the the construction, and after completion of the construction, they will sell or lease the property, and the profit from that will be distributed to the sukuk holders under the mudarabah based on the profit sharing ratio. As purchase undertaking, where Ada Property as the obligor also becomes a taker to purchase the property left in the musyarakah at the maturity of the musyarakah after 5 years, and they provide charge of over land as the security for the purchase undertaking. Another one is Wings. This is another transaction using musyarakah. Wings is actually the name of the SPV, but the obligor was Emirates Airlines. This was before they issued the one using ton to kilometer. This one they use for construction of their building, headquarters, and also engineering center. The SPV Wings actually issue sukuk to the investors. Investors subscribe. Basically, they give to Wings as their agent for Wings to enter into musyarakah with Emirates Airlines. So Wings become one of the partner on behalf of the sukuk holder, providing cash capital in the form of 550 million US dollar. Whereas Emirates Airline become a partner in the musyarakah, but they provide capital in kind in the form of land parcels valued at 100 million. So they have musyarakah there. So the Emirates Airline as the active partner will do construction. They will construct the new headquarters and the center, and the building will then be leased out to Emirates Airlines. So Emirates Airlines become lessee of the building, and the rental becomes the income to the musyarakah, and that will be distributed periodic distribution amount or coupon to the. And Emirates Airline also have purchase undertaking to buy the Musyarakah asset, meaning the headquarters and engineering center at an exercise price. So those are the example, and we can see a lot of projects actually being financed by Sukuk. Malaysia alone, we have many, globally also, many transactions use Sukuk for project financing. So any question on that? Ya, banyak. Tu ada lagi tu tak masuk, itu yang lama punya cerita, yang baru-baru banyak lagi. So if there's no question, we try to go to trade finance, the last section for my presentation this morning. Trade finance, basically, I think you know what trade finance is, right? Basically, trade finance is to facilitate trade. And if you look at developing countries like Malaysia, like Indonesia, trade is actually very important lah for our GDP, basically for our gross national income, international trade. So the trade finance actually provides or supply liquidity necessary for efficient trade activities. And the trade finance normally provided by commercial banks, by official export credit agency, multilateral development banks, insurance firms, suppliers and purchasers. So if you look at the basic framework for trade finance, so we have normally in trade, seller and buyer lah, vendor, purchaser, or in the context of international trade, we have exporter and importer. So exporter will provide the merchandise or the goods, and importer will make payment. So the payment can be done via various ways. You can do advance cash payment, you can do letter of credit, you can do documentary collection, open account and whatnot. So the trade finance is allowing for facilitation of this payments to be made. And basically, the Islamic trade finance, one, they can facilitate payment for the trade. They can also facilitate financing for working capital requirement of the clients. Okay? And normally, because for trade finance, the cycle of the business is quite short, so the financing tenure would be normally on short-term basis. So when I say short-term, meaning that it is less than 7 years. Oh, sorry, short-term, it means less than 1 year. Maybe 2 weeks to 1 year, so it's very short-term. These facilities are normally granted in connection with purchase or import or sale and export of goods and machineries, as well as acquisition and holding of stock and inventories, spares and replacement raw material, as well as semi-finished goods. So in order to be Islamic, for trade finance, one important thing is that we must make sure that the trade involve only halal or Sharia compliant assets. Like merchandise must be halal, the transaction structure must be Sharia compliant, there's no riba element, no raw element, and then procedures and sequence of the transaction must be followed accordingly to make sure that when you do buying, selling, the seller have ownership, asset available, or there's reasonable certainty of its ability to be delivered. So these things must be observed. So these are the main Islamic trade finance product. So there are some product to finance the importer or purchaser. There are some product to finance the seller or exporter. So for importer or purchaser, we have letter of credit, we have trust receipt, accepted bill, working capital financing, and inward bills for collection. For exporter, we have bill purchase, export credit refinancing, accepted bill and bank guarantee, and shipping guarantee, outward bills for collection. So these are all various alternatives to finance both importer or export. There are also other special products like supplier financing, warehouse financing, invoice financing, etc. But normally the main ones would be for financing importer or financing exporter. So the modes of financing, there are various instruments that can be chosen from. So some jurisdiction they use this more. Some jurisdiction use this type structure. Like Malaysia, we have number of instruments, but not all instrument that we use in Malaysia is acceptable globally. So the instrument that used by Adine, for example, may not be acceptable in other jurisdictions. So we have Murabaha, we have Adine, Musyarakah, Wakalah and Kafala. So the rest, I think for Murabaha, Musyarakah, Wakalah, Kafala will be okay lah. But for Adine, ada bank buat proposal, but it was not approved lah by Bank Negara because there was ada yang cuba itu tapi they do not got approval because there's some flaw in the structure. It's not issue lah. So the first one is letter of credit. This is for financing the importer lah normally, or to facilitate payment by the importer. So what is a letter of credit? Basically, letter of credit is undertaking given by the bank to the seller or exporter that the bank will pay to the seller the amount stipulated under the LC, provided that the seller comply with the terms and conditions of the LC. Okay. So this is actually in line with the LCI, basically with the UCP 600 lah, which is the international trade punya regulation for letter of credit and trade transactions. So for this purpose, you can use 3 contract, wakalah, murabaha, musyarakah. Istijrar is possible, but so far I don't see lah. Tak percaya rasanya. Tak tahu lah, tu double check lah, takut ada yang approve. Bila you ask tu, I remember ada satu tu yang they give the example of the delivery through train, delivery through bus, delivery through ship. Itu ada dia nak cuba buat istijrar. Tapi I couldn't remember exactly lah the final resolution. Kena check balik. So why actually you need a letter of credit kan? Actually, if you imagine yourself, you are the exporter. So you have merchandise being bought by the importer. Because exporter, normally they don't know each other well enough. You know, you by this exporter, there is importer. Then importer tells the exporter, I will not pay until you ship the goods. But the exporter says, I will not ship the goods until I know you are paying. Okay, so just by both of them, then you cannot have the trade happens because of the lack of. So that's why we have intermediary, the bank. Will provide that credibility to the exporter. So bank undertakes, okay, I guarantee that there will be money paid as long as you do what is necessary. You have to compare the terms and conditions. You must ship the goods, the merchandise, give me the proof of the shipping, basically the bill of lading. So I can tell my client, goods have already been shipped, so I will release the money that the client placed with me to pay for your goods. So with this intermediary by the bank giving the letter of credit, it gives comfort to the exporter and it gives comfort also to the importer. So this is why we call it, we facilitate. I mean, trade finance is to facilitate trade. Okay. So there are options here. You can see here. Letter of credit based on wakalah. This is the most simple, and this is purely to facilitate the trade transaction. The client do not need any financing. The client has money to pay, but the client needs the bank to provide the LC, so the exporter is comfortable to ship the goods. Okay. So customer use his own funds to purchase the goods. Customer deposit 100% cost of good with the bank. Bank issue letter to LC. Basically, the customer put 100% of the price with the bank. Customer have account with the bank. Then the bank tells the exporter's bank, oh, I already have the money sitting with me now. In the moment your client, the exporter, do the shipping, give all the documents, I will release the money to you. And the advising bank will tell their client, the exporter, okay, this already got LC from the importer's bank. and I will the issuing bank lah. So I will then so the exporter will then ship. So ship, give documents to their bank. The bank will forward the documents to the importer's bank. The importer bank will release the money and give the document to the importer. Importer can bring the document to retrieve the goods from the port or from the airport. The documents. Okay, so that's wakalah. LC based on murabahah is where the customer needs financing. So, so the bank will provide financing to the customer. They will use murabahah. We show to you the structure, and musyarakah also customer needs financing. But murabahah is like 100% financing for the goods. Musyarakah, customer has some money but requires bank to top up. They do the musyarakah. For istijra ni, like I said just now, I'm not sure whether ada bank yang dah buat, tapi theoretically it can be done. Yeah, basically bank issue like LC to the seller, bank makes full payment of purchase price to the seller, and then sells to the goods to the customer on istijra basis. And they will istijra means you supply the goods bit and bit, but you determine the price at maturity of the letter of credit. Tak determine awal-awal. Kalau murabahah, you determine the price awal-awal lah from the very beginning. That's the difference lah. Okay. So I will show to you the diagram. So you can see the wakalah punya LC, and then we do murabahah, and then so kalau wakalah it starts with the customer, the buyer lah, importer kat hujung. The buyer ni apply to their bank, the issuing bank, for the LC facility. So bank approve, and then tells the client put the money with me. Okay. So the client will put the money with the bank. So let's say 1 million needed to pay for the goods. So client put 1 million with the bank. So the bank say the bank then will issue the LC, guaranteeing that there will be payment provided the exporter do the necessary. I will pay you. I have the money here with me. I will pay to you once the seller do the necessary. So the negotiating bank, which is the exporter's bank, will advise the client that okay, this is the LC. Please do the necessary. So this then will ship the goods to the importer lah. Katalah klien ni exporter kat Japan. Japan kan, betul kan? Malaysia hantar ke Malaysia kan. So they ship the goods to Malaysia, and then they have the documents lah, the shipping documents, bill of lading, etc. They will present this to their bank, the advising bank. Advising bank will send the documents to the issuing bank. Issuing bank tells their client, okay, we have these documents. So the bank then will release the payment to the advising bank. Advising bank will release the payment to the exporter. Okay, so the client then can go and retrieve the goods from the port by showing the documents. Okay, so wakalah is because the bank is the wakil of the customer, agent of the customer in keeping the money and making payment here. Okay, normally for this facility, the bank will charge some fee on the client lah. Bank gets fee lah for providing this service. Both sides lah, yang issuing bank gets fee, advising bank pun also from their client. Okay. This is the explanation. Letter of credit murabahah, customer doesn't have funding to pay for the price under the purchase. So the same step, basically, customer who is the buyer apply LC to the bank, but tell the bank they don't have the money, they need the murabahah facility. So they will make a wa'ad, basically to purchase, ask the bank to purchase the asset under the LC here, the asset, and the customer make a wa'ad to purchase under murabahah from the bank after the bank buy the merchandise. Okay. So the bank then would issue the LC and appoint the customer as the agent to purchase the goods. So customer then purchase lah from exporter as agent of the bank. So the bank will issue the LC telling the advising bank that yeah, the money will be paid once your client do the necessary. So the advising bank advise the exporter, or already I have the LC from the customer's bank, the money will be paid once you do the necessary. So do the shipping, give the document. The advising bank actually give the document to the issuing bank. Issuing bank then would basically sell under murabahah to the customer the goods that has been bought by the customer on the bank's behalf from the importer, and the payment will be deferred based on the agreement with the customer, and then the document release will be given to the customer. Customer can take the goods and then pay to the bank the murabahah price on deferred basis, maybe one bullet payment majority of the tenure lah, like maybe months they will pay to the bank. That is after they have got the goods, customer managed to sell the goods, so they have got the money, so they bank for the murabahah price. Okay, are you clear? So this is financing for the purchaser, for the importer, buyer. Okay. In addition to that, you also, I don't give all the LC bagi murabahah je. Kalau musyarakah, customer provide some of the price, the bank provides the rest. So dia ada musyarakah in the purchase of the asset, and then once the asset is received, customer manage to sell, then they will, the customer will give some profits to the bank and also then redeem the bank's musyarakah, share in the musyarakah. For bank guarantee, this is where the bank acts as a guarantor. Basically, if the customer defaults in the obligation, bank will be honoring the payment to the beneficiary. Normally, this is offered for various reasons lah, because in the corporate banking and for the customer, maybe they want to do tender, and then they buy bank guarantee for tender. Maybe for project performance, for a refund of advance payment and progressive payment. If there's any, then they need to bank provide bank guarantee, pension of money guarantee, custom guarantees relating to import of goods without payment of duty, and also for honoring checks. You can have also. Okay. So this is a simple illustration. So for Islamic bank guarantee, contract of kafalah. So customer is the importer. Company or customer applies for bank guarantee, Islamic bank guarantee from our Islamic bank here. So Islamic bank say, okay, the Islamic bank issue bank guarantee in favor of the beneficiary, which is the exporter, saying basically that if there is default by the customer, I will make good, I will guarantee lah the payment. So if there's default, then the bank will have to pay to the beneficiary or exporter, and the bank will recourse to the importer to get back the money that the bank has paid to the exporter. Okay, BG. So based on kafalah, the main issue here is whether the bank can charge a fee for giving the guarantee. This is where there are differences of view among the scholars, because in the classical Islamic tradition, kafalah actually is an act of helping and charity. They don't charge any fee for making of kafalah. So that's why those who are at least they say no, you cannot charge because it's against the nature of kafalah. But like in Malaysia, we do allow, because we say that, well, in the past it may be a charitable act, but in the change of circumstances, nobody wants to provide any service for free now. So yeah, there are kind of liability and whatnot. So they said that, and there's no, what is important is there's no prohibition. We don't see any source in the Quran or that prohibits charging fee on Allah, right? Kata dia boleh bagi. The change in the uruf custom, yeah, it's just yeah. So in Malaysia we allow lah. I don't know about Indonesia. allow for fee for kafala. To allow also, yeah. Because nobody would want to give without any fee now, right? Okay. For working capital financing, we have the murabaha working capital. Basically, this is more like murabaha to the purchase orderer. There's a one. I show to you the structure. So the bank customer approach the bank to apply for murabaha working capital financing, for example, and then make a promise to buy from the bank the goods on murabaha basis. So the bank buy the goods from the exporter, and then sell it to the customer on murabaha basis, and on deferred payment terms. And murabaha. Okay. So those are some of the product to finance the purchaser or the importer. Now we look at the product to finance the export or the seller. So you can have working capital financing also for the seller, accepted bill, export credit refinancing, foreign domestic bill exchange purchase, documentary, and foreign or domestic bill of exchange purchase authority to purchase. So long name there. So we look at some examples. So this is for working capital for the exporter. So how do they give working capital to the exporter? Because the exporter is not buying, so they cannot use murabaha. But what they do is actually they sell the receivables that is owned by the exporter. So let's say this exporter, which is now the exporter becomes the customer of the bank. So exporter say, I need to actually I need to get capital for need to get financing for my working capital. I have already exported and sold assets and merchandises and goods to my customer, to my buyer. But they're going to pay on credit basis. Some of them, because we are supplying goods, right? Selling goods to this customer, they're going to pay maybe after 1 month, after weeks, 2 months. But the seller needs the money now. They need to, for their working capital, they need to buy new merchandises and whatnot, right? So they need to get financing. So under this product, the customer would sell their receivables. So let's say their receivables here, total amount is 200,000. So they will sell to the bank the debt, the receivable worth 200,000. And bank will pay cash. But because they are selling and getting the payment now earlier, normally the customer here or the seller would sell to the bank at a discounted price lah. Buy the debt normally discounted lah. No commercial sense for the bank to buy without discount. So the total debt may be 200,000, but customer sell to the bank maybe 180,000. When the customer sell the goods, actually their profit, let's say their cost is 100, they're selling at 200. So when they sell to the bank to get for their receivables, they sell at 180. So they still have 80,000. The bank buys at 180, they recover from the buyer here 200. So the bank make a profit of 2,000 to 20,000. Example lah kan. On maturity, the client will collect the debt and pay to the bank lah. Client just service lah. So sold the receivable to the bank. So but the buyer will pay to the customer because they deal with the customer. Customer will pay on the money paid by the buyer to the bank lah. Because the bank now own the receivables. Accepted bill pun lebih kurang macam tu juga. Now it's actually because of okay. I'll just explain now. Accepted bill is a bill of exchange drawn to finance domestic and foreign trade, and it's payable on a specified future date, and it's used to actually finance import and local purchase as well as export and local sales. If you do for financing the importer, you use murabaha and ba'adain, but if you do it for local sale, it's purely ba'adain. For sale, it's actually for ba'adain. So I will show to you so that it's clearer. Okay. this accepted bill for import. So basically, yeah, the bank actually for import you are financing the importer, so you are going to do murabahah with the importer. How to do the murabahah? First, bank has to buy the goods and sell to the customer on murabahah. But the bank does not buy directly. The bank appoint agent as appoint customer as agent to buy. Okay, so buy the goods, and then the bank will sell to the customer deferred payment on murabahah basis. So the deferred payment is a debt. So the first leg is murabahah, right? So once you have murabahah debt, the bank will actually issue, the accepted bill will be issued to evidence the debt. So why they do as accepted? Make the debt negotiable again, make the debt tradable. Bila dia issue as accepted bill, meaning that the bank accept that the customer is owing the bank this amount of money, and the customer accept also that I will be paying the holder of this accepted bill, which is representing the murabahah debt. Okay? So subject to certain guidelines by Bank Negara, this accepted bill can be traded on the secondary market under the principle of Pak-Dain. Okay? I hope we are still here lah. Okay. Faham No, it's a bit not familiar. You may find it a bit. And if you are financing the exporter, the exporter already supply goods to their client who's going to pay on credit. So exporter wants to get cash now, so they will sell it to the bank. Bank will pay the debt via cash. But the debt which is yet to be paid by the buyer here will be evidenced by accepted bill again. Why you want to do accepted bill? Because you want to make it tradable. So the bank can sell the accepted bill to other buyer prior to maturity. The final holder of the accepted bill will get the payment when this buyer here. Purpose is actually to allow for the exporter or seller here to get immediate cash without having to his buyer to pay. Okay. The ring, I think factoring, and then factoring is the last. Generally they use Pak-Dain. Factoring is done to provide liquidity to the customer who had completed the awarded project but yet to receive payment from the buyer or awarder. Is either the seller, just now like the previous example, the seller already delivered goods or services, but the buyer or the user of the services have yet to pay. Or you have been, the seller is a project company. The project company has completed the project, but the party who award, like say the government, they award to the project company to do a certain project completed, but government normally will pay on deferred payment, right? This month only the government will pay. But the project company needs money now, okay? So they can go for factoring. So it allows for the owner of the receivables to transfer their receivables to get immediate payment of the amount. So it involves selling of a receivable to a third party at a discounted rate. So because of that, the contract more of Pak-Dain. Although actually, if you use factoring at par value of the debt, it can be construed to be a form of walah as well. You are transferring, but because of the practice now, it's more of selling the debt with a discount. I mean, you are transferring the debt with a discount, so the more suitable contract will be Ba'adain lah, by discount. Show to you the illustration Ba'adain for factoring. So this customer has already sold goods, $400,000 worth of receivables on credit basis. So the ultimate buyer is going to pay, let's say, so the customer now sell the debt to the bank or maybe to a factoring company. So discounted at 98,000. So par value 100 but selling at 98,000. Then when the buyer later pay on the 6th month, the buyer will pay to the bank 100,000. So the bank makes a profit of 2,000. Okay. So this is basically factoring. And then just now, this one only allowed in Malaysia because you're selling the debt at a discount. Payment is in monetary form. But if you want to get, let's say, international approval into Sharia compliance, you can do also factoring via Ba'adain Bisila. So you have, for example, the customer again here. Customer has already provided goods or services, but they have the payment to be made on credit, so they wanted to sell their receivables to the bank. So they will sell the receivable worth, for example, 100,000, but the customer bank will buy the debt via by way of a commodity. So the bank will then basically already bought commodity from seller of the commodity and then use it to purchase the receivables from the customer. Cash basically bought the debt using the, then the customer tells the bank as their agent, please be our agent to sell the commodity that you pay to us here to another buyer to get the cash. Okay, so this buyer pay the cash. This is paid to the customer and basically that's what the customer gets for selling the debt. And when the original buyer of the customer pay the receivables, this will be paid to the bank who has bought that in the first place. The difference between this one and the previous one is just that instead of paying in the form of money for the receivables, for Ba'adain Bisila, you are buying the debt and paying in the form of Sila means commodity. Sale of debt, Ba'adain Bisila with using jadi consideration lah, jadi saman dia. We are 12:35 rasanya kat situ lah kot. I will just skip yang sukuk ni. Dr. Azna we discuss more lah on sukuk. So I will just skip this one. Thank you very much. Alhamdulillah, finally I managed to finish the second session also, the slides compared to yesterday. Cuma sempat habis satu portion.